coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Oh,
Is tomorrow the day that you guys are leaving?
Yes, we're done.
Are you packed?
No. But I'm organized. I have what I want. I'm not organized and I'm not packed.
Okay.
I have what I want. I'm good.
So wait, how long will you be gone? How many days?
I will be back Monday for the show.
Okay.
Tom won't be back until Wednesday.
I won't be back till I'm gone for a week.
Wow.
No, I mean I'm gonna miss. Yeah, I'm gonna miss 5 days.
Yeah. Okay.
You'll be back Wednesday.
I'll be back next Wednesday.
Okay. So yay for me.
You're gonna miss us.
No, not even a little.
The first
I
day.
love working with Mike and Nikki so much more. I can't even quantify it. Obviously, S tier is Liz and Jenny, but that A tier, Mike and Nikki, they're solid.
Uh-huh.
They're insightful. They listen. They know references from this decade. It's a win-win.
You mean they're whipped?
I can say so much right
Yeah.
now. I'm like trying to sit here and be good.
Are you going to bring us back Mexican penicillin, Mexican drugs? Can you bring me back some Mexican Ozempic?
He says you need. They found a new one now. It's like half the price of Ozempic or something like that, like $400. I just read something.
I got it for news.
Oh,
Yeah, I got it. Yeah.
He says you need a prescription for everything.
In Mexico?
I
Last time
think
I
he's
went-
got bad false news.
Thanks, Scheinbaum. No. It doesn't quite roll off the tongue as like Obama or Biden, but whatever. But it's Mexico, so I can't do anything.
I have a whole closet full of Mexican penicillin already.
You're gonna come out of the Mexican closet? Hola.
Hola, papi.
¿Dónde está, papi?
It's gonna be good. It's gonna be good.
You're gonna eat some cool food. You're hanging out with your favorite
Yeah.
Mexican billionaire. You're gonna
Yeah.
play some golf. You're gonna enlighten some young minds.
I'm a little nervous about the golf. I'm not gonna lie.
Because you have to play.
They stink, and you guys are fairly good.
I'd be nervous if I were you.
What's the temperature down there?
About 72.
Oh, that's not bad at all.
perfect weather.
Yeah.
Yeah, a little bit of rain at lunchtime while we're eating is what I'm told.
Yeah.
It's only gonna rain while we're eating.
Today's weather is set at Swedish sauna.
It looks like it's gonna rain there a little bit.
Every day.
Oh, really? Every day?
That's what I looked at.
Don't forget your poncho.
But my
That's racist.
A poncho? It's literally what it's called. It's called a poncho.
yeah, the plastic bag.
Yeah.
Put over
Because
you.
if it's gonna rain.
Yeah.
How is that racist?
You bringing rain gear with you?
Rain gear. I don't leave.
I bring rain gear when I travel, but it's like my hiking gear. Like it's just I have a rain
I bring just
shell.
a big yellow hat, like a freaking yellow hat. That's what I bring.
We're going from one taco place to the next.
So no hiking for you?
Hiking. I got to hike to the taco place.
Okay.
But
To the Uber.
we're going. We have two, according to the reviews, two of the best taco places in the world,
Okay.
and two really nice restaurants.
Wow.
Our concierge went and tasted one of them just to make sure it was good. He said, I'm not going to go to take you to a place that I haven't tried. So there's 7 tacos on the menu. He tried 4 of them.
Ooh.
Well, I'm not gonna say because I looked at some of them. I looked them up last night.
Are these exotic taco ingredients though, like escamole and tongue and stuff like that?
No,
or-
it's the pairing of the
Tongue's not
flavors
bad.
that they do like
It's
that.
the same.
I consider tongue pretty exotic. Like you
You go to La Pasadilla, they have tongue.
Okay.
I mean, most
Lingua.
Yes.
I mean, it's not crazy exotic,
Okay.
but it's authentic.
Okay.
I'm not eating like
Escamole.
iguana or something.
Yeah, but you'll eat ants.
Yeah. Ants, I think they have.
I mean, you're not
Yeah.
eating iguana. Who eats iguana?
I mean, I'm just saying. I mean, I'm not eating
I've never
iguana.
heard of anybody eating.
You draw the line. I don't know. Maybe it's a
Maybe
little
on
gamey.
Naked
I don't
and
know.
Afraid, I watched somebody eating a
Tastes like chicken. I don't know.
You're gonna be in pretty fancy restaurants. Should be okay.
I'll be all right. I'm going to say, can I get some more water for you guys? That's my fancy restaurant. That's the best I can do.
All right. Well, will you guys send me pictures so I can put them on social?
Hard thing about this golf course.
You're not listening.
Got a lot of shoots you have to hit through.
Oh, that's my specialty.
There you go.
Yeah, little tight little fairway, beautiful, no problem.
No, tee boxes.
Oh, I'm off the tee box. I'm solid. You kidding me?
So when my dad travels, he uses like a company like Shipsticks, and he ships his clubs.
Right.
What are you guys gonna do?
We're gonna make them on the course. Whittle them.
We are definitely not doing that. We're renting.
Oh, okay. Well, I'm sure they have really nice stuff at where you're going.
Yeah, they do.
Yeah, nice gear. Probably nicer than your clubs.
Wait.
How
They got any
old
that can make me like a 15 handicap? I'd appreciate.
Yeah, how old are your
right now.
clubs?
My ordering.
Oh, they're only like 5 or 6 years
Oh, that's ancient.
old. Oh,
The technology now, it's gonna blow your mind.
Oh, come on!
I
I've
don't
been hearing
know.
about this technology forever. All the technology in the world hasn't made me any better.
the way I played last time, it wouldn't have mattered if I used Tony's old clubs.
Yeah.
My ping zings from
My
25
ping
years
zings.
ago.
Wouldn't have made a damn bit of difference.
Well, real talk, don't forget the sunscreen. Like, the heat is intense down. Like, you gotta have every
sun
2
that.
hours. Yeah, you gotta
Am I
just
gonna have to
be very
carry you?
intentional and deliberate with your sunscreen
Last time-
application.
Last time I was in Mexico.
Every 2 hours.
Last time I was in Mexico City, I didn't see the sun for 3 days.
You can still get UV damage when it's cloudy. I know you
Oh,
don't
God.
believe.
You gonna go with this voodoo
Yeah.
stuff now?
It's not voodoo. It's just,
That voodoo that you do.
bitch. That's just science.
Oh, this science.
Okay, fine. Come back looking like a crusty crone. I don't care.
It's not even going to be sunny. We're fine.
I know, but you can still, like, when you're
Oh my
skiing,
God.
when you're skiing and the sun reflects, you can still get some. And
I
when
like
it's
that.
cloudy,
I like
you can still
color.
have UV damage. Okay, that's fine.
Love color.
I hope in 3, 2, 1. I hope your mom writes in. So, hi Joan. I hope your mom writes in.
Hi, Joan.
I forgot to bring. Where'd I go this year?
Where haven't you been?
Risking
You haven't been
E,
here.
you went?
Oh, yeah. Where'd I
When
go?
Italy, when you were
Yeah,
in the Mediterranean,
Sardinia.
Sardinia.
Go to
Yes.
Sardinia.
How did I know?
Didn't you call it Sardinia when you were there?
Whatever.
No, I'm just kidding.
And so it's there's not a cloud in the sky.
Yeah.
And it's hot as hell.
Yep.
Sun bearing down.
Uh-huh.
I forgot to bring suntan lotion.
Sunscreen.
Sunscreen.
Whatever. I still call them power bars. Doesn't matter. I mean,
So-
did you buy some at
Yes,
the
this is-
pharmacia?
No. We're at a hotel.
Oh, so you paid like $55 for 3
Yeah, but I'm telling you, European sunscreen is
It's
elite.
Sardinia.
More than
$75?
Yeah.
75 euros or 75 American?
They deal in euros.
Oh, okay.
75 euros for
Whoa.
a little tiny thing.
Well, European sunscreen is better than Americans. I've been over this, and you threw mine away, so thanks.
Oh, because it was more than 3 ounces?
Yeah, from a
traveler?
viewer. Yeah, someone gave it to me.
Oh,
And
that's horrible.
I know.
Well, I don't throw things away. They take them away.
Oh, well, just you could have put it in a
Same thing.
checked bag.
I'm still mad at the time I went to the time I was in South Carolina and I had this beautiful barbecue sauce and they took it away.
You still worried
I
about
don't have to tell you. So then, so in that instance, so I ended up when I went to South Carolina, I shipped a bunch of stuff home, and it was cheaper and faster, and so that way I didn't have to worry about it.
So what I did was I set up. I kind of thought that maybe they're going to get my barbecue sauce, so I had a drink,
Uh huh.
And I
A
thought-
decoy.
a decoy.
Yeah.
Figured they would get that, it would flag for that, and they'd let you go.
SMRT.
This the other one.
SMRT. Yeah.
SMRT is right.
You know what the guy said when I went through?
Didn't work.
He goes-
Nice try.
He goes,
Sucker,
think
sucker.
we never seen this before?
Right. The old switcheroo.
I see. You're always trying to beat the system. How about
Wasn't trying to
playing
beat the
along?
system. I just wanted to get
Try
my
playing
barbe-
along every once in
I
a while.
wanted to get my barbecue sauce home.
Nah. Well. What?
Foiled again.
Foiled
I know.
again. What are you gonna do?
I know.
So, but this is just FERDA. No spouses, right?
No spouses.
Wow. So yeah, FERDA.
We got a lot of I got a lot of stuff to do though. I don't free up till Friday.
You don't free up until Friday.
And then, it's true. And I mean, I'm
You're like Vegas Tuesday, Nobu Wednesday.
and then in
Your schedule's packed.
Guadalajara we have 7 in the morning till 8 at night. It's not like
Right.
playing around. I have to take 2 planes home.
From Guadalajara, you have to take another. You have to
Yeah.
take like a puddle jump or something somewhere.
Go puddle jumper. Got to fly to somewhere and then fly home from somewhere.
Interesting story. I love the way you tell stories. They're great. They're great.
Not a-
Chock full of details.
Not-
Have to fly
not a-
from somewhere to somewhere.
Not a plane changer. I don't like it.
Yeah, I know what you mean.
Yeah. There's no direct flights.
It's hard for you to walk to.
No direct flight.
What? Oh, United and you don't have status.
Another problem.
Oh, but at least this time you don't have to board with the infirmed.
No, I don't, which is good. Which is good. I could just get on the plane.
Yeah,
I'm like
yeah.
supposed to. That's correct. That's correct.
Man,
Sad.
Yeah, after those who served and those who have a hard time getting on the plane and the elderly, I'm happy to get on after them.
wait, does Aero Mexico, do they have business class?
Yeah.
We're flying United.
I know, but I thought it was Aero Mexico, but that's under the Star Alliance, so that's a United flight. But you know what
I
I'm
don't know, but
saying?
they have business class.
Oh, okay.
Yeah, they do. But last
okay.
time in business class on Aero Mexico, I got a peanut butter and jelly sandwich.
Oh no, it's scandalo.
No.
I did.
I call BS. No way.
I swear to God.
So maybe there was just something that happened with their catering
Yeah, I think it
service.
was.
Yeah, that happens sometimes. Okay, you are such a diva.
He's a little bit of a diva.
She's such a,
Yep.
just such a diva. But
You know the best lunch I've ever had on a plane? I don't want to.
was it to New Zealand?
The best lunch you had on a plane was a breakfast.
I'm not name dropping.
Was it to New Zealand?
No.
Oh,
It
okay.
was from here.
To Singapore.
No.
Oh.
From here to Iowa.
On the
Sir.
private plane, on the private
No, that
plane of the
wasn't-
Ricketts
was the
private
United-
plane.
It
Oh,
was
okay.
United. It was a United flight.
Why were you flying to Iowa?
No, you only get sandwiches on a private plane.
To go to the Cubs game. They chartered a jet.
Ah.
I literally said that.
It's not private. It's not a private jet. The 737.
Chat. Sorry. Okay, chartered flight, private. Okay,
So they brought.
Technicality got you.
I'm so.
What they did was they brought tons of
Chicago.
So they had potbelly. I mean,
Yeah.
they had everything, like every place you can
I
imagine.
understand. Yeah. Like
Chicago delicacies.
Chicago delicacies.
Your brain don't work good today.
Like they had tomatoes on there. They had bari. They had some potbelly. Yeah,
So they had 10 different types of Subway sandwiches.
pretty much.
Okay, cool. Cool.
Pretty good.
All right.
doesn't count. I would not count that.
Yeah, also based on you two's ranking of Chicago delicacies, you guys are all over the place. You don't know.
You gave us the list of mine. I at least did a good job of saving my
Yeah.
ones.
Usually when Tony flies private, he just orders like the basic lunch.
I just do a liquid lunch. That's what I do.
All right. Anyway, Bat, how was your evening? How was Vinny's first day of school?
First full day of school. Yeah, he went Thursday, Friday, half day BS kind of.
Right.
But yes, yesterday was his first day of school. They do a thing now where we used to have every class every day for 45 minutes. That was basically.
Yeah, and then they mix it up.
But
Now
sometimes
they
they go
do-
to like block scheduling.
Do a block schedule,
Yeah, I had
hour
a
and a
block
half.
schedule, 10 years ago when I graduated.
Yeah. Now they do it.
I'm 27, so,
Yeah.
but no, I had block
The first year
schedule.
they did it, right?
Yeah, no, I had block schedule.
They do an hour and a half of the classes. So he's got easy day 2 days a week, and then easy days 3 days a week, and he's got his he's got almost every class, like reading, writing, arithmetic, Spanish, all that kind of things in one day. So yesterday was his easy day. Today is his hard day. So we'll see how it goes.
I got you. It's fun. My best friend.
We had 3 hours of hockey last night.
Okay, anyway, my best friend from high school, her daughter is in high school now, and she has one of our teachers that we still had is still there, and they're like, she's still mean as hell. I was like, that lady should have retired a long time ago.
Vinny, since preschool, has gone to the same schools that my wife has gone to. Nick and Gina went basically junior high through high school, the same thing that my wife went to.
Yeah, but do they have the same teachers, though?
Few of them.
Yeah, that's just like wild to me. But obviously we need good educators, and I would be salty too if I had to work in a public school. What? So what'd you get up to last night? Nothing?
Yes, let's talk about you.
You weren't
Sorry about
packing.
us. Sorry, we didn't mean to spend 3 minutes on us.
You weren't
Please, tell us
packing.
about you.
What'd you do last night?
I
Yeah.
can tell you.
You're not going to tell me?
No.
Okay, well, then Then I'm going to keep talking about myself then.
Let's hear more about you.
Okay. So I have bought 3 of the same Taylor Swift album that I have not yet
God.
even heard. She had a drop yesterday, and I
God.
secured it. You asked, is it crazy that I bought 3 of a record that I have not yet heard?
No, but I saw a line outside of a record store, and I don't know if that's what that was for or what.
No, it could be for any number.
Oh.
Any number, because they don't have the physical copy, because the album's not out until October 3rd, Life of a Showgirl. So you wouldn't stand in line in a record store to get it, because it's not physically out yet. Neither is
Yeah,
Sabrina's
you're not
album.
worthy.
So, but next week.
Oh, I'm definitely not standing in line for something I don't even know what it is.
Do you like a line?
I do like a
A
line.
line does add legitimacy.
Yes, I like
I'll give
a
you
line.
that.
Yeah.
I'll give you that.
Yeah.
I'll give you that.
So that's
Yeah,
how you
no,
know it's good.
a line is.
I mean, although we do have a line here for lunch, really, that does not add any kind of legitimacy to
Yeah.
I will give you that.
But today is good. I know you're not the biggest fan of taco.
I'm going to have
But
tacos for the
Flacco's.
next 5 days. I don't think I'm going to have
we're
tacos.
going
for lunch.
supposedly to 2 of the best taco places in the world.
Yeah.
It's won the
And they make
Michelin
them
starred
for you, right? I don't have to
one.
assemble them.
What?
They make them for you, right? I don't have to assemble them.
They make them for you.
Okay.
Is one the Michelin starred one that had a pop up here?
Do
you know?
Think so, but I'm not 100% sure.
Oh, okay.
Is that Taco 1100?
No, I think it started. I can't remember all the names.
With a P? Pulio?
I don't know.
No. La
Okay.
Bamba?
A bamba?
Something like that.
I don't know.
Yeah.
Was it Chiquita?
Yeah. La Quinta? What? That's a hotel chain. Hey, anyway, we got a great show for you today. A lot of good stuff headed your way on this terrific Tuesday at the top of the 8 o'clock hour. Part of our options jive. What is typical IVR? You're not
Dun, dun, dun.
you're not neurotypical, but what's typical IVR?
You got to wait and see.
Okay, that's going to be 8 o'clock. And then 8:40, we got Let Me Explain with Chris Vecchio. What are you talking about with Chris today? Jackson Hole?
Yeah, I really hope not.
I'm just asking.
I mean, every year, I feel like it's been the last 10 years we said, what are you talking about? Jackson Hole, like this week.
Yeah?
No, I don't know yet.
Well, all right. Well, Chris is going to be in at 8:40 with
Yes.
something. Then 9 o'clock, we have a market measures. Why win-lose streaks don't change the math. Interesting.
Yes, why win streaks and losing streaks don't really change the math.
So there's no such thing as a slump buster?
If there was, we need it
Wish
for
there
Kyle
was.
Tucker.
What?
If there was, we need it for Kyle Tucker.
What?
If there was, we need it for Kyle Tucker.
Oh. Who's Kyle Tucker?
He's a star on the Cubs, but he's in a horrible slump. He can't hit the ball out of the infield right now.
Oh, no. That sucks.
Yeah, so the whole team is playing horrible because he's in a bad
The
slump.
whole team's playing pretty horrible.
Yeah, but he literally can't hit the ball out of the infield. He's a great hitter.
Yeah.
He's like an all-star and all this stuff. He was going to make. He was targeted to make $600 million in a free agent contract next year.
I'm sorry. How? I just had a stroke. How much?
600.
$600
He was
million.
targeted. Now he's down to about 350.
Oh man. Well, we're
Bad
gonna take a
time
look
for
at
us.
that.
Yeah.
Nobody's putting $600 million into that.
We're going to take a look at why win streaks don't change the math at 9 o'clock for market measures. And then part of the Tasty Trade Desk, Scott Sheridan's going to be in counting the top trending tickers over at Tasty Trade. That's at around 9:20. And programming change, Jenny is going to be joined by TP today.
Ooh,
Beautiful.
I like that
Beautiful.
combo.
Yeah, there you go. Little Beauty and the Beast.
I'd pay attention to that.
Very fair.
But no, always great when TP brings his insight to help out either Liz or Jenny. So that's going to be at 10
I
a.m. for
talked
their
to
show.
TP yesterday.
How is he?
How is the TP?
Had a very nice conversation. He's good.
Yeah?
Yeah.
Did one of his kids go off to college? I know one finished, but I didn't know if he had another one that was going to
They're
college.
both in school.
Oh,
I mean,
okay.
one's done, one's still
You don't know how many kids he has.
like 6.
Okay.
No, he has 2 kids, but he has like 5 dogs.
Yes, he's a lot of animals.
The only one I care about is Slimmy because I love the name.
Slimmy's a good name for a dog.
Yeah.
And he has a theme song. We have a Ask Slim theme song that we could
Sure.
play for Slimmy. So, anyway, that's our run of show for today. Programming note: tomorrow is Wednesday, and so wait, you guys will be here in the morning or no? You won't be here at all.
No, we're flying out in the morning.
Okay, gotcha. So I'll be on with Mike and Nick tomorrow, and they need your trade ideas for what's your assumption. So if you have an underlying with a directional bias, Mike and Nikki are going to do the trades tomorrow. So get your trade ideas in. Huzzah! That's going to be for tomorrow's show. But in the meantime, in the between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
By the way, we are going to do Truth or Skepticism tomorrow. We're just going to record it today.
Top story. In today's headline.
This just in.
Breaking news.
So when we've been doing this show for 15 years, when the intro music is playing, then you don't talk. But then when the music stops, then you can talk. So what you have a scheduling note.
Well, only because I'm be flying tomorrow, so we're going to do Truth or Skepticism. We're going to record it today and play it tomorrow at 1 o'clock.
Okay. Do you have a topic?
Don't get stuck in the details, Banana.
Yeah, we're fighting over topics.
All right, you figure it out. It'd be all right. You figure it out. Hey, this is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
Today is a terrific Tuesday, August the 19th. Mr. Bat, what's on deck for earnings?
On deck, Target, TJX, Lowe's, maybe.
Oh, okay.
Yep.
Did Home Depot come out this morning?
Home Depot came out. It looked unchanged. I could look.
Okay, yeah, I didn't have it because it just came out this morning.
$3.98. It's actually up $4 or $5, and then there was Palo Alto Network.
I got that one because that came out last night. But Tom, you didn't do anything in Home Depot?
I didn't do anything in Medtronics, Home Depot, and Palo Alto Networks. Looks like they're all in.
I'll get to PA.
They're all inside the expected.
Are you gonna trade Target?
I have a position on in there already.
Okay.
But I'm not sure if I'm going to do something else because it just depends because we're going to be on a plane tomorrow morning.
Sure. No, I get that. It's probably better for your trading. Anyway. Hey, first headline of the day. Bank of America suggests the era of the biggest stocks dominating the markets may be done. History would suggest there's more to go in cap-weighted dominance, but if the Fed's next move is a rate cut, and if the regime indicator is shifting to a recovery, they think the run is closer to done. Thumbs up, thumbs down. You weren't listening at all.
I was listening.
Okay.
I mean, here's the thing.
Break it down.
I would say these guys have probably said something similar to this.
Mm-hmm.
Just about every year.
15 years.
Okay.
So, although it sounds like Bank of America is making like this, this interesting or profound call, but the reality is I think they've been making the same call for 15 years.
Well, what's your personal call, and how do you play this? Like, what do you rotate?
Get replaced, or some 1, 2,
Sure.
or 3 of them.
What do you rotate into then?
I think that at some point, this era of this stock market craziness, like whatever's happening, is going to be over. Mm-hmm. But I mean, we've been looking for that since 2016.
Sure. Okay.
Sure.
So
and beyond. Even before,
to be fair to everybody and to be smart about it ourselves, we don't trade that way.
Okay.
Like we'd have been out of business if we tried that. So we just play along with the game. I mean, would it surprise me? Not at all. But here's the hard thing. When it says the era of the biggest stocks dominating the markets may be done, I remember giving a speech in 2017 on exactly this topic. Mm-hmm. And now it's 8 years later, and we're still having this exact.
And the companies are worth $4 trillion.
And they're not going away. They just
and they're
replaced by.
I remember when Apple got to $1 trillion.
Yeah.
And I said, this is ridiculous. When we talked about the top 7 or 8 companies having a greater market cap than the GDP of any country but the U.S. I give a whole speech on this, and then what happens 8 years later is that they're instead of they're $1 trillion companies, now they're multiple $4 trillion companies.
Yeah.
So
but small's even gotten big. Like even small.
You got it. Yeah, we talked about this yesterday. Somebody sent me an email. RBLX, which is whatever, is bigger than if you saw
bigger than U.S. Steel.
Well, it is bigger than U.S. Steel.
Sure.
But it's bigger than U.S. Steel, but it's also bigger.
$81 billion. Right.
It's bigger than Delta Airlines. It's bigger than United Airlines.
Yeah, I was making.
I'm just saying it's bigger than so many companies. Like
OpenAI which is not even public, is worth $500 billion.
Yeah, right.
Well, that's what they say.
Well, yeah,
if somebody's going to put in money there, I hope it's more than like $1. But I wouldn't buy it there.
Well, here's something interesting, or maybe not. I'll be careful. Passive investment company Vanguard plans to launch their first actively managed U.S. ETF this year. What are your thoughts? They have a handful of active bond ETFs, but this would be their first active stock ETF.
Okay. When they say
It's a new frontier of ETFs. Go ahead.
yeah, well, your boy Jack Bogle's probably rolling over in his grave right now because he said, "Don't touch anything." That was the concept behind Vanguard was never touch anything.
Sure. Well, now they want to touch it. They want to touch it real good.
Touch it real good.
Active stock picking ETF is
Yes.
not what we call active.
Okay.
But I mean, I could care less with Vanguard.
Well, I just thought that you might have an opinion on this. That's all. Like I didn't think you'd be indifferent to it. I know you don't directly care what Vanguard does.
Indifferent to what Vanguard does.
Okay, I'm gonna keep.
If I ever invest in a Vanguard, if I ever make an investment into a Vanguard fund between now and when I die, just shoot me.
Okay. Hey, Palo Alto Networks reports earnings beat. They topped Wall Street estimates and issued a better-than-expected guidance for the first quarter and full year. The results came as the company announced plans to buy an Israeli identity security provider, CyberArk, for $25 billion. Stock looks to be up around $10.70 or so.
It's up $10. Inside the expected.
So if I say 1070 or so.
But you're not looking at the screen. I'm looking at the screen.
I'm looking at, how do you know I'm not looking at, what is this?
You have a live quote on there?
Yes.
Oh, okay, then fine.
Even if she's lying, I just like the fact that she got you there.
She called me out of it.
Do you think this is just like a mirror and I'm just staring at myself? No, bitch, I got quotes up.
That's what he's got on his screens.
Yeah, I know. What'd you do in PA and W? Let's talk about that.
Nothing.
Okay.
I had a position on it. I took it off yesterday, and because I didn't like the expected move. It's inside the expected move, but I didn't like it.
Okay.
Didn't like it.
Well, sir, I don't like it.
I
Hey,
don't like it.
Intel is the diamond of this season, to borrow language from Bridgerton. No Bridgerton stands? No? Okay.
Nope.
Well, Intel's getting a $2 billion investment from SoftBank. They're going to buy stock equal to roughly 2% of Intel's outstanding shares. Intel shares have lost 60% of their value last year. This also comes on the heels of the announcement that the Trump administration wants to acquire a 10% stake in the beleaguered chip maker. Now SoftBank wants a 2% stake. What's Intel?
I want a 1%.
Yeah.
Intel was up like $1 pre-market.
That is correct. It still is maybe $1.50 if you're not looking at a screen over there. Maybe just a mirror of yourself. Trading 25, close
I only have mirrors.
Yeah.
3.5.
Yeah. What are your thoughts on Intel being so hot right now?
I mean, it's in play.
As foretold, he called it.
We've been long
give him
Intel all year. We've
Yes.
traded Intel for the long side the entire year. We're out of it now, but it's been a good stock for us.
The investment is a vote of confidence in Intel, which has really struggled because they don't have like a dominant AI chip and they don't have a significant like customer base like NVIDIA and AMD do, but they're trying. So OpenAI Sam Altman sees an AI bubble forming as industry spending surges. He reportedly said that he believes AI could be in a bubble, comparing market conditions to those of the dot-com boom of the 1990s. He says, "Are we in a phase where investors as a whole are overexcited about AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes."
What does he remind you of?
A little zook.
No.
Oh, okay.
Somebody. I can't.
Oh, you mean that just like that he looks like?
Yeah.
He looks like your son.
I was going to say the same thing, but I know
looks
he
like
hates him, so I wasn't going to
looks
say
like
it. I like
Cole.
him
I
so
thought
much.
you meant like
No.
like
He's got a
mannerisms.
little bit of coal in him.
He
I'm
looks
not
like
gonna
your
lie.
son. Can we get a side by
Nose
side
on
up?
down.
No.
Can we get a side by side up of your
Yeah, nose on down.
I was thinking one of
the eyes too?
one of his friends or something.
I agree.
Oh, thank you, Beth. Beth coming in
I
with,
wasn't going to say it because I like him so
with the agreement there over the top rope. He looks like your son.
Uh-oh.
This could be part of your tribe. But are we in a bubble? Do you see his? I mean, he's in it, so.
Yeah, sure. I think we're in a bubble. I think we're in an AI. If it's not a bubble, it's froth.
Okay.
We're in AI froth.
Okay.
Just like we were talking about, like a cannabis froth thing
Yeah.
back
Sure.
in the day. It didn't have
The only
anything to do
difference
with
is
the market. It's
cannabis
gonna have a lot more
had
effective.
no upside. AI has interesting upside.
Yeah.
In other news, a company called TerraWolf gained 4% yesterday because
TerraWolf.
Google boosted their stake in the data center operator, BAT, the ticker WULF. The deal brings Google's total backstop to about $3.2 billion and allows the tech giant to buy 32.5 million shares. TerraWolf, like I said, is a data center operator.
I mean, hard to. Back in the middle of August 13th or so, about 7 days ago, it was trading $5 and change. It got up to almost 11. It's flirting with being under 9 right now, down about 20 cents at 9.8.
Here's the deal.
Wolf.
I don't like the logo, but I
Okay.
do love the spelling of wolf.
Okay. It's doing something for you. Get your juices going.
Wolf.
Well, I almost failed 3rd grade for spelling it exactly that way.
Oh, no. You were just ahead of your time.
LF. I like that.
Wolf.
So I don't know.
Wolf.
You were my teacher.
That's a good ticker symbol. Wolf. WULF is the ticker.
Is that their ticker?
Yeah.
That's great.
Okay.
I'm a huge fan of that.
What about Google?
I don't care about it.
Okay. There, and we're right back where we started.
That was easy. See how fast
I
you
only
got
care
there?
about TerraWolf.
I know. I was right back.
Google's
where I started.
unchanged.
Okay.
Never heard of TerraWolf before.
I had not either, so.
I've heard of terrible.
I like how I'm just blowing your mind. I should just leave right now because you're going to
Terranova.
hate this next story.
I remember a company called Terranova that was in our business. What's up?
Wasn't there a show called like Airwolf or whatever from the 80s or whatever?
There's Air something.
Something, I don't know.
Air Dog or
I don't remember. Air Dog.
Air Bud.
Data Dog.
Air Bud, that's it.
Yeah.
Air Bud. Oh, Air Bud.
Yeah, Air Bud.
No, I don't.
You are right. Whoever said it, Airwolf.
That was me, yeah.
Yeah, you are right. Airwolf was a show.
I am a historian of pop culture.
Jan Michael Vincent,
Ooh, there's a throwback.
the head there on that show.
Yeah.
Airwolf.
Good job out
Airwolf.
of you, I think.
Yeah. Hey, ARM has hired an Amazon AI executive to boost plans to build their own chips. The guy was basically the director of intelligence for Amazon. ARM wants to develop its own complete chips, so they poached him away. Little Scoopy. What are you doing in ARM? Nothing. Amazon? Nothing. All right. Case closed. Moving on.
Basically unchanged.
Tesla says a Model YL is coming soon. The electric car company said on Chinese social media the YL is a 6-seat version of the best-selling Model Y. It will be sold for a starting price of $49,000 US. That's pretty good, but July sales in China fell almost 9% for the automaker, so they desperately, BYD is the leader in China, and they just straight dominate the EV market there. But Tesla trying to turn things around. What are you doing in Tesla?
We don't have a position. The IB rank's been super low, so I mean,
Ivy rank of under 5. You're right. 335 and going sideways.
it bothers me that we have no position in Tesla, no position in Nvidia, but there's no juice.
Right, yeah, but that's the smart decision. So
SMRT.
you are gonna love this because the internet was delighted by this. They're like, who decided that this was the best use of your resources? So MSNBC is changing its name. This is the new logo. It's just going to be MS Now, which sounds like it's advocating for a disease, but it stands for My Source News Opinion World. The logo is terrible. The slogan is terrible. The acronym is terrible. Everything is terrible.
Okay.
I agree with you.
Here's my thing. The logo, horrible. Hate it.
Yeah.
The name, I actually like.
MS Now?
Well, MSNBC never made any sense to me. I don't understand that. Like, I didn't
I
like
think
it.
it was for Microsoft, NBC.
I don't like it. I don't like
Okay.
MSNBC. I don't like CNBC. Like those names, I don't like.
Sure.
MS Now is not.
You don't
bad.
like the iconic names that have been around.
mean, if you're NBC
since black and white TV.
NBC, fine with it, but I don't like CNBC or.
But this doesn't seem like it's advocating for like multiple sclerosis, like MS now. Like we need awareness now. We need research
I don't
funding
care.
now.
I
Like
don't
it just
mind
seems like
I
a
don't mind
bumper
it.
sticker that you would see. You're like, yay, support MS research, which I
don't like it.
support.
I don't mind
But like,
I don't mind
I just I think it's terrible.
better than MSNBC.
But my source, news, opinion.
I mean,
world,
I'm not. I don't care about that.
I agree.
I mean, I wouldn't
Yes.
have put that logo, and I wouldn't have put necessarily all the explanation below it.
You have to explain something.
You gotta explain it.
I don't really think you have to.
MS now.
I'm a marketing person.
You hate marketing.
I hate traditional marketing.
All right.
Definitely.
Hey, Bat mentioned this earlier, but we don't need your Mexican connection because Novo Nordisk is now going to start offering Ozempic at $4.99 a month for eligible U.S. cash-paying customers. Normally, a prescription of this yawn could run you 12 to 15 hundo, but now Novo says in order to, cut off compounding pharmacy and other people who may be selling less than pure drugs, that they're going to offer cash-paying patients with type 2 diabetes, that's the caveat there, $4.99 a month. They are also going to do in partnership with GoodRx and other platform. Shares of the Danish drug maker were up 5.3%. GoodRx, GDRX, up 34% on the news yesterday. So
I've never traded it.
GDRX?
Never.
Yes, you
Either.
have.
GDRX?
Yes.
Nope.
Yeah, that isn't that what's
It's GoodRx.
Shark Tank? What's
Oh, Mark Cuban, no, that he has Cost Plus drugs. He has a separate entity.
gotcha.
It's not publicly traded.
$5 on the nose, down about 12 cents. It was $3.50 yesterday, so good
All
on
right.
them.
Does it have options?
It's going to have options. If you look at the September options, again, $5 stock.
Sure, yeah. Just buy it. Just buy it. Get along it.
Just buy it. Just buy it.
What about Lilly, LLY? Are you doing anything in Lilly?
We covered yesterday.
Okay.
IB rank got down to, I want to say, 10 or 11.
It is 11. You're right.
Yep, we covered yesterday afternoon. So
About $8, $9.
yeah, we've had a position on there all along, but we took it off yesterday just because at 11, it really moves around too much for an 11 IVR.
Sure. Hey, I have breaking news. So this slide is outdated, but I have the updated information. Let's go to Air Canada news. It looks like Air Canada is going to resume service as Flight Attendants Union has ended the strike. Unionized flight attendants reached an agreement with the country's largest carrier early this morning, sending the first strike by its cabin crew in 40 years that upended travel plans for hundreds of thousands of passengers. The strike lasted nearly 4 days. Flight attendants were called back to work, but they said, hell no. First of all, look at this sign. A+ slogan, unfair Canada. Eat it up. Love it. Come on, that's good.
It's good.
Unfair Canada.
Oh, no, that's
love
good.
it.
That's good.
That's pretty good.
I agree with you. That's good.
But it looks like they were able to turn things around. So obviously there's going to be some backlogs and delays as it ripple through the system, but glad things are working out better for our neighbors to the north. Anything going on in American airlines, American airline companies?
Oh, they've all been pretty strong
So-
as of late.
Yeah, unchanged as I go through them here. I don't really see anything. But listen, the market's unchanged. So
Sure.
Not gonna be too many movers.
Hey, Spotify, music streamer Spotify earned a pair of price target hikes from Wall Street analysts yesterday, but the stock was little moved. I think it's pretty much because of my girl. I just wanted to put up this photo. Spotify. You can pre-save Life of a Showgirl on Spotify and Apple Music right now. Album comes out October 3rd. I did it.
Spot down about 50 cents, but it's had a nice run over the last 2 weeks from around $630 to about $730. So
Yeah.
down tiny means nothing.
It did get upgraded, though, by 2 companies yesterday, so
It's usually a top.
do with that what you will. Frankie sent me this story this morning, but I already had it. But thank you, Frankie. But because of you. Soho House is going private in a $2.7 billion
They talked
deal.
about this?
The beleaguered luxury boutique operator is going private in a deal led by New York-based MCR Hotels. It caps a turbulent market run and financial struggles that erased nearly half of the high-end member club's operating value since 2021. Ashton Kutcher set to join the company's board.
I went there for the first time in a year and a half the other day.
Shareholders will get $9 per share, a 17.8% premium to the last closing price. Is that you?
I have not traded it since last time I traded it was around $5, and I think that was around 2020-ish.
Okay.
I don't actually remember. I don't even know.
I mean, it was $5.
Well, that would be amazing since the stock didn't debut till 2021, but go off, Queen.
Okay, so 20. I don't remember. I said, well, I haven't traded it.
You were in at a pre-money valuation, like a...
No. I bought it because I really, when you go into the Soho House, they're beautiful locations. They're beautiful. And so...
Oh! My sauna is being delivered today. I meant to tell you, 5:30. How
Congratulations.
Should have talked about that earlier. You're allowed over.
What's going to happen to it, though? Because you won't have time because you're leaving tomorrow, though.
No.
So it's going to just kind of
I
sit
have
there.
to assemble it. I have to.
Yeah.
Have Vinny put it together.
Excuse me?
Have Vinny put it together.
He's not bad. He works on his electric bike. He's not bad, but I would need to do it myself. It's take pride, Sal. It's the thing you're not used to.
By the way, I give these guys credit for going private. That's a ballsy move.
Yeah, well, it looks like they didn't really have a choice, so... we'll
You can
see.
do different things.
Good job, Soho
private
House.
than being public.
Hey, here's something that's
Get the whip
interesting.
ricotta.
What, get the whip?
Don't
ricotta?
sleep on the whip ricotta.
You are so freaking bougie. You know what? Seriously.
Hey, you were asking me for ideas for things that you could maybe talk about.
Don't sleep on the red pepper hummus.
Are you okay?
Yeah.
You were asking me for ideas earlier. Here's a novel idea for you, and I'd like to get your thoughts on this. The California state legislature has passed a bill that would give people, homeowners, interest on insurance payouts that are sitting in escrow funds. So the bill would apply to both existing insurance payouts that are still being held in escrow accounts and to any new escrow accounts. So obviously, California is struck by wildfires, your whole house burns down, you're given, hundreds of thousands of dollars by your insurance company, it sits in an escrow account, it's gaining interest. Normally, no one has ever had access to that interest, but now California made it so. What are your thoughts?
Sure. I mean,
Okay, well, I tried.
it's their money. I mean,
Yeah.
it's the people's money. They're
Sure,
just-
yeah.
Yeah, sure.
Yeah, give me my money. Give me my interest. There you go.
I mean, I'm always going to side with the consumer over the insurance company.
Right? Here's something interesting. Campbell's, CPB, Campbell's Soup. Campbell's Chunky Soup, to be specific, and Pabst Blue Ribbon are collaborating on 2 beer-infused soup flavors. It is almost soup season, so there's going to be a beer cheese with potatoes and chorizo soup, packed with savory chorizo sausage, hearty potatoes, and a creamy cheese infused with Pabst Blue Ribbon beer flavor, and also a beef, bacon, and beer chili with beans.
I have heard before that I've heard of people that put a beer in their chili.
Yeah. I put beer in my
I've never done
spaghetti
that.
sauce. I put beer in my chili.
Oh, you do?
Yeah.
I've never
Because
heard-
I'm a good cook and I use seasoning.
I didn't know anybody ever put beer in the chili, and it sounds actually pretty good.
Okay, well, to be fair, you are a mainly White Claw drinker, so that would not be great. So it's the ultimate flavor collaboration. The soup flavors will be available exclusively at Walmart, both in stores and online, starting September 3rd. Walmart set to report earnings Thursday. Hey, other food news, Skittles is launching new Gummies Fuego, a chewy, spicy candy that will tickle your taste buds. On Monday, the brand announced the Skittles Gummies Fuego, a gummy candy coated in chili flavoring. It's now available on the Skittles TikTok shop. Did not know that was a thing. And will be available nationwide retailers starting in 2026. So if you want it early, you got to cop it on the TikTok shock shop.
And
what do you think about Fuego gummies?
I'm passing.
Why? You love things that are irrationally hot.
I'm not a huge Skittles fan.
Oh, I love Skittles.
And
Taste the rainbow.
I'm passing.
All right.
Yeah, I'll pass.
The U.S. Open prize money this year is the most ever given out at a tennis tournament, with the purse totaling $90 million.
$90 million.
The men and women's singles winners will each earn $5 million.
That's
Snaps for
ridiculous.
equality. What?
Nothing.
I hope you get Montezuma's revenge. The men and women singles winners will each earn $5 million. The purse represents a 20% increase from the $75 million.
What's her name again?
Arina Sabalenka.
Oh, that's right, Sabalenka. Yeah,
Okay.
she's the number one player in the world.
I like how I was just able to pull that out. But I'm not really looking at a screen, so it's okay.
I like her.
Okay. Pipe down. Don't make it creepy.
I'm not.
Don't make it
Yeah,
creepy,
I like
old man.
He already made it creepy.
Don't make
She's a
it
good
creepy.
player. She's a good player, but I've seen her in interviews. She's really good.
Don't make it creepy. Hey, this is great. Your NFL team will soon have its own croc. But these 14 squads are up first with the football season only a mere few weeks away. Crocs and the NFL are teaming up to give fans a mix of comfortable footwear and fandom. The partnership was announced yesterday, and they also have NFL-inspired footwear and gibbets. So the Vikings have like the horns, the Eagles fly. Bills also have the horns
I
for
need
the
these.
Bison Bears. So the first teams available: Kansas City Chiefs, Chiefs, Eagles, Lions, 49ers, Steelers, Bears, Bills, Raiders, Cowboys, how about them Cowboys, Dolphins, Vikings, Bengals, Texans, and Broncos.
Oh, that's the way Buffalo played.
I need those.
Oh, you don't want
I
those.
need the Bears.
You're going to get Bears Crocs?
I need it.
Oh, look at you. We could be matching twins.
Okay, you're going to put a little gibbet on there with a bear?
Yeah.
Yeah.
I have a cherry on it now.
I get the cherry. I mean, that's company.
Well, I mean, I'm going to.
But look, and they have like little football gibbets and the logo. Like,
go to the
I love
Bears
everything
game.
about this.
I like it too.
You can go to the Crocs website to try to order
I'm
while
going to try to be
supplies
mature
last.
here. I'm not going to say anything.
So, that's great. Hey, we got to meet a lot of people at our live show Friday or in our office for our open house, and a surprisingly large number of our viewers are engineers. We just have a lot of viewers who are engineers, and
like the math
they're
behind it.
they're drawn to trading and stuff like that. So I saw this video on my For You page yesterday, and it's just merely titled "How an Engineer Designs a Kitchen." Watch this. So he says it takes 0 steps to unload the dishwasher. Weird way to propose, but I accept. Also, I love a man unloading a dishwasher.
Yeah, but he doesn't have the sink underneath the mirror, underneath the window or anything like that. He must have it on the island.
Look, but he
Where's
doesn't
the
have.
sink?
He doesn't move to unload
Well,
the
how do you
dishwasher.
wash the dishes to put them into the dishwasher?
He didn't say load it. He said unload it. You take it up with him. His name's Philip or Flop.
I'm not that impressed.
I'm not impressed either.
Yeah.
Okay.
Yeah.
That's because the twos of you sit on your arses all day and you don't participate equally in the labor of your households.
No, I actually watched my wife clean last night. It was amazing. It was.
What's coming up next, deadbeat?
Wait, a quick 90-second break and come back. The maid didn't show up. We'll be back in 90 seconds with Tasty Live. We got more Tasty Live after this with Confirm and Send. We'll be back in 90 seconds. Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not.
Cool.
So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, please, let's go to what the market is doing. Sadnoff, kind of an inside day here, even or inside night, I should say. Down $6, tight range of about 22 handles. NASDAQ down 55, Russell down 3. Dow bucking. Remember yesterday the Russell and Dow were a little bit stronger than the S&Ps and the NASDAQ. Dow up 80. Volatility in by 8 cents to 17.85. Bonds up 11, Sadnoff, but still flirting with 114. 114.04. 2 ticks off their highs after trading down to 113.21. Bitcoin down almost 1,000 to 115.6. You can see there it traded over 117 last night. Oil caught a little bit of a bid yesterday. It's reversing that today, down 78 cents. IV rank of 29 in there. Gold basically unchanged, up $1.70. Going sideways to the lower end of its slight small range that it's had. Silver up 9 cents, also going sideways. Net gas down 5.5 cents near its lows. Palo Alto Network was the big mover to the upside, inside the expected move, up around $11. Home Depot was up around $5.
10.
Oh, sorry?
10 now.
What did I say in Palo Alto Network?
No. Home Depot. It's
Home
up like
Depot is
10.
now trading $403. Now it's up 404. Now it's up $10. It was up about $5 last time I quoted it. Medtronic's MDT trading 89. Well, I call it 90, down about $3. That's all I got. Today we got TGT, TJX, and Lowe's. You probably won't do anything.
Hey Beth, the next break. I have no sound.
No sound. You're ding. You have low D.
Low D.
Low D. I think I can go on the internet and fix that for you. Let me see if I can.
We got you, Tom.
I doubt it. But yeah, we did sell some bonds that we bought yesterday. Had to hold them overnight, but they worked. So, all right, let's do this. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. And this will be the last day this week for me and the Bat. We're going to be in Mexico City. We have a bunch of different shows to do at a risk convention and then going a couple extra days. So going to Guadalajara to do a couple talks at a big business school there, which I like. We've been backing a bunch of traders in Guadalajara now for about 3 and 4 years, and they've done really well. And it's amazing. So can't wait. All right, let's do this. Let's see what we got.
I'm ready.
So a little confirm and send this morning. August 19th. Unbelievable. Do you know that we've lost
48 hours before Scott's birthday. That's all I know.
No. In the month of August, I heard the statistic. You lose almost 90 minutes of daylight.
I can believe that. I mean, I know that we had some hell of a storms last night.
Last night was ugly.
But it was dark early, and it's been getting dark earlier. Yep.
Do you personally foresee a situation in the near future where, even though inflation may not be decreasing, bonds will still rally in price and stocks could fall? This is a very hypothetical question.
Yeah. Listen, I'm the world's worst bond trader, and commodity trader. So take what I say with a grain of salt. I don't look at anything like this. I just look at current prices. I mean, bonds do seem to have a floor to them. They do seem to have a ceiling to them, and it's always further than you think. I never thought bonds would get into the 170 handle when I shorted them in the 150 handle, only to be completely wrong. But they fell all the way down to the teens, where they are now. So. For me, I don't look at the macro, micro view of bonds. So just supply and demand for me.
There was a time many years ago when you could make a pretty valid argument about certain correlations and inverse correlations. Like you'd have a hard time arguing that if inflation was decreasing, that bonds wouldn't be going lower, and vice versa, the other way around, or stocks would go up if bonds would rally in price.
Yeah. No, I mean, they always had an inverse relationship.
Right, that's an inverse relationship.
Okay, forever, yeah.
Yeah, that's with interest rates. So, but this is basically saying interest rates are going to go lower and yet stocks would still fall. And the answer here is nowadays, yeah, you could do that. I mean, listen, I would rule nothing out. I mean, the market went to all-time new highs with bonds basically crashing. So why couldn't it do the opposite? Of course it could.
Yeah.
And I don't think inflation is going to play a big enough role either way. So of course. Let's go next slide. I've been watching your shows for about a year and actively trading on the Tasty platform since December. You often speak about managing trades 21 days prior to expiration. But I was curious what that means. As an example, if you set up a triangle with the put side at 70 and the call side at 90, those are the strikes, and you expect the underlying to remain in between those strikes for 45 days, and at 21 days, that same stock is trading at 81, right between the strikes, how would you manage the position?
Exactly like what I said, around 21 days, which would be about 24 days after you placed this trade, I'd be looking to close it. All things being equal, if that amount of time goes by, even if volatility what it was to expand, it's going to be a profitable trade. I'd probably be taking my profits and moving to the next month. Now remember, we do the monthly options. So September has 31 days right now. I'd be looking at any positions I had put on with somewhere between 55 and 40-ish days. I'd be looking to take them off in the next 11 days and moving them to October.
Yeah, so I mean, this is a great example of a stock that does exactly what you want it to do. And, 24 days after you put the position on, it is dead smack in the middle.
It's exactly what you want.
Yeah, between your put side and your call side. So a couple things here. What we say by managing trades 21 days means, A, you can close that trade and take your profits because that's profit sitting. Or B, because this trade doesn't need adjustments, you can take both strikes, assuming the IVR is still high, and roll it to the next month and collect a pretty big credit.
Yeah.
And leave the same position or widen the strikes.
Assumption hasn't changed. Volatility is the same. IV rank is good.
So there's no reason to adjust this trade. This is just, you would just roll to the next month and either widen the strikes out a little bit more and take in some credit, or leave it as is, taking a bigger credit and see what happens. It's up to you. Either take your profits or roll it forward. Let's go next slide. If I wanted to start a core position in my IRA in the SPY, but I wanted to limit my downside risk in the event of a market downturn, which would be the best strategy? Cash secured put, covered call skewed strangle?
Covered call, comma, skewed strangle, comma.
Oh, covered call, skewed strangle, put ratio spread at the money, or a calendar spread or something else?
Core position in your IRA is how I'm going to answer this. First of all, they're all high probability trades, so they all work. Limiting your downside risk before we get to the strategies, I mean, for me, that comes with size. So you got to keep your size in check. 1 to 3%, 1 to 5% is a wide of your buying power. So that's how you limit your downside risk. Then you have to think about how much delta you're going to have in each one of these trades. I mean, the calendar spread is going to have the least amount of delta. That's the least amount of risk. I don't consider that part of a core position. When you're leaning here, each one of these strategies, even a skewed strangle, is going to have, I'm assuming, long delta in the trade. So it depends on how much delta you want on the trade. I don't cash secured put, because it's your IRA, I would probably add a put spread in there, a wide put spread. That might be something you can do. I think covered call is probably the most easiest one for you to look at, depending on what the IV rank is. In SPY, it's 12, so it's relatively low. So it depends on how much delta you want in the trade. They're all work.
Yeah. I mean,
I think a naked put or put spread, because it's an IRA, it uses a lot of buying power. I think that'll be
the key to this question is you said limit your downside risk. You didn't say.
It's going to take 60,000 to sell a put in an IRA.
Right. I'm just saying, you said limit your downside risk. You didn't say eliminate your downside risk.
That's true.
So any of these...
naked put has limited downside risk.
No, I understand.
It's not going to go to zero.
I understand all this. But so any of these strategies are okay. I would say the put ratio spread at the money is just a high pop trade. It's not really what you want as your core position. I would say calendar spread or some other kind of spread, probably not what you want as your core position. A skewed strangle, probably not what you want as your core position. So if you're talking core position, you're either talking cash secured put, a covered call, which are basically the exact same thing, and
if you use it the same strike,
or a wide short put spread. Mm-hmm. Those would be my three.
Yep.
And that's just a short, put credit spread. So cash secured put, covered call, or a wide spread. Let's go to the next slide. I'm not sure what I'm missing to see softness in both the market and the /VX. How and why would both be down? I think yesterday was a day like that.
Even the S&Ps were down a handful, somewhere between 8 and 0, and volatility was down, a handful.
Well, it's the same way this morning.
Yes, even the S&P's down 5 and volatility down 15 cents. Listen, I don't think a 0.08% move in the E-mini S&Ps at all-time highs is softness.
Okay, but it is not up.
About under 20% of the time, closer to 15% of the time, somewhere between 15 and 18% of the time, you're going to see this phenomenon. That's it. About a standard deviation.
Yeah, it happens just like Tony said, about 1 every 5 or 1 every 6 days.
Right. And now, if we're at all-time highs and we're moving higher, and then you see volatility creeping up, maybe you could say you're ringing a little bit of a bell here. But at all-time highs, if you see SPUs down and volatility down, you need a day or two of some movement outside the expected move, which is now $18, Sosnoff, on the E-mini S&Ps.
Scary.
Crazy time.
$18. We haven't had $18 pre-market move in forever. You're not missing anything. It's just about 15 to 20% of the time, like Tony said, or 1 out of every 5 or 6 days, you see this. And especially with volatility in a lull state, especially with volatility on its butt, doesn't surprise me. Market's high.
And volatility futures expired today too, so maybe that's has something to do with it, because we've rolled to the future now.
Okay.
It's almost 8.
Could be a lot of different things, but don't overthink it. It happens.
Yep.
Let's go to the next slide. Quick question. I was just looking at what volatility was doing today and noticed the VIX is down 30 cents. However, the VIX is actually up 18 cents. I know they are structured a bit differently, but shouldn't they both them be moving in the same direction? He's talking about, now this is a little different than the last one.
Sure.
This is talking about the /VX and the VIX.
Right. Now, VIX that you're seeing priced there, first of all, there's no stock to VIX. So it can print at any price, really is almost irrelevant. But the VIX might be pricing itself to a different future than the /VX that you're looking at. And if you look at the options, it will tell you and will correspond to those /VX options, regardless of what VIX last price was.
Yeah, I mean, the way we explain this is /VX is the actual spot market. And even though it's a future, it's where the VIX is actually trading now. So we call it the cash market or the spot market. And /VX, even though it's a future, is the spot marketplace. VIX is actually the implied marketplace. It is the future marketplace. It's where it's going to close at expiration. And so they don't have to match up at all.
Can I give you a quick example, Sosnoff?
Sure.
Sure. Let's do it real quickly for everybody. It's coming up on the screen. /VX is trading just under $18, $17.80. Let's look at the VIX September options for a moment. Look at these 14 puts. Look at these calls. Remember, you have put call parity. So the put and the call are going to be trading at around the same price that's at the money. So even though VIX is trading around 15, the 15 call has $3 worth of premium. The 15 put is basically worthless. The 18 call and 18 put are exactly the same price, similar price. That's going to mean that the product is trading closer to $18 than it is $15. Did it quick, but hopefully it matches up.
There you go. Next slide and last one. Sometimes you talk about them taking out the weekend. Them's take out the weekend. Can you explain what that is?
Days and thems of the world.
The days and thems. They took out the weekend. Them's bastards.
We don't say them, we say they. But, well, when I'm speaking, because I speak English, I don't
about they. Thems, they, whatever. Those.
Identify as them. Whatever. It doesn't matter.
What does it mean to take out the weekend? We do use that expression.
We do, all the time. Options have a theta decay component to them, meaning they decay over time. They lose value over time. Some weekends, volatility will be taken out a lot quicker, meaning that even though it's Friday, we know Saturday and Sunday are going to come. The market's going to be closed, and you kind of forward date those options in the option pricing, and you're trading more on Saturday or Sunday's time frame than you would be Friday. Now, when the market's moving all over the place and volatility is expanding going into the weekend, you don't get that theta decay over Saturday and Sunday. From Friday, you get it more coming on Monday if the market opens basically unchanged or inside the expected move. So what we're trying to explain here is you never know when the weekend's going to come out on options, because then they would say, you should buy or sell options on Friday if you think the weekend decay is going to come out. It's all random. Sorry.
Yeah, that's pretty close to the same thing I was going to say. We sometimes the 2 days, Saturday and Sunday, if everything,
you can actually look on the platform how much theta decay an option has. And
if everything was linear, then an equal amount of premium would come out every single day. But it doesn't work like that, because sometimes volatility gets bid up. Sometimes people get nervous about weekends. Sometimes people don't want to wait till the weekend. Like this, the way we traded last week, they probably took the weekend out on Thursday or Friday. They didn't even wait for the weekend. Most of the time, they kind of keep premium steady, then take it out on Monday or Tuesday of the following week. It's just, when do premium premium sellers get paid? That's what it is.
Yep.
That's not what we mean by that.
Let's take a quick 90-second break and come back. Even the S&P's down $6.75. Volatility in by 15 cents. We'll be back in 90 seconds. Let's Tasty Live with Option Jive next.
Crashing.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically, instantaneously, like, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring. And then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
It's option Jive. Tomas, we are back, my friend, for an option jive. Go.
It's an option jive. What?
Ready. Option jive. You just scalped your bonds? Yeah, you're so good. Once you bought into 114, you sold.
I haven't done much last 2 days.
Hasn't been too much to do.
I know. I told you the only thing I did yesterday was buy bonds. I think I did a couple other trades, but not much. Again, I'm Tommy's Tony. This is Tasty Live. We have a really good piece for you today. I think you guys are going to like this one.
Let's do it.
It's on IVR. Even though IVR is super low right now, it's cringy low.
It is cringy low.
It is. It's cringy low.
And it could stay that way for
it could
longer than you expect.
But one of the reasons it's cringy low is because we just finished an earnings cycle.
True.
Okay, we legit just finished an earnings cycle. What you're going to see here is that IVR tends to be inflated in equities for earnings, and it tends to get a little bit cheaper after earnings, unless there's something kind of crazy going on in the markets. So let's see. We got a lot of fun statistics.
Whoa. What do we got here? You can't go over this.
This
friend,
is just,
a lefty, or do something? You don't know what's here.
It's just implied volatility model.
Oh, okay.
So implied volatility is a critical metric in option trading.
Now that you've seen the model and you're familiar with it, when we go to the next page, I'm going to ask you to recite it for me.
That's fine. So a typical level of IV can vary from one underlying to another. So IVR, which we kind of we popularized IVR throughout the entire industry starting in 2000. We've been kind of the one talking about it forever. And
we made it so important. It's the first thing after the symbol.
It serves as a standardizing metric by placing current implied volatility on a linear scale from its lows to its highs over the past year. That's why whatever we look at, you're going to see a bunch of different IVRs right now, but I'm looking at spiders, and they're 12.9. So is this good enough to give us an at-a-glance idea of high implied volatility or low implied volatility, or must we still consider the underlying asset? Must we consider the underlying asset or not?
I mean, I think you have to consider the underlying asset if you're going to trade the way that we
Probably a little bit, because you have to consider what price it is and whether or not you think it's high or low relative, But the reality is it does normalize, it does standardize everything that we look at. So I can look at SPY and I can look at, just looking at my screen, I can look at SPY and I can look at, let's just say crude oil, and I can know which one's a little bit richer as far as premium goes or something like that. And I can look at bonds, it doesn't matter. They're all cheap right now. Let's go to the next slide. Premium levels. So 7 years of data, and we threw in a bunch of stocks here. SPYs, Qs, IWM, Apple, Amazon, and Tesla. We just went with very liquid, 3 liquid ETFs and 3 liquid stocks. We calculated the IVR levels over the past 6 years, and for each underlying, we summarized the distribution, looking at its average value as well as its quartiles. The values.
You to say.
Well, yeah, I looked at it. The values, it was less than 25% of the time, 50% of the time, or 75% of the time. For the equities, we separate out those dates that were more than 30 days of an earnings announcement from those that were more than 30 days. I'm sorry, within 30 days and outside of 30 days. Okay?
Mm-hmm.
Because IVR is obviously going to get a little higher around earnings dates. The question is how much higher?
Sure.
All right, so let's go to the next slide. Let's start to look at some of these statistics because they're really interesting. So the first thing is the distribution of ETFs IVRs. And it doesn't really matter what ETF we look at, meaning, obviously the S&P 500 is going to have a little bit less risk than the Qs or IWM. But when you look at these, the mean IVR doesn't change that much. The mean IVR percentile doesn't change at all. The 50% IVR percentile and the 75 IVR percentile, just putting it out there.
Mm-hmm.
Okay, where they land.
Yep.
And there's not much change.
Times you're talking about percentage. Right?
So if you go to the stocks, next one. If you go to the equities, the IVRs tended to be higher than you see in ETFs. Now, does that surprise? Those are the means. Does that surprise you? No, because the equities have, usually
earnings or any other kind of announcement.
Just more play. But you can see in Apple, Amazon, and Tesla, the mean IVR is about the same. And you can see across the board that whether you look at the 25%, 50%, or 75% percentile, they're basically the same. Okay? There's not a lot there.
Yep.
So, okay, well, that just says, so after the first two slides, what we see is that equity IVRs tend to be a little bit higher than ETF IVRs. So if you're seeing an equity that's really cheap, then you got to be really nervous.
And we have some of that right now.
We have some of that.
Mm-hmm.
Like I said, I covered my Lilly trade yesterday because it was 11. I don't like those single-digit equities.
Yep.
Single-digit ETFs are bad, but single-digit equities are worse.
Yep.
Let's go to the next slide. So here, when we remove the earning dates that are close to an earnings announcement, it becomes familiar again, but the numbers are higher. So we look at, this is IVRs outside of earnings. So across, I'm sorry, it becomes
a little more in line with what you saw in the ETFs, no?
This is outside earnings. Okay, so outside of earnings, everything normalizes and it becomes familiar. Go to the next slide, Beth. This should be inside earnings. Within 30 days of earnings, the mean IVR goes up a lot.
Sure. This is why I'm sorry to interrupt them. This is why we talk about, you have to be even more mindful of volatility before an earnings event. The closer you get to earnings, the more it's going to expand.
When we look at these numbers, the mean IVR, it's about 10% higher. Can you go back one slide? See 40, 47, 40? And here it is. Not 10%, but 10 points. It's like 20, 25% higher. Mean IVR is 33, 32, 33. Now go to the next slide again, Beth. Sorry. This is number 6. 6. No, number 6, going the wrong way. Yeah. And these are, go from 33 to 40, from 33 to 47, and from 33 to 40 when you get around earnings. Because Amazon's had some big moves, so therefore that's why Amazon's up around 47 mean. The IVR percentile goes up, the 50%, 25, 50, and 75% are all a lot higher. Okay, and that's just because you're inside of that little earnings window. Does that mean you shouldn't trade it? Of course not. It's just showing you that sometimes there's a reason why IVRs are high. So it may help to know a little something about, about everything. Let's go next slide. So identifying high implied volatility is crucial for spotting premium selling opportunities. However, determining what constitutes high IV necessitates familiarity with a specific underlying asset. So if you have an equity versus an index, first you have to know that the index is probably going to be less than the equity. And you also have to know that the equity is even going to go up, 25 or 30% more if it's inside the 30-day earnings window. So IVR assists by normalizing volatility across different underlyings, though it has its limitations. Notably for equities with an earnings announcement within the 30 days, IVR levels are generally about 10 points higher than outside of earnings. Therefore, when using IVR to assess opportunities in equities, ensure that you consider whether the current IV levels are affected by impending earnings announcements before making a decision. All it is just, hey, just be aware of what's out there.
Does this study make you look a little bit at stocks with earnings, a week or two before, which we've done other studies that show that volatility expands a week or two before, exponentially making up for the theta decay? Does that make you stay away from some of these stocks?
No. No, it wouldn't, because everything's going to be priced right. It's just don't get all here. It's not saying to stay.
Don't get overly crazy with the IV rank.
Like if you can't find anything,
looking to why the background noise.
Yeah, like if you can't find anything that has a high IV, and then finally see something with what has earnings tonight?
Target, TGT.
Okay. What's the IVR in there?
Target is 57, which is really high.
Which is really high relative to what else is out there. Okay. So here's the question for you. Target has it 57. So don't get all excited and do 3 times the size in Target.
Sure.
Because that's probably pretty normal.
Very good, sir.
But it doesn't mean not to trade it. You trade it if it's liquid and if you like the amount of premium.
Lowe's with a 28 in earnings, you might say, I'm gonna stick with
exactly.
it. Let's take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell next. Back in 90 seconds, Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the 4 little things as a 4 things. One big...
The 4 little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
It'd be nice?
The best part...
You gonna be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field, most likely before the game.
You're going on the field, most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Well, the opening bell is imminent, sound off in about a minute. Even the S&Ps are down $3.75. They've rallied about $3 since we've been on the
Did you catch that move?
Did you buy the dip? Scoopy?
Did you catch that move?
Biggest mover on the board, Ethereum up almost $80, almost a 2% move. To the downside would be oil, about a 1% move. If you throw out nat gas, which has a 3.5% move to the downside, looks like it's going to be flirting with new lows. Sounding off the opening bell is imminent here in about 30 seconds, so I'm going to wait for that to come out before I start quoting some of the other
I hate
stocks.
my natural gas position.
Good IV rank.
I'm long it.
I hear you. I mean, the only problem with natural gas is there's not a good, like UNG is a horrible substitute.
Horrible. You have to trade NG. There's nothing you can do.
Right. I know, but you can't get smaller in UNG. I guess you could do a vertical spread. I mean, I know. It's got a good IV rank. There's your opening bell, my friend, as they come spinning out of the turn. Russell flirting with unchanged. NASDAQ still down 40. That's your biggest mover to the downside. If you look at the Dow as the largest.
Basically a
mover to
crash.
the upside, up 80 and change.
Basically a crash.
Bonds up 10.
I am looking for something.
Let's see some of these movers to the downside. First, solar. That's been on the top of the list, either up or down. It's down 6 right now. Netflix down 5. MDT for earnings down $4.70. That's inside the expected move. AMD down $4 and change. Microsoft been a little soft lately. Mr. Softy, IV rank of only 8. Reddit red for, I think that's the second day in a row. Is this true? It could be. It could be down $2.97. We'll see if it lasts. Meta down 2 and change. Roblox down about $1 and change. Let's see what the movers are to the upside. Home Depot for earnings up $13. Palo Alto Network up $10. Lilly up around $9. CRWD up around $7. Adobe up $2. Your beloved Lulu up $1.60. All quiet, Sosnoff. All quiet.
Yeah, my positions, I have no problem children today. Biggest loser.
You try. I mean, try as you
I know. I have no
try to get in trouble.
One winner, bonds, and no losers yet.
Present company excluded, sure.
Yeah, and no delta, and no theta, and no extrinsic, and no.
Why do you even exist? Okay?
Why do I exist?
I mean, do something.
I know.
Make yourself useful. I mean, even if you get hurt. Act like you've been alive.
I know. I'm trying to find something.
I mean, don't just stand on the ledge. Jump off. Be somebody.
Do you think I'm
do something?
Do you think I'm a ledge jumper?
I think you like to. Yeah, I think you like to flirt with danger. Sure. I think
I like to take risk, but I don't like.
Okay, well that's.
I don't like to go out on a ledge.
No, you are not a. I mean, just because you're afraid you're gonna hurt yourself.
I'm not a ledge person.
Could I get you to jump off a cliff a la what was it, Casa Bonita?
Could you get me to jump off a cliff in Casa Bonita?
Yeah. Could you do that?
You don't have enough money. You mean in front of people in a bathing suit off one of those cliffs inside of a restaurant? No.
Wow.
With a spotlight on you?
With a spotlight on me and everybody singing?
What about just a jump? I don't need you to dive because I know you'll hurt yourself. You'll go ass over tea kettle. But what about just a jump? Can I get you to jump? I can get you to jump.
Not a freaking chance in hell.
Even the S&Ps down twice as much as they were just a moment ago. Down 11.
If there was nobody, if there was nobody there, you see how those guys climb up those rocks? It's hard.
Like a ringtail lemur, as my friend Vanetta would say.
I mean, if I could get up there somehow, and there was nobody in the restaurant, I could just
put a strap like
You're
a belt.
a hiker.
I'm a hiker. Yeah, that's what
you are a hiker. What if I give you your Crocs to hike up there? Then you'll be fine.
Yeah,
that's all you need.
But I have to tell you the truth. I don't like. I was when I was a kid. I went on one of those diving boards. It's not the low ones, but the high one. It's not that high. Not what like these guys do. Like maybe
8-10 feet.
No, more than that. What was the?
I doubt it.
It was more than 10 feet.
I doubt it. 10 feet plus the 4.5 feet you were when you were 17. I mean, that's like 14.5 feet. I mean, that's up there for you.
Okay, say it was 10 feet.
Okay.
Maybe that sounds fun. I thought it was 20 feet because I thought it was really.
It wasn't.
Wasn't?
I'm sure. I wasn't there, but I'm sure it wasn't.
Well, even I saw somebody the other day go up like 60 feet, 20 meters.
Mm-hmm.
That looks high.
Yeah, that is high.
Yeah, but I was 10 feet. All right, 3 meters. I didn't like it. I didn't like it.
I didn't think you would. You're not the aquatic athlete that we would think you are.
I don't like ladders either. I don't mind heights, but I don't I don't mind being an airplane. I just don't like a ladder.
Yeah, sure. Mm-hmm.
So we were building something at my house once, and the builder goes, he puts the ladder down, goes, come up here, take a look at this, because he was all proud of what he did. I go, that's okay, I don't want to see it.
I can see it from down here.
Yeah,
I'll be fine.
I couldn't see it. He goes, no, come on, I want to show you.
You couldn't see it if he went up there. You wouldn't know what he was talking about anyway.
He goes, no, I want to show you because it's really cool. We all decide. I go, that's okay. I don't care.
I believe you. And hence, that's why your lights don't work till today. Because he figured he didn't have to go up there and show you.
That's right. Mm-hmm. Now, here's what we do. After a nice little slow opening, we're going to take a quick little scan, and we're going to see bonds, good.
Bonds are up 10, yes, good.
Yeah, let's see if there's any problem, children.
Problem children to the upside. Home Depot, Palo Alto Networks, Intel up $1.50. That's good. Target for earnings up $1.20. Uber up around $1. Downside.
I got no downside.
Netflix
today.
Down 16. Sadnoff. What's happening to Netflix?
I got no downside today. I'm thinking this market's in.
I'm
thinking this market could be a little deep doo-doo because nobody expects it. When you least expect it, when everybody has actually literally been lulled to sleep.
We have been lulled to sleep. 700,000 E-mini S&Ps yesterday.
They did 8 at the end of the day.
They did what?
They hit 8. But here's the thing. There's nobody's got short delta.
I hear you.
Nobody's got anything short.
I hear you.
The freaking world's long right now.
Because it's working.
Yeah. I don't blame them. And nobody's scared.
Well, you could listen. The expected move is now $17 in the 0-day options.
Unbelievable.
The straddle is probably 16.50.
Hey, we're back to 669 in the VIX 1 day. And we just bring it up because this is the lowest we've seen. Now, here's the good news for all you guys out there. Outside of the studios in the West Loop, where Tony and I are right now. We're both going to be on an airplane tomorrow. And usually when we go on an airplane, the market crashes.
Yeah, or have some sort of big move. So, button up your tail risk here, one way or the other.
And I'm going to be away from my screen for a couple of days.
Last time I went on a plane, we were down 100 on the E-mini S&Ps. Over 100. It was that Friday.
Really?
Yep.
Oh, yeah.
Yeah.
Yeah, you're the KOD. Yeah.
Mm-hmm.
I forgot about that. So something usually big happens. That's the good news.
Mm-hmm.
So maybe we'll get a little excitement here.
Russell and the Dow the strongest, even the S&Ps and the NASDAQ the weakest.
Yeah, I haven't done anything. I've basically literally haven't done anything yet today. So
okie dokie.
I'm looking.
I'm shaking it, boss. You ready to take a quick 90-second break?
I'm shaking it.
Chris coming in. He's going to explain things to you. Has anybody ever been able to explain anything to you?
Not really.
I didn't think so. We're going to take a quick 90-second break. Chris is going to try to do the unthinkable. Back in 90 seconds, Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny Trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny Trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. Canceled crash with this man, Chris. Even the S&P is basically unchanged.
God, 2 seconds ago, we were crashing. Just kidding. I'm kidding.
Scoopy.
Now it's Scoopy.
How are you, Chris?
I'm learning about what happens when you're the founder, when you're the top of the pile here. Dress codes don't apply to you, Tony. When I go on the golf course, I have to wear a very specific set of shoes and a shirt and a belt. I can't wear Crocs and jeans.
But Sosnoff is entitled. You know this. I mean, do I have to explain it to you? I mean, he doesn't have to go with the rules of common folk like you and I.
The rules of engagement.
That's the dream.
Uh-huh. I
Just
will
wear Crocs.
never embarrass you with the way I look. I will embarrass you with my play. I will never embarrass you with the way I look on anything that we do.
You'll embarrass us with a lot more than that. I mean, you'll embarrass us with the way you talk, play, the way you interact. You want me?
You eat.
I can make a really long list.
That'd be a fun Let me explain all the reasons today. Okay. Guys, this is a nice little start for the market rebounding up here. But of course, this is a week where typically people are going away. On a volume basis, you're really looking at the end of August, challenging the Christmas, New Year's, or Easter week in terms of lack of market participation. This week, of course, comes with the Jackson Hole Economic Policy Symposium. And a funny thing happened on the way to the forum here. I decided to take a look at how the markets responded, given us a price change for the S&P 500 in the post-COVID era. Believe it or not, the average change for the S&P 500 on the day of Fed Chair Powell's speech has only been 0.7 points. But I think that masks the story because you have a lot of small changes here with 2022 where you saw the S&P lose 141. The standard deviation of the past 5 Fed Chair Powell speeches at Jackson Hole have given you 80.82 points in the S&P 500. And so when I look at the pricing for the end of this week, where the market's only plus or minus 60 points by Friday, I can't help but think that maybe this range is a little bit light. After all, a week with low volume gives chance for amplification, and this is a speech that could really provide a catalyst. I'm not saying I'm bullish or bearish here. I'd like to challenge the notion that we should be looking for vol to come in over the next few days.
Oh, you're not going to get any extra oomph in theta decay when you're starting out with volatility where it is right now. Is that what you're saying? Then we would agree with you. I would agree with you.
That's what I'm going for, yes.
Yeah.
I think we're on the same page.
Yeah, we love selling high implied volatility because we think that's our edge in time, that volatility contracts, even if you don't get the directional move you want that you played for, whether it be up, down, or sideways, but you get that extra kind of juice of volatility contracting. When you're starting out here, you're really playing at a level playing field with the buyers of options too.
Yeah, I do not like they're not pumping any juice into anything, and everything is way too cheap. So if you're going to sell premium, you can do it directionally here, but I don't like it as a delta neutral strategy. That's why our positions are so small, and I don't think you're going to get paid enough. The bonds just haven't responded to, an upcoming Fed decision.
Right.
Meaning that bonds haven't responded in the sense that they haven't pumped any juice into the bonds. There's like no uncertainty in there. And which makes me think that no matter what the Fed does.
On volatility, IVR is in single digits.
No, I know, which makes me think that whatever the Fed does with respect to bonds, the bonds aren't going to move. It's already priced in.
Well, they seem to have had it priced perfectly, the market and everything.
And the stock market, I think the stock market, doesn't think it can get knocked down. It's like a cocky fighter who just doesn't think, he can be hit. He can be hit, but he can't get knocked down. And until you knock him down, there's not much there.
Okay, so let's square the circle here then. Thinking that this could be a potentially bigger event than the market's giving it credit for, right? And we see that volatility is in a place where being directionally neutral doesn't really pay. How do you operate around an event like this that's coming up? Do you ignore it? Do you just go longer out in time? I know you said, Tom, that you could be a little bit more directional here, but how does one square the circle of knowing that there's this possibility that the market's a little complacent?
That's fair. I mean, we've been talking about it almost every day on this network. We've been talking about, because there's nothing else, that's really the risk. It's kind of like something you can't necessarily see. And I think it's worth.
Isn't that always the risk, what you can't see?
Yeah, but it's different.
Sometimes I would
Sometimes
argue,
it's an opportunity.
I would argue with you that we look at high implied volatility as an opportunity, where other people say, look at implied volatility. It's so high because we're going to have this humongous move. And we look at it as, well, that's the froth that you have, and that's what I'm going to look to take advantage of.
The only time in 2025, the only time that I began the day just outright buying stocks was in April, where I was just like, how could I not buy anything here? I have to buy these stocks, opening down $10, $12 after dropping, 30% already. That was interesting to me. I think where we are right now, I don't have the same take of, wow, I got to sell this stock. But there are some interesting things out there that you got to see. The NASDAQ just dropped 150 points. Some of these stocks, like Reddit's down $14.
5 days in a row, Sosnoff.
Well, Reddit's down $14. PLTR's down 10. They're hitting some of these. Netflix is
some
down
of
35.
these stocks that have taken us to this lofty area. I talked about this a little bit.
I understand. AMD, Roblox down 4, AMD down 6, Hood down 4. I mean, they're taking some stuff out to the woodshed right now.
Are you guys? I don't know if you have been following the news around Roblox and Meta the past few days.
A little bit. Yeah, we've seen it.
This is bad PR for two companies that have been engines for the NASDAQ growth story here. Does that bother you or concern you whatsoever, given the exceedingly horrific news flow?
It's funny. It doesn't, quote, bother me, but I think the market needs a wake-up call. And so it doesn't bother me at all. I think what bothers me more is the fact that everybody has, up to this point, ignored all the stuff that we always felt was like, this should bother you.
Sure.
All the stuff that should bother you, everybody's been ignoring forever. Now that there's, I'm going to be fascinated by what's happening I'm actually a little bit fascinated by what's happening today, because we have not seen this kind of early weakness in the S&Ps, with the Russell basically up in the NASDAQ.
Volatility not moving at all.
Well, the volatility measures the S&P 500, and the S&P 500 is doing nothing, and the Russell's doing nothing.
NASDAQ's down less than 0.5%.
No, I understand it, but
let's
it's something.
Relax here. With volatility unchanged, we saw the same thing yesterday, and we sat here all day long.
Yeah. Well,
Larchmont Country Club doesn't have a 10-foot diving board. I'd rather have that discussion. I just looked at the pictures. There's no 10-foot diving.
Larchmont Country Club?
Yeah, or bigger. So please explain. Maybe after you're done with Chris.
He's convinced. He doesn't know where Larchmont is, Chris, so he's convinced that I grew up in Larchmont.
I know exactly where Larchmont is. That's exactly.
You're from Ossining, right?
No.
Mm-hmm.
Ossining.
Whatever.
Mamaroneck?
Ossining is where Sing Sing was.
Sing Sing's still there. And they have a great brewery over there now, too.
Okay. Anyway, let's get back to this.
All right. So listen, anyway, the point is with Jackson Hole this week, I find this meeting to be one. Think about the Fed's dashboard right now. They're looking for 2% inflation still. Maybe they're going to move the target. But the data that we saw with CPI and PPI, we can take chunks of those and feed them into PCE, the Fed's preferred gauge, and that might come up at 0.5 or 0.6% this week, which annualized is close to a 6% year-over-year run rate for inflation. I don't know how Powell gives you a set of comments that guarantees a September rate cut. The market's priced at like an 83% chance. It's down from over 100 just a few days ago, but that's still a very, very, very rich amount of pricing. So how has the market responded recently? Past few days, higher yields have been weighing on stocks. Those 1 week correlations, if you will, have turned aggressively more positively correlated. So I would point to the fact that if you have a move where Treasury yields start going up, stocks are going to get that wake up call, Tom. And this 80-point standard deviation that we've typically seen around the last 5 meetings, that's in excess of what the market's priced now for Friday. So this is a week where complacency could really bite people. I don't know if 2022 is the appropriate corollary when we lost over 140 points, but that seems to me I'd be playing the downside directionally rather than the upside here. I don't know what Powell can say to make everyone feel good, given the lay of the land.
On Sunday night, I actually asked this question on a scale of 1 to 10. Where do you think we are on the complacency meter?
Yeah.
And you said 7. Ilya said 15. And Tony said 8.5 yesterday.
85.
So,
yeah.
What? So everybody in this room is feeling the same thing. That scares me a little bit because usually if we're all on the same page, we're all wrong.
Yeah.
But I think that's given where the market is and given, do you see how, like, today's just one of those weird days, and these weird days are the things that I love the most about markets. I mean, the Russell's upticking, the S&Ps are upticking, and the Nasdaq.
A little bit of a rotation.
A little bit of a rotation.
Yeah.
Bonds are upticking.
Yeah.
I mean, here's my play, Chris.
You wanted the bonds higher. The market's actually kind of accommodating you.
I said on all weekend, last week and then the weekend, I see the bonds higher and stocks lower.
Mm-hmm.
And we'll see if that's actually the case or not.
Home Depot gave us some nice earnings today. Consumers are powering through. This is basically retail week if you look at the earnings slate. So what are we seeing right now? The non-tech companies are getting the love. I think that might be a good sign.
Not really. If you're a bull, non-tech companies, I mean, it's good for rotation, but if you're a bull, non-tech companies can't carry this market. This market's been carried by the big kids. And
no, but we have all these things going around about like price to earning ratios reaching the .com bubble levels, and you can get rid of those problems not through a correction in price, but through time. And so a period of consolidation for some of the tech stocks and money flowing into the Russell and the Dow, that would be nice. That would help keep the longevity of the bull market alive, I'd say. Although Chamath putting up a new SPAC yesterday, I saw that.
Yeah, I saw that.
That
too.
has to. Yeah, we're probably close to the top. Yeah.
I despise that man. Just so you know, I can't listen to him. I want to kind of. I don't really smash my iPad ever or my phone. If I have to,
don't get angry like that.
I don't get angry like that. But if I have to listen to him, I won't listen to one. Like, people will send me a link, and I'm like, give me a break, dude. Like, I just want to do a podcast on what a douchebag he is. But I'll save that.
That can be arranged.
No, lots of things can be arranged. But I'm trying to show the sweeter, nicer side.
Kinder, gentler
side of Tom.
Sure. And you know what? This is actually a good point. Years ago, I wrote something for Luckbox, which I still have saved around here, but it was a review of how SPACs have performed.
Yeah.
And basically, SPACs are crap. They just bleed money. They're not worth investing in. They rarely, if ever, work out. As a trader, you're basically letting money on fire. And as I like to joke with people, if you're going to invest in a SPAC, you can make a check out to the Christopher All Saints Helping Fund, CASH. I'll give you my address, and I'll take care of the money for you instead, because it's that useless going into a SPAC.
Well, I mean, I would agree if you're going back to 2020 and 2020, 2021, but they have changed SPACs dramatically right now. And so, I mean, nobody is putting any money, no institutions are supporting any of these SPACs unless it's the real deal. I mean, the stuff they came out with, was it 2020? It was 2021. And the stuff they came out with in 2021 was embarrassing. The stuff that, basically all you needed to, we had offers. I'll tell you how bad it was in 2021. We had offers for Tasty that were easily double, maybe more, the value of the company. And what it does is it throws off a lot of, we didn't touch it because we were like,
that's what you sold it for, you mean?
Yeah. Because we didn't touch it. We didn't touch it because we're like, no, this is, I've been around too long. If you know exactly what your company's worth, and if somebody's offering you double and it's not, and it's not real, you're like, no, I'm not doing that. I'm not disappointing every investor in the world. And so we lived through it, Chris. It was crazy. We self-taught ourselves about SPACs and then went through the whole process and met with all these different companies. And yeah, we talked about this all the time, Tony, years ago. The writing was on the wall. There was nothing.
I mean, you told us this several times, at least when we came. You were talking about valuations, and you're like, "Yeah, we could have gotten more money, but it would have been impossible to live up to."
Yeah,
and it would have destroyed the business long term. So,
a friend of ours on a company that we looked at very closely. I'm not going to mention the name, but we looked at potentially buying them at one point years ago, and they got bought out eventually, but. They came out with a $2 billion SPAC that went to $100 million.
It's a good buy if you can get it.
$2 billion SPAC went to $100 million. I mean,
valuations are crazy.
That's 95%.
So this is interesting because it's not totally post-COVID, but Harvard Business School years ago put together a study of 47 SPACs that merged between January 2019 and June 2020. In terms of how those performed, the overall mean return for SPACs during that period of time, minus 2.9%. The median return was minus 14.5%. The mean return, which is the excess over the IPO index, was minus 13.1%, and the median return over the excess IPO index was minus 32.8%. Across the board, that was 3 months. 12 months later, the mean return was minus 34.9%. The median return was minus 65.3.
Yeah, and that's I didn't want to be part of that group. But there's a couple points.
It's just one of the sign of the times. If you're seeing as a trader, these things get listed, staying far away from them. These are little road posts on the way to a market that you say frothy, Tom. We're certainly there.
The statistics are equally as bad for covered call closed-end funds in 2007 and 2008. And so you had covered call closed-end funds before the market crashed. You had SPACs before the market melted down in 2020 and 2021, like you just talked about. So can I take you to 2025 for a second?
Sure.
Does the IPO market in 2025 scare you at all?
Yes. You and I have talked about this on First Call. Some of these IPOs where you're seeing them listed at like $30 or $35 and they're closing the first day at 90, it makes me uneasy. The investment bankers aren't doing their job the right way. They're obviously helping early holders, but those folks can't cash out the day of anyhow. So people are reaching. Signs are everywhere, but how long it goes on could be longer than the next 45 and 21 out.
There you go, brother. There you go. Thank you, Mr. Vecchio.
I had some options trivia.
Oh, let's go. Let's do it. I want the option trivia. Let's go.
You want the options trivia? I'm going to give you the options trivia.
Yeah.
Okay. So we have 10 questions here. We're going to do this. Ryan, you want to clip something for YouTube? This is your content.
Hey, let's do it.
Which option Greek measures sensitivity to changes in implied volatility?
This is not trivia.
Yeah, this is options trivia. We'll just do it next time.
No, I'm not doing Greeks. I want the fun stuff.
Then you've come to the wrong show, my friend.
There's nothing fun about Chris. Sounds nothing.
Yeah. No, I don't.
He's all
I'm not sitting here
statistics
taking an options test.
Macro view, no fun in this kid. Look at him, for crying out loud.
I want the fun stuff.
I'm wearing a 3/4 zip in August, Tom.
Why are you wearing a 3/4 zip?
66 degrees out, and I don't have the kind of aura to wear Crocs.
Because he has his pajamas on underneath there. That's why.
All right.
This is a night. Tony, come on.
See, that's fun.
That's good. All right, we're getting rid of you because we're not answering like we're not going to an options test. Hate those things.
Good job out of you because he failed the last one, Chris. That's why we want to do this. We'll take a quick 90-second break and come back. We got more Tasty Live after this with a market measure next. Back in 90 seconds with Tasty Live.
No, I can't do the whole.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
So
my day is
close.
starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
The color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before, and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game.
Oh, here
I'll
we
get it on
go.
this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny
this is-
Cancellari. Bam!
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit of a market measure. You get a little bit of a long break there. I have a long urethra, so I'm fine. But everything come out okay with you? A little pee break?
I'm fine, thank you.
Good? Okay, good. We got a market measure sponsored by the SIBO, Sosnoff.
You know, I'm pretty well trained. I used to stay in the pit all day long. Never got out.
Let's be complete. We said we would never lie on this show. You haven't gone bell to bell since 81, possibly. I stood in the pit all day long.
How long?
I never left to eat lunch or go to the bathroom for 3 years.
How long have we been doing the show?
14, 15 years.
We're into our 15th year doing this show.
I think once.
Live. Okay.
I think we both got up once.
I haven't gotten up once during the show.
No, I think you got up once.
I'm telling you, 15
I'm telling you got up once.
You were all the time throwing up, getting sick.
It's right. I threw up. I did leave.
Whatever you are.
I did leave the desk to throw up. You are. No, actually, I threw up at the desk, and then I left to clean up, is the true, on the break. And then I missed one 15-minute segment and came back on the show.
If we had Scott in here, or Pete, whatever, doing the show. They have to leave every 15 minutes.
Yeah.
Us, trained animals.
You are a trained animal.
Anyway, if you're new to Tasty, thanks so much for joining us today. If you've been around forever, thanks for coming back.
I drink a carafe of coffee while I'm sitting here, and I don't go. I mean, talk about trained. That's trained.
We are going. Tony and I are here today and going tomorrow.
Gone tomorrow. Here today, gone tomorrow.
We are. We're here today, going tomorrow. We'll be on the road.
Like the Spoos. They were down 10 and now they're up 5.
I know, I'm sick by that. I'm not really sick.
Bonds are up 14 ticks though, 114.07
okay.
helping out.
Anyway, Tony and I'll be in Mexico doing a couple of shows the next couple of days. So we're gonna miss you. But if you want to come, AI, digitization, and the future of risk taking, send us an email to support@tastylive.com and we can get you in for tomorrow night. Also doing something much shorter on Thursday night. It's not at 6 o'clock, it's actually 5 o'clock Central Time. But if you're coming, I'd come to the Wednesday night one and just send us an email and we'll get you tickets for the event. Okay.
You do get up to graze and stuff like that.
I'm a grazer.
Yeah. Now it's just.
We also have another live show coming up right when we get back. In fact, we are going to be in San Francisco. So the Bat and I are going to hit the West Coast. We're going to hit the West Coast and New York City in the month of September. Bat, throw up the next slide.
Working on it.
There you go. Nope, not this one. First one we're going to be is So we're going to be at a place called the Regency Ballroom, which I have no idea it is. I think it's a music venue. And we'll be at the Regency Ballroom in San Francisco Friday, September 5th. The Bat and I are flying out there on the 4th, and we're bringing the whole crew. Cannot wait. Doors open at 8 o'clock in the morning. Show starts at 9. Markets will already be open, ready to go. We have not done a live trading show in San Francisco since probably 2007 or 2008. So it's been about 18 years. So if you get a chance to come out, I think that was a money show back in 2007, 2008. So if you get a chance to come out to the Regency Ballroom, San Francisco, sign up at tastylive.com/events. This will be our last kind of reminder this week. We have plenty of room in San Francisco right now. And then 2 weeks after that, we're going to be at Webster Hall in New York City, the old Ritz, place I went to on my first date with my wife, although she denies it.
She doesn't deny, she just doesn't recall, is what it goes.
She's trying to put it out of her memory. No.
People forget trauma like that. Like they'll just block it out. The body, the mind, it has a special way of coping.
Yeah, when I was in college, it was called the Ritz, but now it's Webster Hall. And we are going to be there on Friday, September 19th. Doors open at 8. Show starts at 9. Markets don't open until 9:30, so we're going to have a little fun there. We got a little time to bullshit back and forth with the crowd or trade something pre-market. So we'll have a little fun with that.
Cool.
It's also Expiration Friday. So if you get a chance, you want to come out to Webster Hall, we would love to see you in New York. Bat will be back in his stomping ground. Me too, I guess. And we should have a lot of fun. And then, hey, Beth, I got one more event in September, on September 12th. Do you have that or not?
Let me see. Where are you going September 12th?
New York City again.
You are going?
Yes, just me.
I don't have that, Tom.
Okay, we'll get it for you.
Okay.
I'm going to be in New York City at another event. I'll put it up on the screen. It's a little different because I'm just going to be there for a short period of time. Anyway, we'll put it up. I think it's on September 12th. A lot of traveling right now, so is what it is. All right, you ready?
I am. Measure. Let's do it.
Here's our Market Measure Day, sponsored by SIBO. And today we're going to talk about something. You know, we've done this piece a piece like this in the past, maybe about 5-7 years ago. We had some fun with this. Do you remember when we had, who's the poker player?
Sure, Faraz
Jaka. So we first started Tasty. We had a professional poker player, Faraz Jaka, who some of you might know.
I think he's pretty well known.
He's pretty well known in the poker circles. He's won a couple of bracelets.
He just won something got pretty deep, like the final table not too recently.
He's won a couple of bracelets, I think, over time, and a lot of people know him. So Faraz was kind of like a little,
took some of my money.
We consulted with him, we played poker with him, we had some fun, and we talked about win streaks and losing streaks. We also, when we first started the network, we had Mike North on the show, who was a shock jockey from Chicago, who basically started. It was like one of the first 2 or 3 people doing, sports talk radio. We talked about win streaks and lose streaks. Then we did the math behind it. So here's a refresher.
He's reached the 2 WPT final tables, 6 World Series of Poker final tables, and his lifetime tournament winnings exceed $10 million.
Okay.
39 years old.
Not bad. Nice kid. Really super nice kid.
Yep. 18 money fishes, final table 7 times. Nicknamed the toilet, Sosnoff.
Because you know why he's nicknamed the toilet?
Because he'll go in with a lot of
everything, with garbage.
With a lot of garbage, yeah.
Anyway, why win? Let's do it. We're going to talk a little bit today about, next slide, Beth. We're going to talk a little bit today about gambler's fallacy, aka the hot hand fallacy. And we are so anti-trend here, this should be easy for us, but can be described as the belief that a trend will continue to revert based on previous occurrences of independent events. And we all know, how many times have you used the term gambler's fallacy?
A lot.
A lot. Especially when we're in Vegas.
Yes.
Especially when there's 6 banks in a row and you're betting.
They used to just say, "Oh yeah, sure, but it's gambler's fallacy."
Especially when we're playing roulette and we get about 5 reds in a row, and we're like, well, you got to bet black now. As a premium seller, the worst thing we can do for long-term profitability is fall prey to a gambler's fallacy, or in other words, throw out the mechanical playbook. So this brings us to the question, why win or losing streaks don't change the math? All right?
Yep.
Next slide, please. So to get a clearer picture, let's start with some scenarios illustrating the gambler's fallacy. Stock's been up for the past week. I think we'll see a continuation on Wednesday. The roulette ball has landed at the same thing here. On black, the past 5 spins, I think it's going to be red. I have 3 children, all girls, and I think the odds are in favor of number 4 being a boy. Or the market's gone up for X number of days, weeks, months, years. We're at 18 years, boys. No, actually, we're at 16 years right now in a row. So it has to fall. These are all fair questions.
Sure.
Let's go to the next slide. So here's our study. We used the SPY for the last 10 years. 16 Delta strangles, 45 days to expiration, managed to 21 days, and held to expiration. We did them both. Computed the average P&L, win rate, premium collected, worst loss divided by buying power, and the volatility of our P&L. Since short premium trading generally has a positive expectation game, you win in the long run. Where can the gambler's fallacy hurt you? That's my question, Bat. Where does the gambler's fallacy hurt you?
The bid-ask differential. There is no theta decayed opponent.
Nope. Where does the gambler's fallacy hurt you? And it's funny because I did an interview with somebody yesterday. You guys are going to see this coming up pretty soon. And the person I did the interview with
nailed it.
No, the gambler's fallacy came into play. It hurts you when you double up to catch up.
Okay.
It's when you double and triple up to catch up.
Sure. Not something I do, but I get it.
Something I did in a past life. Double up to catch up.
Now, on the offensive, 2 becomes 4, 4 becomes 8, 8 becomes 16, 16 becomes 32, 32 becomes 64, bat, we leave.
Nobody knows how to do the offense. There is no such thing as an offensive. It's like 1, 3, 5, 3, 7, whatever it is. That's just, that's pressing it. The only people that press things really well sometimes are momentum traders and craps players. Let's go to the next slide. So let's consider a fair coin. You flip the coin 10 times, the results are below. One might erroneously conclude that the next flip will favor either heads, gambler's fallacy, or tails, reverse gambler's fallacy. However, the outcome is due to chance. The probability of the next flip being heads or tails is still 50-50.
And when you can realize and learn that, you'll be a better person. It's 50-50, each occurrence.
Nope, I'll still take. Nope, if I saw this.
That's why you should do it with your eyes closed. Like, it makes no difference. It's just a guess.
That's why I'd still choose tails here. Let's go to the next slide. Because you can't get out of your head. But here's the good stuff. So managed to 21 days is blue, and held to expiration, which obviously we don't do, held to expiration, because we're out at 21 days. But
you said, you know what? Now that I think about your gambler's fallacy, you're saying doubling up. I should have thought about that, because that's just you said it's increasing your size, but we know increasing your size is when things go wrong, regardless. Yeah.
So let's consider the results of 16 Delta SPY strangles, 45 days since 2015. Each trade managed early and also held to expiration. And you can kind of see here, you can see at the blue is managed 21 days, red is held to expiration, and the you can just see how much more, like the big one is the volatility of P&L, but you can kind of see how similar everything is, except in most cases, the blue just protects you. Just reduce your risk.
Yep.
And that's all it is. It's just a reduction of risk. It's a reduction of risk. It's an increase in dollars. It's an increase in dollars per day and a reduction of risk. Let's go to the next slide. So now let's say that our past 3 trades are losers, averaging a negative $100 per trade. Does this mean that you should place, and here's the answer to your question, does this mean that you should place a larger position next time, expecting that your P&L will revert back to 10 years average of 34 positive dollars to 78 positive dollars because selling strangles has a positive expectation? And so whether you manage early or hold to expiration, it still has a positive expectation at the end. So do you, if your last 3 trades were losers, then does that mean you should place a larger position?
No.
No. Next slide. He's a fast learner.
Nothing gets past me.
So this is one of the fun ones that we've done in the past. Blue, 1 contract, whatever color that is, turquoise, 2 contracts.
Fuchsia, you would look at.
Yellow's 5, and I guess that red is 10 contracts. So the answer is no. And actually doing this implies that it exposes you to more risk, while the probability of profit, the win rates, and the premium collected, and the worst loss on this hypothetical trade all remain the same. So everything else remains the same, except you're just exposed to a crap load more risk. And this graph shows the results when you hold to expiration. You can just see your risk goes up. That the middle one that's out of control, if you can't read it on the slate, is the volatility of your P&L.
That's correct.
Okay, and that's where the risk just explodes. Volatility of P&L.
That's what
payouts the same.
That's what hurts.
Average P&L is the same. Payouts, the premium's the same. The worst loss and the win rate, everything remains the same, but the volatility of your P&L explodes. Let's go next slide. And then looking at this slide, when you manage the trade at 21 days, the outcome remains the same. This means that increasing your position size in hopes of achieving a better result doesn't improve your probability of profit, your win rate, or the premium collected. It simply increases your risk exposure. And you can see it here, it's even more pronounced.
Sure.
On the other hand, by managing your trades early, the overall risk and the worst loss are significantly reduced. So it's a really good example here.
Really good example. This was a really good study, just showing the magnitude of the.
Yeah, it's just clean. It's a clean looking slide. You save this one, you put it in your back pocket. Next time somebody goes, I'm going to go from 5 to 10 just because I got to win eventually. And that's also how they carry out of the casino.
Genius fails, a lot of things you can call it.
And that is, if you get a chance, read the book When Genius Fails. But if you haven't, that's why a bunch of Nobel Prize winners and Nobel laureates lost all their hedge fund and lost the money and almost took down the market because genius failed due to size. Let's go next slide. So just 2 quick takeaways. After a trend of winners or losers, there's no edge in trying to pick a direction on future trades since they are a matter of chance. And after losing trades, do not abandon the mantra of trade small, trade often, or managing your positions early as your probability of profit remains the same. Good stuff, man.
Good one?
Good.
Very good. I was waiting for you to validate it. Good job out of you. We're going to take a quick 90-second break. Even the S&P's up too. Solid enough. 0 days. Paying off again. That straddle, which was around $17-18, is now under $15. Sitting.
You know what? I understand. I don't like it.
Call yourself a king.
I don't like it.
Call yourself a king. Call yourself whatever you want. It's now 12 and a quarter.
I don't like it still.
Back in 90 seconds. It's Tasty Live. What do we got coming up next? Your friend and mine, oh joy, Mr. Scott Sharon, Tasty Trade World Headquarters. Immediately following these messages. Back in 90 seconds.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. It doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live and enough out of you. That's right, Tasty Trade World Headquarters. Your friend of mine, the very popular. That's right, Mr. Scott Sheridan Studios. Oh, yeah. Tough crowd.
It's very popular.
Very popular. It's very popular. Even more popular than the hummus.
It's been rough, and it's 9:32.
Yeah.
More popular than hummus?
More popular than hummus. That's right.
Scott Sheridan is more popular than
Have
hummus.
you been to Kava?
The fast food place?
Yeah. Because I think it's a better version of Roti.
It's a gross version of Roti.
Oh, I think it's better. I haven't.
It's not even the same thing.
Roti is called Roti.
Roti. I have to go. Did you go here or Boston, New York?
I've been to the one in California.
I haven't been to that one.
And
So I've been to Boston.
I've been to the one in California and I've been to the one here.
I thought the one in Boston was excellent. I'll try this one. This one, it's on, where do we drive by?
It's on Milwaukee.
On Milwaukee.
It's gross.
Gross.
It's gross. It's literally gross. And the one in LA is gross now too. It was when I first went there, the first time I went there, I was like, this place is the best fast food.
Oh, okay, good. You did think it was good.
The first time
I did it 4 years ago.
Oh, 4 years ago, he'll agree.
4 years ago, it was good. Now
Okay.
that they've gone public, it's the worst.
Oh, that stinks.
Yeah,
I
it is
drove by and
absolutely-
I'm like, I gotta go try that place. I was there 4 years ago.
4 years ago or 5 years ago, it was great.
Yeah.
Now
Okay.
it's absolutely horrible.
Oof. So let's hope
And
that
Rhodey,
Horrible.
and Rhodey is freaking great.
they're out of business.
No, they went bankrupt, but they're still in business.
Grody is Grody.
The one on Sheffield Clybourne. Wait, the one on North Avenue is still open?
Yeah, I go there all the time. It's my favorite place.
Oh, I thought that.
It's my favorite fast food place.
Oh, I thought they went out of business. So that's good to know. I'm just not over there.
It's great.
Why do
Yeah.
you go there? That's such a
go to
congested.
Rhodey.
Oh, to go there.
Yeah.
Oh, it's a destination.
You actually drive to it to go to it? Like it's not passing it on your destination, you know.
That's what I'm saying. That's what I'm thinking. Why are you over there? Like you're passing by, you'll stop in and
You
get
got a
food.
Gumata over there or something like that you want to talk about?
I got an order I like there. I like that place.
See, you know that we're getting older when he's happier to talk about the order at Rhodey than the Gamata. Like he didn't want to
it is on my way to Nordstrom Rack.
Oh,
There we go.
okay. All right.
And if I have to, it's on my way to Nordstrom Rack. I mean, I do have a couple things there. I like to window shop at Pottery Barn.
Nice. You ever going to Blick to get some art supplies?
What is it?
Blick Art Supplies?
No.
It's a big art supplies place. Take your mom there.
I've never been there.
Okay.
I don't think
I've seen it.
It's a nice store. I mean, I'm not an art supply person, but I've been in there.
What am I going to do with art supplies?
Same thing I would do. Nothing.
Your mother's an art teacher.
Yeah, why didn't you get any of that
How
art
would
gene?
you say something? What would you
Did
do?
your sister? Did your
Create
sister?
something?
Did your sister get the art gene?
No.
Skip the generation. Do either kids have an art gene?
Yeah.
Which one?
My sister's son.
I said your kids.
Oh, mine?
Yeah.
Have you met my kids? No, they don't have an art gene.
Wait, but your sister's son, the one's Cole's age.
Yeah.
He's an art. He can.
Yeah.
Oh, good. All right. So.
Yeah.
Vinny has a little artistic
A little bit. Vinny Van Gogh.
streak to him. I mean, is there
My grandfather was a.
Your mom's dad.
My mom's dad was an artist. My mom.
Oh, her brother.
And her.
My mother's mother was a mother.
My mom and her brother. My uncle.
Yeah, he's a crazy artist, right?
He's the longest tenured professor at the Art Students League. He's got, I think, 65 years.
Wow. What's the artist? What's
Art Students League?
Yeah, what is it?
It's a school in New York City. That it's an artist school. An art school.
65 years, and he's been married once for each of those years.
Yeah, but
he's been married.
A lot of people.
My mom went there too.
I thought she went to Bard.
She did.
She went to both?
Yeah, Art Students League, and then Yep.
Oh.
Wait, like switched or
No.
masters?
No, master's from Barnard, Columbia.
In art?
Yeah.
Your mom?
Yeah.
What happened to you?
That's where I was born.
He did
At Mount
one
Sinai?
sculpture and he was done.
Oh my God! At Mount Sinai 113th?
Yes.
I live right across the street from there.
That's where I was born. My mom was a.
Oh my God! I'm telling Lila.
My mom was a grad student.
Hold on.
Because there was no girls allowed at Columbia back then, so you had to go to Barnard.
To see a girl?
Oh, that was the girls' school.
Oh, okay.
Columbia was the boys' school.
Yes.
And that's where my mom and dad lived, because my mom was still in grad school when they got married, and I was born in Mount Sinai.
I think the first woman's class was like 80 at Columbia. Something like that. I didn't know you were born there. That's really funny.
Yeah.
Walk by that place all the time.
Never walked by that place once. I couldn't even tell you where it is.
It's 113th. She was in between Columbus and.
Well, back then it wasn't the best neighborhood.
No, I'm sure not. Columbus and Amsterdam on 113th on the north side of the
It's
street.
basically Harlem. It wasn't the best
It's
neighborhood.
not basically Harlem. It is Harlem.
Yeah, I know.
Well, you should go up there sometime. It's nice.
I know. I heard it's great now.
I mean, Barnard with the gated community, it's beautiful.
I was, yeah.
I think it's a little sexist, though, that Barnard's all
Barnard's
girls.
still all women.
It is.
All
Then they can go to.
Chinese sources.
It is all women. They can go to Columbia, but but guys can't go to Barnard.
Why don't you complain about that?
I'll put it on the list. Oy. All right, Tony.
Oy.
Tacos today. You want me to make you nachos?
You know what? We're going to Mexico for the.
We're gonna have a lot of tacos this week. Did you see the itinerary?
Wait, did you guys get the itinerary?
Abstain.
Did you get the itinerary?
I'm sorry?
Did you get the itinerary?
Of course we got the itinerary.
Of course I got the itinerary.
I want to know I'm not
First
saying.
of all,
I'm not saying.
I'm flattered that we have an itinerary.
I'm not
Good
saying.
job out of you. You know who you are.
Right. I'm not saying anything because I'm not playing, but I do have a question. First of all, have you been to Tacos 11,000?
No.
He's raving about it.
I know.
I'm looking forward to it. There's a lot of pressure on Uncle T. My question is, why are you guys only playing 9 holes? Breakfast first, and breakfast is getting top
Because
billing.
it always rains at lunchtime, so we're gonna just do 9. Then it rains at lunchtime. Then we'll go back.
Why are we only playing 9 holes?
Yeah.
Because we have to eat breakfast.
Right, breakfast plus 9 holes. Don't you play breakfast first and then play? Why can't you play breakfast and then have breakfast and then play 18?
You don't have any
we're going to
idea
lunch.
about this
But that is true. We are going to lunch at
Lunch is at 2:30.
2:15.
It's a long drive.
Yes.
Oh, is it?
Yeah. It's all the way on the other side of town, and Mexico City's huge. We only have time for 9 holes. And we can't miss the lunch.
And Saturday, breakfast and golf, then golf depending on tee times.
Yeah.
That's a little risky. Like you'd think you'd be able to confirm for out of town. And I got to tell you, this place we're going to looks really good. I'm excited.
Yeah, unfortunately, you're going to miss breakfast.
Oh, is breakfast? Is it like a Shadow Creek breakfast?
No, it's better.
Better?
Better.
Yeah, way better.
I'm being told.
What do you go with? Huevos rancheros?
No, they have lots of different meats cooking on.
They bring it out to you at the hole in a skillet or something like that.
No, they don't.
Shh! Don't. Who cares? It's Scott. You can
I
tell
don't
him
think
anything.
Tony's going to make it anyway.
He's so gullible.
I think he'll be like,
It's too much pressure?
yeah, too much pressure on the golf course.
You're saying this, Tony?
It is Tony.
I'm having a little golf anxiety.
Are you?
Yeah.
Like get 24 balls?
No, you don't lose any balls. It's a private country.
They say I'm gonna have to hand like a dozen to the caddy.
For sure.
So I'm gonna say, you know what this means. Is all I'm gonna hand it to him.
Oh, these caddies, they cheat for you.
Okay.
Which is, which every caddy should do.
Yeah. It's gonna be good. I'm gonna be all right.
Yeah.
I've been practicing.
It's kind of flashing back for me with Al when we played at Shadow Creek. He ran out of balls, so he just went to the driving range and shoved his pocket full of driving range balls.
Yeah, because those were brand new titles.
They were brand new Titleist. Oh my God, Al. All right. Anyway, should we get to some business?
Yeah, sure.
Sure.
All right.
Wow, right to business. No more chit chat with you. No more foreplay. Right there, right to business. Go. I'm ready.
Speaking of which, this is not a topic of conversation for on air, but off air, we need to talk.
Uh-oh, that sounds... Last time somebody said that to Tony, he was packing a bag and heading to the hotel.
No, it's not bad.
Today?
Yeah, it's not bad.
We need to talk. No guy...
You know what? The last time somebody said to me, and I was opening the mail, the last time somebody said to me, I came home, we need to talk, I really did say, I really would just like to open the mail and do the bills. Do we have to? And I quickly found myself packing my bag, two bags, and leaving. So do we have to?
No.
Okay.
It'll be a pleasant conversation.
We need to talk. You never want to hear... No guy...
I don't want to. Next time, don't set me up. Just say, hey, Bat, come here for a minute. Like that. No,
Fast, just rip it off. Banded.
Even that hurts sometimes. I'm not gonna. I would just rather be in denial. I would like to be lied to.
You know what?
I want to be lied to, too.
I don't need to talk to you anymore. We're good.
Okay.
We both just need to be lied to.
You guys are weak.
All right.
Sodding up that strangle now, $16. Forget about it. Don't do it anymore. Should have covered at 12 when I told you it was the low.
First of all, I don't even like any...
Even the S&P's down 9, NASDAQ down almost 200.
I think we're crashing today.
Russell up 5 and Dow up 245. We don't do anything anywhere until we are not in the office. Sounds enough.
I'm going to tell you right now, you can sell NASDAQ futures now, and they're probably going to be down 500 today.
You got technology.
I know.
500.
I haven't sold any.
Mm-hmm.
Mm-hmm.
I don't like selling them down 200, but...
That's a real man. Here's the problem. If you sell them down 200 and they're unchanged...
You eat yourself with your own phone. You just keep hitting yourself.
Okay,
You
but
know better.
when they're-
Volatility isn't upticking.
When they're
Dow is up.
When they're down 200...
Now they're down 205. You missed it, Saz.
When they're down 200...
Stink, you stink.
If you don't do anything, they're down 500, you're going to go, I knew it. I said they were going to be on 500 today. So what do you do?
I have to just do something, but I have to wait till they bounce at least to
Sell some calls or something.
Sell something. Yeah, come on, sell something.
I mean, we're going to be on an airplane tomorrow. I just want.
I know that's the problem. I got that for Thursday. You're on the plane. You don't want to be dealing with like what am I going to?
Just need them to rally back to down less than 200 here, so I can sell them.
What are they down 203?
218 now. He missed it.
Would you miss it?
What happened to him?
Right.
Let's sell him in a hole now. Come on. So sell him in a hole. So
and then Tony can buy him.
Even the S&P down 11. You're about to get the Russell on your side. Volatility up 2 cents for the first time all day.
It's all over, but
trading just a penny.
What's the one day VIX?
Well, do you know it's down to 6 this morning?
Is it up to 6.5?
Now it's a 7.
He's right. 703.
Yeah. Yep. No.
Not pulling the trigger yet?
No, but I'm not like it's
such a Johnny. I blended the two words that I want, the word I wanted to say and the word that I know I'm supposed to say. I blended them together there for a minute. I'm sorry, that was inadvertent. That was not planned.
Johnny. Yeah, I got it. All right, top 20 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. Time for you if you are paying attention. Reddit at a 19. And I did happen to say when your bond call yesterday, you're welcome. I did say you get short some of these stocks up here. It's a little bit.
Lordy. Oh
no.
Just rolling down calls in UNH. I mean, honest to God, you call yourself a trader.
Going from the 400s to the.
Unbelievable.
Oh my God. Look.
Number one, PLTR at a 17.
PLTR is getting crushed today.
PANW at a 12. Intel.
God knows it deserved it, but it's down $12.
We good?
Huh?
We good? Intel at a 40, Tesla at a 5, AMD at a 16, UNH at a 33, NVIDIA at a 16, CRWV at a -1, Hood at a 19, Meta at a 6, Home Depot at a 10, SoFi at a 13, Open at a 63, VKTX at a 31, IBET at a 37, TQQQ at an 18, Apple at a 16, MSTR at a 16, Microsoft at an 8, and Reddit, number 20, at a 19.
What do you say about that?
Dang.
And the floor is in. Southnorth sold NASDAQ futures.
Oh, no. What are they down? 200?
215.
About to be unchanged.
Okay. If he takes 6 points on these, I am going to go over there and hit him with the back of my hand.
No, I'm not covering him until they're down 300.
That's what I want to hear.
300.
That's what I want to hear.
Yep.
To the 1805, just making a new high, Southnorth.
Yeah, I mean, my positions are.
That's up 5 cents.
I don't have any bad positions, I don't think.
Except for the one you just put on.
I hope that's a bad position.
I understand.
Because I trade better from airplanes anyway.
How annoying is he?
Yeah, extremely. I'm so glad you mentioned extremely annoying.
How annoying. I can imagine. I haven't sat next to him and played for a while when he's trading. But he's like, yeah, how's Dave doing? Just scalped. You know?
No. First, he sleeps before the plane even takes off. He sleeps. Then he dings while you're trying to sleep. So I put the headphones on. And then when
he gives you the elbow.
And
look at this trade I just made. Could you post this, please?
Right. While you're sitting there sleeping, Bat.
If I make money, I ask him to read my P&L. Read this. What's this?
That's kind of true. That isn't.
Wait, Pat. How much? Where's the decimal? Oh, yeah.
Where's what?
Where's the decimal? Oh yeah, keep sliding up, right?
No, he's far from decimal days right now. Okay. Now we're trying to get a comma these days from him.
I'm not having a lot of comma. Well, there's not many comma days here.
Yeah, his comma days are long behind him. Cover now for a $10 loss or forever hold your breath.
No, I want them to rally.
Okay.
A little bit. And then because they're going to kill him later. I don't want them to go straight down.
Yeah, you don't want easy.
Easy.
You got to take a little bit of pain so that when it turns around and goes your way, then you go, nice.
Yeah, come on, what do you do?
Never a doubt.
You want to work for it.
Yeah, you can't make it easy, okay?
Mm-hmm. All right, so you sell one micro. Then when it rises 10 points, and you're out $5, and you sell another micro.
Then you give him the heavy stuff.
Then you go in with 2 micros.
And you give him the really hard
stuff. I can't look at you. We still got to talk?
I just had
You messed him up. You can't do that to him.
It was more of a
question.
I wanted your opinion on something.
You want his opinion?
I can't fill in for your birthday. Is that what you're asking me? Is that what you're asking me?
I'm good.
Yeah. 2 days.
2 days?
He didn't remember.
No, he didn't remember. It's a lot of August birthdays. Max's was yesterday. Levi's was on Sunday. Cole's was the 12th.
One.
Yeah. You remember Cole's birthday?
Yeah, I remembered Cole's birthday.
On his birthday?
Not exactly.
Okay. So, mine, a lot of Leos.
Oof.
Oof.
Oof. Even the S&P is down 17. Sosnoff should have sold those as the NASDAQ. Oh, down 236 now. You're positive. 20 handles.
Yep.
Winner.
Don't worry, I'm not taking the 20
Are you
handles.
shaking over there yet?
I'm not taking your 20 stinking handles.
Totally up 15 cents on its highs, 18.10.
Besides going to the special club tomorrow at United, where do you eat? I never fly United.
He doesn't have United.
Yeah, we're
There's
flying.
no special club.
You fly international, you get to go.
Oh, yeah. That's where we're meeting tomorrow morning.
Free gummy bears?
Yeah, international. I like to. It's funny because I know Mexico's international. I just don't think of it being international, like because you're just like going to another state. But is there any good food besides whatever's in the?
Are you traveling with us too?
No,
Yeah,
we're going Thursday. I'm working.
It depends what gate you're leaving from. If you're leaving from,
I'm sure we're at the same gate you are.
I'm just going to
It's the
explain.
same plane. Go ahead,
If you're
explain.
leaving from the B gates,
Yeah.
B9 is Frontier Grill. But if you're leaving from the C gates, there is no such thing as good food.
Right.
But we'll be in the club.
This is going to be insufferable. Like,
You know what? The only way I could imagine.
and you know what? The fact that you're going to be there, he's going to have to show off.
I know.
You know what I mean? You know how he gets? He has to show
God.
off. He has to show off. So I'm going to have a specialist.
I think Uncle T's going to keep you under control.
Yeah.
I've been there before.
I'm looking forward to it. I've never been.
It's
a place I want to
a
go.
great city.
He needs me.
You don't have any. You don't have any. I know.
He needs me the following week.
You
when
don't
we're
have
in
any
California,
problem
so
with
he
the
might be better.
altitude. I know you're gonna go. Altitude is complete bullshit. It doesn't mean anything. It's just like the field temperature isn't real. It's whatever the temperature is.
You know what he had the balls to tell me this morning?
Can't wait to hear this.
You can't wear jeans on the golf course. Like I've ever worn jeans on the golf course. He wears jeans and Crocs on the golf course. He goes, "Bet you can't wear jeans."
Uncle T brought him a pair of shoes.
That's it. He goes, and Bet, you don't have to bring golf shoes with you. I go, I don't have to bring golf shoes with me. I'm going to bring my own golf shoes. No, you don't have to bring them. They have them there for you. I go, they have them for you. For those who are a little needy, they have them for you.
How far is the golf course from the hotel?
Walking distance.
20 minutes.
20 minutes. That's not bad.
Yeah.
Does Uncle T stay at that hotel?
Nope. Just me and Bat. We got 2 queen-size beds.
2 queens. Nice.
Can you please send us some content?
We're going to take a quick night.
Beth, I will send content.
Thank you, Scott.
You're welcome. I got you. The 6th. She'll be taking we need her in the content, but we'll figure it out. Can we have the guy from
My
music?
wife's a little jealous that your wife's getting to go. I said it's his birthday, for crying out loud, and he was going before we were going. You planned it after we were going? You were bringing in the heavy artillery for your birthday?
I told you the story.
I know this, you know this, but I think my wife is listening,
You
so I didn't want
can't
her to
mess
know
up
this.
the story for
No. I planned this after you told me you guys
There
were
you
going, and
go.
then I said, let's
There
go
you
for my
go.
birthday.
There you
I'm sorry, I didn't understand you.
Oh, okay. My wife's a little jealous. She wants to go. Says, why did Tammy get to go? Tammy get to go everywhere. She got to go to lunch with you on Saturday. She got to go. You know how bad that was?
Sorry.
We're going to take a quick 90-second break and come back. We got more Tasty Live with Jenny and TP. They're going to write this ship.
Bring her, then you can go sightseeing for the day and I'll play golf.
Yeah.
We'll be back in 90 seconds. Peace.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the Bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
Oh, and then I
vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
Appreciate you. You're
Yeah.
good.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
The
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the TP and Jenny Show, live from the Tasty Live, the Tasty Live studios. Love your shirt, TP. Love your background.
Thank you, Jen. And yeah, so just to let everybody know, this is not an accident. Jenny and I had a long discussion last night about colors and what we look best in and what will look good against the background. And if you think trading takes a lot of discussion, not really. It's the whole wardrobe and look of the TP&J show, because this is huge. This is big times. This is big time.
So I like when TP called and said he's putting the dark wall with the cherry up behind him. But TP, I've got to say, it's just pure coincidence that we're both in purple. And I don't know if you know this, but Tom hates purple and hates when anyone wears purple.
That's why I wear it. Okay. Just to piss Sosnoff off. That's part of what gets me up in the morning. So purple shirt.
I had a whole purple section. Want to piss off Tom? Put on your purple shirt.
Yeah, Tom and I have been working. That is the one thing that we have never had in our history together of creating companies and products and all this stuff, logos and names and everything, is a purple logo. We've had red logos, green logos, yellow logos, blah, 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 blah. Purple has, because he's like the color guy. You know, he likes designing color. So no, purple is out.
Purple's out for him. I actually like it. I like purple. Anyway, thank you for joining me. You're filling in for Liz, who is moving her son into college right now. I'm kind of worried about her.
Do we have a Liz tracker? Do we have her like a live location for her as she works her way from Chicago down to?
She's in Lexington. She ran into some flooding on the way.
Oh.
The move-in time was 8 a.m. this morning, so they drove to Lexington last night, and I spoke with her last night. But I think it's going to be hard for her. You know, she is. It's going to be tough.
I told her to be brave. I texted her a couple days ago. I said, "Liz, be brave." And she's. You know what? It's now your kids. I'm sorry, Jen. Do you have one daughter who is going into college, right?
Well, no, she's only a junior in high school, but my son my son leaves tomorrow. He's going to be a senior in college. So he leaves tomorrow for his last year and he'll graduate in May. And I don't mean to sound mean, but I'm actually looking forward to him going tomorrow to school.
No, you know what? So, all right, long story short, my wife and I, this past weekend, couple of days, we went out to Santa Fe just as a trip. And we had my my older daughter graduated, she's getting ready to start working. My younger daughter is still at UT, and so she came home to watch the animals. So while we were gone, my older daughter had asked my younger daughter for help moving something, and my younger daughter was kind of like hesitant or whatever. So it was starting to melt down at the Preston Ranch. Okay. I didn't know. My wife and I looked at each other and says, oh, do we have to go back? You know, do we have to return? You never stop being a parent, Jen. And yes, sometimes they're adults now. It gets a little hard, you know?
Well, you've got one who's starting work. She graduated, she's starting work. I hear she did end up getting a good job. Is that correct?
So she's like my girls, one's a year younger, one's a year older, one's a year younger than your son. So they're all kind of in that same range. But yeah, she's getting ready to go. So I'm very happy she got the job she got.
In business, in finance.
Yeah. So the point is, my younger daughter, my younger daughter is the only one that can actually run the house and the animals and the ranch, all the stuff here. My older daughter doesn't really care. So that's why we have my younger daughter.
Well, you're lucky you have her because we had viewers in last week, viewers in visiting, and then there was the At Work by 11 show in Chicago. And one of our viewers, his daughter, he was saying his daughter wants to actually like have a ranch and raise animals. And that's what she wants to do for her job. I should connect you, the two of you, because I tried to say that the only problem with having that lifestyle is that you can never leave. You can never leave. Right?
No. And there's always something. It's always something that doesn't work. But anyway,
well,
that's my life. We're watching a nice little sell-off in the S&Ps, Ms. Jenny.
I know. But one stronghold, Intel.
INTC? Intel Inside. Let me pull it up here.
Yes.
Intel up $1.70. Did they have earnings? What's going on?
No, I think someone's buying so many shares. I read the news this morning. Someone's buying X amount of shares of Intel, but they've been in the news a lot lately with the new CEO. And it's just one of the products that Liz and I have had a long position in for a while, waiting for Intel to kind of come up. It's one of those products that's been at the bottom of its range while everything else was making new highs. So maybe Intel's finally going to have its day in the sun.
Yeah, looking at my trading across for the past, since January 1st, I am up a tiny amount of money in Intel. It's not one of my big P&L numbers. UNH, though, did you look at UNH? Talking about people buying stocks, Warren Buffett came out last week talking about, he's buying however many millions of shares of United Healthcare. Yesterday in my cherry bomb, I wrote about selling a put spread in UNH because the volatility was high enough and get a decent premium, third of the width of the strike, yada, yada. It's down 2% this morning, down to 621. So I got filled on that put spread.
Let's jump in the platform because people are asking. Let's see what we're talking about. So here's UNH. You said UNH is one of your bigger winners this year?
No, not one of my bigger. No, not one of my bigger winners. I did a cherry bomb in it yesterday, and they had a massive. So that the low you see, Jenny, like that low price right there, is the lowest it's been in about 5 years. So UNH has been pummeled. And that gap down just a little bit before that, they missed on earnings. So, and the rally up was, I think, mainly because Warren Buffett was buying, and the skew is still pointing north. The skew is still pointing up on the call side. So, yeah, okay, let's sell a put spread. So that's what I did. I sold the
spread. I don't know if you heard yesterday, there was one of the segments that the boys did was on skew. And when you look at skew and you see skew, does that tell you that, okay, if there's call skew in UNH, does that tell you that UNH is going to go up? And the results of the study were, that just tells you the velocity of risk is more to the upside. Not necessarily that it's going up, but if it goes up, that's where more risk is. There's more risk to velocity to the upside.
There's nothing, there's no indicator, there's no option price, there's no study, there's no nothing out there that's going to tell you whether a stock will go up or will go down or will stay flat or whatever. There's no wills, right, in direction, right? I can tell you that an option will decay by a certain amount, overnight or over the next week. But as far as direction goes, there's no, even though the news comes out bullish, or Jenny, how many times, we've talked about this before, how many times have you seen a stock beat earnings estimates and go down, or vice versa?
Right. There's no way to tell which way a stock is going to go.
So the velocity, all that skew tells you is, like they said, the velocity of risk. There's a term I've been using for years, is show which way the market sees risk. So in other words, where is the market afraid? What is it afraid of? It's afraid of a rally. That's basically what the skew is telling you.
It is afraid of a rally. So here, when we talk about skew, if UNH is trading 300 and I go down 20 points to the 280, that puts trading for about 470, 480. And if I go up 20 points to 320, that calls trading for about $6. So
there it is.
It's more expensive than the equidistant put.
That is perfect. That is as simple and as clear an explanation as you're going to see.
Well, I'm glad you think so. Yesterday, I'm working with my son before he leaves for college because his account he's getting busy. Like, his account is getting bigger, more positions, and he's leaving tomorrow. He's been home all summer, and I want to know that he's going to be okay on his own with his account when he leaves. And you know what he said to me yesterday, TP?
No.
He's like, I'm just going to have to go find some YouTube videos where I could learn about this stuff, Mom, because you're not a good teacher.
You know what? Jenny, I think I could run for president on the parent platform. That, have you ever been disappointed by your children? Have they ever let you down? Have they ever been ungrateful? I'm your guy, okay? I will represent you. I will get every single parent in America. Jenny, that's just wrong on so many levels.
And I said to him, many people in the world might think I'm an expert in this field.
Jenny, do you want me to call the kid? Do you want me to straighten him out?
So he's going to go search on YouTube and watch TikTok videos and watch YouTube videos on these options instead of my lesson.
See, I point my kids. My older daughter trades more than my younger daughter, and she has watched the Liz and Jenny segments because they're very clear, and the mic and his whiteboard and all that stuff. So what you guys do is I think the best way to become exposed to trading options. That's my opinion.
Well, the jury's still out, I guess, on the younger generation, but we will see. I know today you brought some slides. We've got a couple things that we're going to talk about. I don't know, John, if you're ready, if we can pull up those slides. Okay.
So one of the things I've been hearing about in the depths of the internet is talking about over trading.
And active trading versus over trading, you hear us say every day, trade small, trade often.
Right.
When we say trade small, trade often, are we encouraging people to overtrade? Is that what people might think?
Right. And so it's what I want to talk about and what I want to make clear is that our style of trading options, our approach to the markets is active and not over trading. Okay? Because that's an important distinction. I don't like over trading. Over trading is bad. But to some people on the outside, commentators, for example, will look at what we do and say, oh, you watch the Liz and Jenny show, you watch Tom Preston, you watch anybody, they're over trading. They're doing 20, 30 trades a day. That's over trading. Wrong, okay? Active trading is not over trading. So let's go to the next slide because I wrote some basic notes that I want to get your feedback on, Jen. World into active trading versus over trading. Okay. And what's the first with what's the first slide?
Yeah, let's pull up the slides. I don't think the slides are.
One moment, guys. Sorry.
Okay, no problem. While John's pulling. Oh, here we go. Active trading versus over trading.
Okay. So the first level. Active trading means you are engaged with the market. You're watching your positions, you're watching volatility, you're taking advantage of opportunities. Okay. Over trading is reactive. Over trading is, I just bought UNH and now it's down. I better sell it. Okay. Why is it going? I don't know. I'm losing money. I better sell it. What do I think is going up? Well, the S&Ps are down. Maybe I should try to buy Tesla. Maybe I should try to buy Apple. Okay. It is completely reactive. Engaged versus reactive. Okay. That's what we are.
I also think over trading could be people who, we always say you can't force trades, right? You can't force trades. So you might have people who open up their account and say, today I'm going to put on 10 trades, no matter what. And they're trying to find them. Sometimes you don't have to put on that. And I know people want to keep probabilities up. They want to keep the numbers up, but you can't force trades. So when people are searching for trades, especially in a low vol, when there's not a lot out there to do as a trader, you can't force it. And it's okay to have a day where you don't have you're not placing a lot of trades. That's okay. I want people to know that that's okay.
That's exactly right. And when you talk about over trading, when, and I love trading. I love it. I did a bunch of trades this morning. I'll do some more this afternoon. I love it.
It's
but
the one thing that we're going to be doing forever, right? It doesn't matter how old we are. We'll be doing it forever. Liz and I joke, we'll be 90 years old in the nursing home and we'll still be trading.
But here's the big thing about engage versus reactive. If I can't get a trade executed, if I can't get a fill at my price, I move on. And if nobody wants to trade with me this afternoon, I'm not going to push it. Just like you said, I'm not going to force a trade just to get a trade on. Okay. So that's one of the first distinctions I see in between active and over trading. The second one, and this is the big one, I think, is strategy versus guessing. So to me, an active trader uses strategies to his or her advantage. I know when I look at certain information, when I look at volatility, when I hear news, or even if I look at a chart, I'm going to use this strategy. Okay. I'm going to sell a put. I'm going to do a covered call. I'm going to do a vertical. I'm going to do a whatever versus guessing. I think the SPOOs are going to rally. Okay. I think UNH is going to bounce back up. Okay, you're just kind of guessing.
If people don't learn how to use options, they're always just guessing. If people don't learn, If they don't learn options, then they're just buying stock or selling stock. They're always guessing. They're never thinking about strategy because they're never having you can't have a high probability of profit. You can't have a high probability trade if you're not using options. So then you are always guessing.
Well, my belief and the research shows that really stock prices are pretty random. In other words, whether they go up or down is almost impossible to predict. Maybe somebody could do it. That's why I say almost. Maybe there's somebody out there who could just ride this stuff and make money just tick by tick. Great. Good for them. Great. I can't do it. Personally, I can't do it. I rely on picking strategy. So the whole, when you and Liz talk about, let's say, doing collars or doing covered calls or naked short puts or something like that, that is different. That is using strategies in certain ways. It is applying them in an intelligent, engaged way. Right?
Because
Versus
you're right.
guessing, it's, I don't know what I'm doing.
Right. Nobody knows. I mean, I started trading in the 90s. You started trading in the 90s, right?
Yeah. Early 90s. Yeah.
Both been trading for decades. And we know as like old professional traders that people can't pick a direction. So you need to overlay strategy on top of your positions.
Right. So what I'd say is there are correct strategies, not correct guesses. Okay. I can guess that UNH is going to go up, but that doesn't mean anything. I use the right strategy for UNH.
Hey, TP, I remember when I manage my own account, but I remember when I started managing my parents' account, and when I managed their account, I said to myself, I'm only going to pick, I trade a lot in mine, but for theirs, I'm only going to pick the ones I'm sure are going to be winners, right? I'm only going to pick the winners. And there you were doing worse than me because you just don't know. You just can't think that you know direction.
Right. So, and this last one is, and you just hinted at it, Jen, is you and I have been around for a while. Okay. We've been trading for a long time, year after year after year. And I think you and I both know, probably some of the same people, who have not survived.
Right.
Okay? And here's what it is. And I could name 5, and I won't, but I could name 5 people right now who thought they had it figured out. Oh, this is how I'm going to make money in trading. Mm-hmm. And they it turns out they don't. They're one-trick ponies, and they try to use that same trick day after day, week after week, month after month. Doesn't work. Okay, you have to adjust. So active trading promotes long-term learning. Jenny, how long have you and Liz been doing this show?
15 years. 15 years.
You do it every single day, and there's always something new somebody can learn watching your show. It is long-term learning. I come up with new metrics, new trade strategy, new things. Hopefully they get in the platform, but I have my own little tools that I like to look at to test out before they go on the platform. Mm-hmm. I've been doing this for 30 plus years. I always find something new. There's always something else that surprises me or something that says, oh, I didn't think of that. Okay.
We're always learning. And when we think we've got the holy grail, we figure out that, it's another trick to have in our bag, but it wasn't necessarily the holy grail. So for as many strategies as we've created over the years, things are still changing. We're still tweaking them, and we're constantly learning, and the market's always changing.
That's why over trading is just frustrating. Why am I tried buying this and it went down. I tried shorting that and it went up. And all I do is generate commissions and I'm paying a lot of slippage. I quit. Okay. Over trading doesn't last long. Over trading lasts until your bank account runs out of money. Okay. Over trading is frustrating and is not a career. Active trading is a career. You said a little while ago, Liz, Jenny, we're going to be doing this on our deathbeds. You know, my last bit of energy, I will reach out with my finger and hit a bid, right? That's active trading. So basically, I just wanted to sort of set this content out there as a defense of active trading. It is not over trading.
I like it, TP. I like it. All right. Thank you so much, John, for pulling those slides for us. That was a great discussion on active trading versus over trading. And speaking of over trading, TP, I want to look at a position. I want you to look at a position because Tom and Tony talked about this earlier. Having a losing trade. So you have a losing trade, and then you're trying to, make it back or do something else and throwing good money after bad and doubling down and doubling down and doubling down. And so people have been getting hurt lately in natural gas. So natural gas has been on, look at this, down, 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 and a big move down again today. So people have current natural gas positions on. Do you think that they should be adding to them, or should they just be sitting on what they have? Because that, I think that falls into, are we over trading if we keep adding to losing positions?
Not necessarily. I'm not a big fan of, dollar cost averaging in futures. I bought nat gas at, 360. Now it's down to 260. I should add to it and reduce my cost basis. I don't necessarily do that. I think let's take a look at the options. Let's just pull that up. And I like nat gas. I do not currently have a nat gas position on right now, but I have traded it a lot this year. If you open up, let's say, the 7 days.
So we have this put spread that's so deep in the money.
There's nothing you can do.
Yeah, if we want a new position, we just have to put on a new position.
Right. So what I would do, here's what you have to watch for nat gas. So right now, you're looking at the September future. And the way you can tell that is if you look in the upper left-hand corner right there, NGU5, U is the symbol for the September future. Okay. So even though they're August options, they look at the September futures. So look now, Jenny, if you leave that up like that, if you look at the 7-day options, which are the August, and they're trading in the future there, the last price is 2,735 or 2,730, whatever it is, right?
Right.
And if you look at the next one, which is the NGV5s, which are the Octobers.
Right. So then you go to October here where you've got October or NGX.
That's November. That's noves. So the X's are noves and the Z's are Decembers.
But September says NGV5.
Right. So that's trading at about, $1 higher or 10 cents higher than the Septembers.
So the 10 cents, when you're talking about 10 cents, 273 for the August expiration here, or 283 for the September expiration, 10 cents in natural gas, should people think like, oh, that's not that big of a deal? It's just
well, all that's just contango in the futures. That's the market's expectation of higher natural gas prices for the rest of the year. That's all that's saying. Okay, that maybe the weather's going to get colder. Yeah, maybe there'll be another shortage in Europe. Whatever, right? And they push the prices of the November, the October, the V's, the November, the X's, the Decembers, the Z's, they push them up until you look at the Januaries. And so what's important is even though you're looking at an August option, they deliver the September future. So those options expire before the future does. And it keeps you out of delivery and things like that, messy things like that. So if I wanted to maintain a bullish trade in nat gas, I would go out to the 37-day options and can you just base it on the delta? So I might sell like the 265 puts,
So the 33 delta here. So the
something like that. Yeah, something like that. And it's kind of, I mean, if you can afford to do a naked option in there, okay. Yeah, I could see that.
Well,
a couple of $1,000 of margin though. So maybe it's a little expensive.
natural gas is big. And honestly, like I will say, just for me personally, like down here, Liz and I were talking about selling naked puts in natural gas because you're getting below 3, you're selling puts in the 2 handle, and that seemed pretty good. But now we're down to 2.7273, and I'm glad I put mine on as put spreads instead of naked puts. So you just don't know.
100%. And so I think, especially if this is just another trade in your portfolio. In other words, I'm not a natural gas expert. Maybe you are, Jenny. I don't know. I know you pretty well, but I don't know. Maybe you are, maybe you aren't. And, maybe you live and breathe nat gas. I don't. If I put a trade on a nat gas, it goes in the pile and I move on to the next trade. That's active trading. Okay. So I would look at what I would hesitate to do is sell a call against that put spread.
I know. And that I think, and I know a lot of people like to roll down calls or sell calls or whatever, but to me, in my mind, that can fall into the trap of over trading, where you're kind of panicking. I know today I was buying back calls at a loss that I had sold in Intel against something else. And today I was like, oh man, I feel like it's going to, I bought them back for a loss today because sometimes you just get in emotion things on, like, oh, I sold this call because I needed that credit to pay for something else. And today I thought, oh, geez, I'll just take those off as a loss. And then that falls into the over trading category.
I agree 100%. And that is an excellent description of it. That and I've been doing this for a while. Yes. You can say, well, gee, the stock is way down. I'm going to defend it with a short call. I can't tell you the number of times, Jenny, when the stock has just bounced back, and it doesn't create a huge loser in the call, but it's a loser.
It is so hard. It's hard to say, like, okay, if we just sit here, I could use that extra 50 cents or I could use that extra $1. But Liz and I were talking about it just last week in some of those solar stocks that were so low. And we had Enphase Energy, and we thought, oh, maybe we should get this 50 cents on the call to help us a little bit. And then the news came out in the solar industry, and they all got a little bit of a bounce. So to me, it's not worth the 50 cents or whatever you're going to get.
So if you go back into those 37-day options, and let's see what kind of numbers we get for, let's say, the 265, 255?
Yeah, I think we were getting we were getting $330.
Yeah, so the basic metric is, for me, and the dev team is working on getting the P50 number working for futures options, so good for them. If I can, so this is $1,000 in between the strikes. The NG, like you said, Jen, is kind of a big product. So max loss is $670, max profit is $340. Add those together, it's $1,000. A third of that, $330. Right? And the buying power effect is because it uses the TIMS method. It's like portfolio margin. It actually looks at the risk of the option trade.
I never heard it called the TIMS method.
Yeah, they switched it from, I think it's TIMS. They switched SPAN. Talking to Scott Sheridan yesterday, and he made fun of me for talking about NASDAQ being the regulator. He says you're showing your age. And so I'm trying to hang with the cool kids, Jed.
So the cool kids know that it's not spam margin, it's Tim's margin.
Something like that. And it's like I notice spam, okay? Because it's like I built the span, I coded in the span margining system into the platforms. I know it is span. I think they relabeled it. Anyway,
Liz calls it span too, so I'm looking forward to the day on the show when she says, well, I know it says max loss 670, but span margin is only using 348. And I'm going to say, hey, Liz, get with the cool kids. It's him.
Be careful though. Don't use me as a reference for cool. Okay. So the point is though, my max profit is about a third of the width of the strikes. And I'm making $2 a day in theta, which is pretty good. That's like what, 0.6% per day on my buying power. Okay. So yeah, if you were still bullish on nat gas, and hey, let's look at the skew. So in the SEP options, 2737 is right in between a 27 and 275. So if you go down from 27 to let's say 25, right, and it's trading at 88 cents, I just look at the ask price. Pick the bid or the ask; it doesn't really matter. And then 2 points above for the 275, so the 295s
are trading for a double, double.
The risk is to the upside. The velocity of risk is to the upside. And you can disagree with that. You can say, no, TP Jenny, you're wrong. It's going to go down. Okay, sell a call.
What the people is what the buyers versus sellers are telling you, right?
Right. So I think if you're bullish, selling that 55-65 put spread is a viable trade. I like that trade.
I like it too. Getting 340, max loss 660. Now, on the heels of the don't throw good money after bad. If you have a losing trade, don't keep dumping money into it. Our 7-day trade is a defined risk trade. There's nothing we can do with that. There's no rolling that. And we just have to leave that. But to think, okay, maybe natural gas is getting to another extreme and adding something on, I'm fine with this.
Yeah. So that's natural gas. If you look at so I've been trading a lot of grains. If you look at something like ZC, corn.
Okay, I'm glad you brought that up because I met someone Thursday at our office meet and greet. They said all they really trade are the futures, the softs. That's what they're really just trading. And do you think there are people who can just day to day just trade these futures instead of jumping into the equities and the options?
You can. I mean, I think, if you are really tied into the grain market, and I know farmers who raise corn and soybeans in Illinois and who raise stuff in Texas. I know people who are really tied into it, but they are more, I would say they're more reactive. In other words, corn's at 381. How much can I get per acre of corn? It's like that. They hedge sometimes. They'll say, okay, well, I sold some futures up at, whatever, $4 or whatever. So they're trading it. But I think for most people, getting comfortable with one product is a mistake. Okay. Thinking you have corn or soybeans or natural gas figured out, you probably don't. You're better off, like we've said on the network for years and years and years, we are product agnostic. We don't care about the product. It matters liquidity first, volatility second, probability third, that hierarchy. I don't care how much you know about a stock or a future or whatever. If it's not liquid, I don't even bother with it. Corn, fortunately, is liquid. But I would suggest to that person, if you're having success with corn, great, do it. You can probably build a higher probability portfolio by looking at across sectors, equities, bonds, currencies, whatever.
Well, I like that. I appreciate that because there were so many viewers together talking together about what they're doing. And some people are just trading the zero DTs and some people are just trading commodities and some people are just doing this. And everyone's trying to find what they're comfortable with. And that's okay. But I hear what you're saying of creating a more well-rounded portfolio by having a little bit of everything.
And the world changes. I don't know if those zero DTEs are going to continue to pay next year. Maybe they will. I'm getting paid doing them now, but I have to be prepared for when they don't, because I've seen that happen before, Jen. You know, I've had trading strategy things that have worked and then they stop, and I still have bills to pay.
Well,
So
today they're probably, because where did we open? Where were Spoos when we opened? Down two? Down? I don't know.
yeah, they're doing like they were up a little bit on the day. They were up a little bit. Now they're down. I didn't know that was going to happen.
And with the ball so low, you're not getting very far with those 0 DTs, with the VIX.
No, I've been doing the iron butterflies, and I've been getting about $8 for the at the money butterflies in the SPX, and that's enough. And
That's great. That's great. Those at the money butterflies for $8. That's great. But when you're looking at, wider spreads and going further out, you're not getting as far as you used to, or you're not collecting as much as you used to.
No. So let's take a look at corn, just for the sake of discussion. It bounced back. I was long some corn. I'm still basically up a little bit of money in corn. And again, looking at the skews, so if they use the September futures I would go into the December at this point.
Oh,
the September options based on the DEES future. I like the 38 days more than the 66 days, only because I think maybe I can get enough premium in the 38 days. So if the DEES future is at 404.50. And I can see that right.
So that seems like a much bigger jump than natural gas, because here we're at 381 in the 3-day versus 404 in the 38-day. That seems like a much bigger jump than what we saw in the difference in the natural gas futures.
Yeah, and part of the reason you see that is it's a much more expensive product. So nat gas is what, $2.60. This is $400, and I understand it's pennies. I get it's 404 pennies, but the point values are bigger in more expensive products.
Got it.
So that's what that is. But I would go into 38 days. And what you can do if you want to get cute with it, Jen, is you see in the upper left-hand corner where it says ZCU5. Type in the symbol Z5. Yeah, at the top of the symbol field. Change the U to a Z.
ZCZ5.
Yeah, /ZCZ5. And that just loads up that future, just to make it a little bit simple.
So then you've got the 404 on top here, the bid and ask that matches the 404 in that future.
Yeah, it just makes it a little bit easier to figure out what the at the monies are and things like that. So you don't have to
people can get a chart which tells you Z is December, this letter is this month, this letter is this month. Is there somewhere where people can get that?
If you go to, I'm pretty sure the CME has a description of that. And then, just kind of write it down.
And did you ever trade at the CME?
No, I was at the Board of Trade. I was the 10-year note options, 30-year bond options. I floated back and forth. I was mostly in the 10s, but no, I was never over at the Merc.
I had one of my backers was from the CME. So I was at the options exchange, but one of my backers was at the CME. So I would have to go there just to meet with my backer every once in a while.
Yeah, I mean, we had people, so while I was at the Board of Trade, we had people, one guy over at the Merc. But the thing is, all the exchanges were kind of connected. When I first started as a clerk, I was down by the SPX bit, and the people on the outside were the phone clerks, and all they did was quote SPOO prices all day long from the Merc. And so if you needed a hedge, trading the SPX, your hedge was the S&Ps. So if you needed a hedge, you would relay that to the SPOO clerk. And they were on phones or on headsets, and they'd talk to the people. It was a constant phone call, and they'd talk to the people over in the S&P pit at the Merc and do the trade. So there was always this connectivity between the exchanges.
So crazy. It's kind of how we got reconnected with the SIBO. Kathy Clay, who's at the SIBO, she used to be on a phone on the P Coast. And when we would call in trades over to the P Coast, she would be the one answering the phone. And then when we met back up in Chicago, we're like, oh my gosh, you're Kathy from the P Coast. We're talking on the phone so many times.
I don't think I've ever done a trade in the P Coast. I don't think I ever have. So anyway, let's look at corn a little bit. Let's open up the 38-day options. I want to look at that skew and see if there's something I can do in corn. 404, it's biased towards the 405 strike. So let's just use the 405s and factor that in. If I go down, let's say $15 to the 390s and up $15 to the 420s,
so this is like, this $10 wide is really like a $5 wide, just so people know.
right. So if I'm looking at the 490s versus the 15, the 420s, the skew is pointing down. Because you got to factor in this. So the 404 is closer to 405. So you'd think the calls would be a little richer because of that, and they're not. So the skew is pointing down on the put side for corn. So,
but by very little. By very little.
Yeah, it's not screaming. But let's just see how much you get for a short call spread in corn. Let's just see.
A short call spread.
Yeah, let's just take what numbers do you get? So selling let's say the 10-15 or the 20-25 or the 20-30, what kind of numbers do I get? If the difference between that is about $500. So what's 1/3 of 5 is about $1.60 or something?
You need $1.60. It'd have to come way in. The only way you're going to get $1.60 here is if you do both sides.
Well, pull it down to the 410, 415 and see what I get.
So that's like a 250 wide. Here, this would be a $5 wide where we're getting $1.40.
Yeah, so I would get 1/3 of the width of the strikes for the 410-15. For the 410, 415. If I were bearish on corn, that's the call spread I would sell.
Just this little 410, 415, like a 250 wide?
Yeah. And I get 1/3 of the width of the strikes, 61% probability of expiring worthless, and I collect 35 cents of theta a day. That's how I think about a trade. If I were bearish on corn, which I'm not necessarily, but that's how I structure. That is the strategy part of active trading, Jenny.
You ever think of like, oh my gosh, it's been raining so much. How is that affecting corn? Or is it over? Is the corn season over? Like, are we in August and it's over?
No, I think is my really limited understanding. And I don't know how much corn you guys have been having up north. But corn late in the season is bad. So early and middle of the corn season, it helps the corn grow, right? It provides the nutrients, whatever it is. Corn grows with the rain. But if it's too late, after the corn has already tasseled, all that stuff, and rain makes the corn wet and reduces the yield.
So
something like that.
If we're getting so much rain, which we are
they?
Oh yeah. Yeah. Well, I mean, we've been getting a lot of rain here. I know I told you Liz is driving through floods, driving to Kentucky, driving down to Lexington.
So in that case, if you think there's going to be a worse crop in corn and you think it might create a shortage, by all means, sell a put spread in corn. And if you load up the 85, 95, do I collect 1/3 of it with the strike? Almost. Almost. I would keep it tight. I would do 5 points.
So that's close. On a 250 wide, about $82, $83 is a third. So it's getting 75 on a 250 wide. That's
yeah. And so that's why it's being an active trader. Keep your positions small. There's no reason when they're giving you 5 points and 5 cents or whatever it is in between, like 5/100ths of a cent in corn strikes. Use the tight strikes. use $160 of buying power. Okay, if I have a $2,000 account or a $5,000 account, this is how I can get my feet wet trading futures options. I don't have to take a huge amount of risk. I can have a max loss of $175.
Tomorrow I want to have
$75, but I can do that.
Tomorrow I want to have a discussion of, as your account gets bigger, how, scaling up versus changing products.
Yeah. So we can
talk about that tomorrow, because it's a discussion that I was trying to have at home here, which if when you go from like if my son, he went from a $5,000 account and now he has a $20,000 account, I want him switching the products he's been using to I don't know. It's a discussion and I want to get your input on it because it's right.
Let's make sure we talk about that tomorrow, because it's something that people do run into. And even if you don't have a big jump like 5,000 or 20,000, but let's say 5,000 to 5,500, right? I've made $500. Should I be taking more risk? Let's talk about that.
Right. So I'm putting that on the docket for tomorrow, because I have some questions for you.
So do we have any
tweets,
ugly recriminations or rants on Twitter?
We never got
Frank Walsh is back in Rhinelander. Yay, Frank.
Finally back in Rhinelander. I hope that Frank didn't kill all these animals that are on his wall.
I hope he did. I hope he did and had a nice moose steak.
Let me see what else we've got coming in on Twitter. Okay, Ashvin. So Ashvin puts these, so kind of like you're doing the Iron Fly. He does the Iron Fly in ES, puts it on around 8:30. He's Eastern time. So if he's putting around Central time, you're Central time in Texas, right, TP?
Yes.
So he's putting these on around 7:30 p.m. Central time, and then gets out of them, in the morning before the market even opens. He's been doing these nighttime trades. What do you think of these?
I think that's great. I think if you can get good fit, and the markets in ES are not bad overnight. Okay, I do overnight, try to do currencies and things like that overnight a lot. But I am all for this type of trading. And one of the important things, and I know Liz and I have talked about this, but I wrote an article last week about the day trading rules, changing the day trading rules, and reducing it from $25,000 to $2,000. That those are for equities and equity options. The pattern day trading restrictions hit you when you have less than $25,000 in your net lick, and you do more than 4 trades in 5 days.
But it doesn't matter. They don't have that rule in ES.
Correct. ES, you escape that restriction because it doesn't cover futures options. If this were SPX, and I think because he did it overnight, no, I think the overnight is the same trading day for day trading purposes.
Oh, because he put it in on one day and got out of it the next day.
Yeah, but it was at 8:30. It was Monday night after the Monday close, right?
What if people are putting on the SPX like today? Then that doesn't matter.
If they put something on right now at 10:52 a.m. and they take it off tomorrow in the SPX, that is that iron condor at 9 o'clock, and they sell the iron condor, and they buy it back this afternoon, that's 4 day trades. Even if you make money time and time and time again, that's a day trade, and you get restricted.
But pretty soon that PDT is winding down, going from, like you said, $25,000 to $2,000, correct?
Right. Right.
Okay, so then again, here comes Eric. They're all this. He's in the SPX 0 DTEs. Happy Tuesday. IV rank is at a 12. Put on 2 5 lots. So he's working on this. People are still doing them. And Jackie, he'll sell put spread. So SPX 6420 sell put spread, $40 wide, done for the day, $83 win. So he's doing a $40 wide. He's taking just a very small percentage of his profit quickly. So if he took $83 off of a $40 wide put spread.
That is great. The return on capital for verticals is relatively high. If you can, and this is being an active trader, an engaged trader, using capital efficiently. Even if it's $40 wide even if it's a $40 wide vertical, making $80 on it is a relatively high return on capital.
So $40 it would be like the 6420, 6380. So they're big, but all he needs is a little pop up to get out of it quickly.
Right. So let me pull up my calculator. So let's say he puts up $3,400. If I make $80 divided by 3,500, let's say, that's 2%.
In the morning.
Right. You can't get that at your bank. Okay.
Oh, and Bob on Fire comes with the earnings. So today, Target, really maybe Baidu on this list, though maybe Target and Baidu are the only two that we might trade. I think we have a position in Target, and I'll take a look just in case because they do have earnings, and we might. Let me clear this out. Hold, please. Let's see. But I'll come back to it. And I'll check if I have something in Target. If we have something in Target, it's probably just. Oh, here we go. Oh, a baby calendar. Is a baby calendar. A viewer tweeted us. They put on this little calendar, this 106 calendar for earnings. So I'm going to leave that. We don't have any real terrible risk in here. Just this little calendar that was only 30 cents. So I'm not worried about that.
And then Baidu is the only other thing I'll trade in there too.
And I don't know. We don't have anything in Baidu right now. 32 rank, $89. Maybe I'd sell puts in there. But
what's the 85.93 strangle?
The 85.93 strangle is giving you $1.85, but the buying power in Baidu is high, $2,700 for an $89 stock.
So if you what put are you selling there? The 85s.
Mm-hmm.
So if you bring that up to the 86s,
I'm not gonna do. I
know, but let's just see what the numbers are, and then buy the 84 put, and buy the 95 call, and see what kind of credit you get for that. 86 cents. That's a lot. You could widen this out significantly and get a third of the width of the strikes for this iron. That's how I would trade this. That's how I would trade Baidu.
But I feel like TP lately, iron condors on earnings, we've taken some full losses on them. So we've been preferring to, if we're not happy or getting far enough on like downside ratio spread or short put, or we'll just wait till after earnings. Because our last iron condor we did on earnings, we got a full loss on. We've seen a handful go beyond their expected move, or even when you're doing this, we're just right there, right at the expected move. And today's only Tuesday.
Right. But if you want to trade Baidu, if you're thinking about it's going to be neutral, you can widen this out, and your max loss is what, $113.
Right.
So yeah, the full loss, it sucks. I get it. But put it in context, the max loss is $132.
It's not terrible.
It's I'm not saying you should do this trade. That's not my point. But this is how I would look at trading Baidu.
But I think part of that's a mental game. And in my mind, okay, last week we did this same thing in AMAT, full loss. And sometimes we'll get in a a habit of just saying, and Tony Batista says this a lot too, like, I'll do an after earnings play. I'll do something in Baidu after the earnings come out. So I don't, just because sometimes earnings, they're not our bread and butter.
What did you say, Jenny, earlier when we were talking about active versus overtrading? You said, don't force a trade.
Don't force a trade. Yeah, you know what? I liked our corn put spread. I liked our natural gas put spread. I don't know if I want to buy Baidu and Condor through earnings.
All right. Fine, Jenny, fine.
So we're out of time. We're not going to get to everyone, but I just want to give a shout out to everyone. Ajit, we love you. Mikey, our Polish warrior, we love you. He says, hey, Jenny, hey, TP, loving the Intel Zebra the last few days. With the big pop, I added a short 27 call. Good job, Mikey. Jack Tucker, two tranches of 0 DTE. And
Guy's a machine.
Oh,
my purple rain. Thank you, Polish warrior. I can't believe he's dead. Not Polish warrior. I can't believe Prince is dead.
I know. Well,
very sad.
Thank you.
Purple rain. That was like the anthem in the 1980s. Like 1983, whenever it came out.
TP, it was wonderful having you. Thanks for joining me. What color are we wearing tomorrow?
We were told not to match. John is a tough boss. He has a very specific idea of the look and feel of the shows. So yeah, and I've got my Jenny wardrobe. So I think to keep John happy, we'll wear something complimentary, but not the same.
All right. Thank you so much for joining me. Everybody remember to trade small, trade often. Don't overtrade. Just be an active trader. We will see you all tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
I have made a deal with the devil and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is until proven otherwise, which basically means buy every dip because they've been gobbled up pretty quickly. And even like the tariff stuff, at the bottom of the tariff stuff, I was like, ooh, maybe things are different. And now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive, really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just coming with us for the next hour of the day. My favorite hour of the day, get to spend it with my buddies, Mike and Thomas. Thomas, good morning, sir. How are you?
I'm doing good. I'm a little congested. I think I got a little cold or something. It's weird in the summer, but maybe from the kids or something. But
this is where the tasty variant starts.
Yeah.
Yeah.
This is
I'm
patient zero.
I'm the vector.
Yeah.
COVID doesn't matter anymore, though.
Yeah.
That's done.
Yeah, I know. But around this time, I don't want to say start of fall, but coming soon. Like around this time, you get a couple people that are sick, and then it commingles, and then there's.
That's why I wipe down all my stuff every Monday.
No, you're good with that. You're good.
Got to do it.
Yeah, we got rained out overnight, though.
Yeah, that's crazy.
Pretty wild.
That was wild.
I mean, he had like a mini tornado going on at his house.
Did you?
Yeah, we had like a microburst or something. I think like the flue vent for my furnace got messed up somehow because there's just water coming down into my furnace. So I had to stay up until the rain stopped at like 1 a.m. because I kept on having to mop it up and everything. I had to turn the power off to the unit.
Wow.
So if anyone out there, if you're a roofer or know anything about HVAC, message me because I'm going to be trying to look through all this myself later today or this week.
It's a common occurrence. We had Vecchio because he had the branch that fell on his.
Yeah.
That I think he got covered by insurance, which is good.
It's never ending.
Yeah, you just had to replace your HVAC.
Well, not yet. I didn't do it yet.
Oh, you haven't done it yet?
No, I got to do that.
You're just gonna.
I think it's just gonna go out in winter.
And then you'll just freeze.
Yeah.
Yeah.
We'll see. I got to get someone to look at it for sure.
Yeah.
To let me know, do we have to replace this now, or can I just fix a part and then extend it a couple of years?
Okay.
Yeah.
I usually go until it breaks. And then,
Yeah. Makes sense.
A lot of HVAC guys will be like, "Yeah, you need a new unit."
Yeah.
Oh yeah.
You should get it through me.
I'll be like, "Ooh."
Well, I'm gonna have to consult one of the maintenance guys in the building.
Yeah, and
We'll
see.
We'll have him look at it.
Mine is
fresh.
Well, no. It's running well. It's great, but it's I think it's 15, 16 years old. So it's about that time.
In there.
It's
Gotta
getting
do
there.
the maintenance.
Yes.
Yeah, clean it out and stuff.
Yeah.
Yeah.
Very good. Mm-hmm. Well, crazy little market we got. A little bit of red.
It's crazy.
Does it scare you?
Not really.
No. This is just par for the course.
I mean, Vol's not moving. So until Vol moves, which will happen on a bigger downside move.
Mm-hmm.
Big move in Bitcoin.
Yes.
But 27 points in the E-minis.
Nothing. Just a little paper cut.
Just a day off. That's what it is.
I'll give a quick little market update. We got E-minis down 28. It's the low of the session here. They've had about a 30 or 40 point intraday range. I know yesterday was the tightest intraday range since March of 2024. So it's been over a full year. That was the tightest range yesterday. Giving it up a little bit, down 28 here. We're sitting around that 64.50-ish mark. We're at 64.40 right now. NASDAQ down 250. It's the weakest of the group, down a little over 1%. A couple big moves underneath the surface. You got Meta over the last 2 days, down 30, 40 handles. NVIDIA as well. down $4 and change. Some of the other chip stocks like AVGO down $8. I closed out of that call spread we did last week.
Same.
You did that too. Palantir, another one that's kind of just been ripping faces off to the upside, down $10. Even some of like the secondary ones like Reddit, I saw was down $8, $9, $10 at one point today. So definitely a little bit of weakness in those high-flying tech names. The Dow basically unchanged right now. I know Home Depot had earnings. That's kind of holding it up a little bit, as well as UNH, which had a good move over the last couple sessions. It's now down $7, but that probably helps as well here. The Russell down 14, so the Russell and the NASDAQ really the weakest of the group today. Oil selling off a bit, /CL 61.99. It's had about a $1-ish intraday range today. Has been weak over the last 2 weeks or so. Volatility futures actually up about 31 ticks here. 1826. You do have the vol roll that happened this morning, so volatility futures rolling to the night, or maybe it's after the close today. Vol futures roll today, so you are looking at a higher volatility here. Very steep contango still going out to the end of the year. Bonds up 13 ticks here. They've had some whippiness over the last couple sessions. They were in the 113 handle, now in the 114 handle, so they've rallied from the lows. You have gold down $11, $12 here. It's had some sideways action, some nice vol contraction. That iron condor that we put on last week, I took a couple bucks out of that one today. Vol coming in, couple days of sideways action. It was perfect kind of situation for that trade. Silver as well down 60 cents, and as Mikey alluded to, Bitcoin down $2,700 on the futures. Spot down $1,300. With Ethereum down $35 as well. It certainly feels like a little bit of a risk-off session here. You have JPOW later this week. NVIDIA, I think earnings Tuesday of next week, if I have that correct. That's kind of the other big event, the 27th after.
I think that's Wednesday.
Wednesday of next week.
Yeah.
So maybe that has something to do with it, a little bit of a haircut from the highs, but you think it's all JPOW driven?
Yeah, I mean, he talks on Friday or Saturday. I think it's Friday, yeah. Jackson Hole weekend.
Ooh.
That's the one that's closed door, though.
Yeah.
I think
And
so.
then
That's the Fed Rager, the Jackson Hole.
Oh, yeah, where we talk about like what they're ordering for lunch.
Yeah.
Do they fly something like really good in for lunch?
They just net jet everyone in.
Yeah.
And it's just a big thing.
Oh, it does look like he is speaking from Jackson Hole. So at 10 a.m., 9 a.m. our time on Friday. So.
Did you guys get an invite or?
No.
Not this time.
No, not yet. Not yet.
Yeah. Maybe next year.
Yeah. It is a good gig, though. It seems like, Yellen's doing good. You do the speaking engagements, like half a mil an hour or something like that.
Sure, yeah.
Right.
You say a couple things at like a commencement ceremony.
Just throw it in ChatGPT.
Yeah.
Read it off.
Seems like a pretty
It always boggles my mind how much they get paid just to speak for like 30 minutes, like.
The deep pockets for some of these endowments and such.
Yeah.
Maybe that's the problem.
There's a lot of problems. But I'm sure it's going to be a grand old time for everyone there.
Yes. I think we're looking at a little bit of just a risk off. I think to your point, the volatility not, being super high.
Yeah.
Is kind of telling you to expect some chop.
Yeah.
But it is nice to see a little bit of like a pullback in some of those, like the Palantirs and the Reddits and the NVIDIAs. I mean, can't go up every single day.
Yeah, I'm long Palantir, so I'm not liking that. But
yeah. I mean, who knows? You could be back at 200 and
we'll
this thing moves $5, $10 a session.
Right.
It's not like a shock. It is a funky psychology type thing of like, nobody bemoans the 10-point up move on no news of just, fervent buying. And then you get a 10-point down move, everybody's like freaking out,
That's how it works.
Yeah. My
That's
Twitter feed is just, it's instant.
Market's dead.
Yeah, it's
everything's
instant.
dead.
It's instant.
And then we're back at all-time highs in one day. Something interesting that is moving though is the FedWatch tool. Only an 85% chance now that we get a 25 basis point cut. So that's come down 15%.
Yeah.
They're pumping up that no cut probability, which would be kind of wild, all things considered. That would be a surprise, obviously.
And I mean, the market's moved down a little bit since hitting like the peak, dovishness.
It was almost 100% last week.
Yeah, I mean, like 95, which is essentially, when you look back in history, I think Vecchio has put out those stats before. It's a sure thing.
Yeah, of like over 65%, I think is the number, or 60%. They usually go that route.
Yeah.
You think there's going to be any surprise?
There always could be, so...
Still got a month, too.
Just have to listen. Yeah, I mean, there's still a jobs report. There's still inflation data, I think, so, yeah.
Lots of things could happen, but we'll see. We'll see how the market reacts here.
Quick little walk through some of the trades, because I did a bunch this morning. Mike and I were both out yesterday, so I rolled to a calendar on my IBIT position, so I had the crab trade, rolled it to a calendar at the 70 strike, October, September. Basically a scratch at this point. Walmart and CRM are new trade ideas. Both have earnings this week. Those will be in the cherry picks as well, so you can see a little bit of my thoughts there. Close out that gold position, close out the Dow short put that we had. Bought in some risk on Palantir. I had that upside broken wing butterfly, so bought in the risk there in my Johnny Trader. Did that in Oracle as well, and then I closed out the AVGO call spread that we got from Fast Market last week.
Yeah.
Two sessions.
Yeah, and the AVGO, I was also trying to close Adobe. So both of these, Adobe and AVGO, both seeing moves in the right direction, but AVGO, like we both closed it for less than 50%, but you have to realize that this is in the earnings cycle still. So the tail premium in September is not going to go away until after earnings. So you have to accept less than 50% profit prior to earnings, unless you want to hold it through earnings.
Yeah.
Like that's just what it is. So still, it was like a 25-30% winner in a couple days. So it's ahead of the expected decay curve anyways.
Yeah.
But that's why I didn't keep it on. Same with you. It's just like you're not getting any more out of this until after earnings.
Yeah.
You might get 30-40 cents if it continues to sell off, but the tail premium is going to stay bid until post earnings.
Yeah. It's uncommon for, a call spread to move 75 cents, $1 in just a couple sessions.
Yeah.
I hate to overthink these things. Like I think everybody gets caught up in the exact 50% or 21 days or whatever. Sometimes you want to book a winner. It feels good. Take some risk off the table. But when somebody moves so fast, it's pretty easy to just kind of cycle through that and then look for something else, something new. If you have new ideas, please post them in the chat for us.
Yeah.
I'll take them.
Speaking of the chat, I've got the Cherry Picks newsletter link in there.
Thank you.
Get that for free. Comes out today.
I'll go out later this session. And also, we will be hosting the show tomorrow.
Indeed. And Thursday.
And Thursday. But tomorrow is What's Your Assumption? So if you want to pitch some trades, you can do that at tastylive.com/assumptions. You can make them a little spicy.
We're yes men. We will say yes.
I think we did all 10.
We did do all 10.
Yeah.
So we won't poo-poo your trade idea.
No.
Unless we're already in it. That's really the only case.
As long as it's liquid.
Yeah.
Tom says that too, but Tom poo-poos some of them. We won't. As long as it's liquid, we're game.
Yeah.
Let the probabilities play out.
Yeah. So give us those trade ideas.
Yes.
But yeah, lots moving in the futures market. We're talking crude oil today and the prompt spread.
Ooh, okay.
Something new, something fresh. I'm already in micro crude just with a long contract, but
yeah, I've got an iron condor in CL.
Yeah.
That is closer at the money on the put side. I might just close this call spread.
But maybe we'll make an adjustment after the slides today.
Cool.
Yeah. I mean, I also put on a iron condor, so playing for for some range with a little bit of give, So we'll walk through the slides, talk about how the market is doing.
Sweet.
A few notables. We got this ceasefire talks going on. Trump, European leaders, Putin. Putin hasn't said if he'll meet Zelensky yet. Seems like, some people are getting a little too optimistic about this ceasefire or end to the war already. We really have to wait to see what Russia does. My assumption is that they're not going to jump right into it. They're going to let it grind out for a little longer.
No doubt.
I don't know. We'll see. Ukraine's asking for these security guarantees, like, a European-led coalition security force, something like that if Ukraine gets invaded again or Russian aggression, and then supported by the U.S., which sounds like providing maybe air support or intelligence along with weapons deals and stuff. But the market's been selling off on it. I mean, geopolitical risk has been coming down. We'll be talking about the prompt spread. So, just since the start of August, we've lost around 50 cents in the prompt spread. So that backwardation has gone from near $1 to right now down around 48 cents. In the prompt spread, it's the difference between the current contract and the next month or the next active contract. And, that's the difference between them. When you're backwardated, higher prices in the front end means usually demand is, outpacing supply, things like that. So this model is just looking back to like 1997 or 98, and it's seeing what is the correlation between where the prompt spread is at and where oil prices are at. So, according to this linear regression, with a prompt spread of 50, you're going to be more near a $70 per barrel oil price instead of where we're at right now, which is right around 61, 62.
Yeah.
So, just taking that at face value, you'd assume there's upside in the price of oil. However, the prompt spread has been decreasing, and it's done that for 2 months now. So it looks like the outlook for the supply dynamic in the market is that we're going to get a more balanced market or maybe even go into surplus. There's two big forecasters, OPEC, the EIA. There's the IEA too, but it's a little less relevant. Still, people cite it and stuff. But OPEC is forecasting demand growth of still 1.3 million barrels per day for this year. The EIA is a lot more modest. They're forecasting 800,000 barrels per day of growth. So EIA sees a surplus going into next year. OPEC still forecasting a pretty strong market. I mean, you cut the difference and you go with maybe 1 million, 1.1. You're still getting a pretty balanced oil market going into next year. And, my take on it is we're not going to see any huge increase in oil prices, and nothing to like 80 or something like that. However, we're already down quite a bit. We're trading right above 60. In July, we were up trading at 70. Back in June, we were trading almost near 80. So we've had this steady decline. We're past the strong demand season now where you're getting driving, you're getting power generation burn from oil. All that's over. The last few weeks, I see it as kind of a geopolitical premium coming out of the market now that, Russian oil can come back into the global market. Right now, they're selling a lot of it to India. And Russia wants to put their oil back on the global market because they don't have to sell it at a discount anymore. Because India knows, hey, we're only one of the few places that has enough capacity to take in your oil, but you're going to give us a better price on it because we are the only buyer. It's just market economics, as everyone knows. The less buyers, cheaper. So all that considered, we could go to the next slide. This is just putting in a little bit easier to digest way. Prompt spread of 50. We're trading at 48. We've given up a little bit, but I think that slide disappeared there. I think it was 71.92 a barrel. If you're going back and assuming the linear regression, going back to 96 or whatever, it's 72 a barrel. So trading around 62.
Based on where the prompt spread is now.
Yeah, based on where the prompt spread is now, assuming 50. Now it's at, since the show, it's 48, 47. But yeah, there we go. So 62.19 when I did this data this morning. I don't see this as where price is going to move up to come into correlation with that prompt spread. Since we've been declining in the prompt, markets are getting softer.
I was thinking that there's less downside given the move that we've had. So
right.
There's, like we might not get to 72 again, but 65, 66, something like that is probably more realistic than like a 55 or 54 or something like that.
Exactly.
Where your risk is, is more to the upside.
Yeah, so right around 60, psychological level. In May, we broke above that from a multi-month low. We got these multiple intraday buying points at 60. So we haven't tested that level since May 30th. We're coming close to it, another $1.92. But that's kind of where I'm putting on my trade, 59.5 for the Iron Condor, giving myself a little bit more upside. Room on the upside. So I think we, range trade bounce around here. Pretty much my view is 60 to 68, keeping in there. Say these talks fall apart, maybe we get some premium coming back in, go up to around 64 to 68. It's hard to say, it's hard to forecast exactly what's going to happen, especially when you're basing on individual decisions, which is Putin, making what he wants to do, et cetera. So right now the market may be being a little bit overconfident in this deal. But that said, I just wanted to show one other slide. This is pretty interesting if we go to slide 3. So August 15th.
I think we'll get it up in a second. I think there we go.
Yeah, let's go to slide 3.
There we go.
All right, so this is pretty interesting. Hurricane season started, June or something. However, there's something called peak hurricane season, where historically, you get these violent hurricanes, these Category 4s, 5s that impact the Gulf Coast. And historically, they're from August 15th to like the end of September-ish, early October. But this chart shows you the OVX premium or the volatility premium during hurricane season. Mm-hmm. If we look at 2008 to 2024, you don't get that premium. The same thing, or you get a little premium if you take out 2020. And then if you do peak season, going back to 2017, the OVX during hurricane season is 37.11, non-hurricane 36. Mm-hmm. And that's based versus an average of 36.46. Okay. So, higher OVX typically, not necessarily lower prices, but bigger moves in it based on the OVX. So we're in it now. We see this, hurricane off the East Coast. That one's not going to affect all the Gulf Coast refiners. A third of refining capacity in the U.S. is concentrated in those Gulf states. So when you get a hurricane even threatening the Gulf Coast, not even hitting it, that usually bakes in a 5 to 10% premium in the OVX, which could change the price of oil by, I think, $2 to $2.50. So just be cognizant of, watching these weather models, being ahead of them before everyone knows, before they're on CBS and everything. And trading based off of that you can get a little more volatility in this season for the next month or so.
OVX currently at 33.35, so it's certainly low.
So we're underpriced right now.
Well under there.
Yeah. So you get these models starting to show maybe there's a significant hurricane in the Gulf Coast.
Yeah.
You get more volatility.
But I would think that would be upside volatility. No?
Yeah, you go up in prices because you're taking all that refining capacity offline.
Yes.
The offshore oil rigs, they have to shut down because it's a safety issue. You don't want people on them. You get export lanes being blocked. You get all kinds of problems. But yeah, that's what I got. I'm going with an Iron Condor, playing this with a little bit more upside room.
Yeah, closer at the money put spread. I'm with you. I'm wrapped around there. I actually went with my my current position that's wrapped around the 59 handle. I actually widened it out a half point. So $500, I did that for an 80-cent credit on the downside. So I'm synthetically buying a little bit of extra delta here into this move lower, very small. And then I'm also trying to close the call side for a couple ticks, like 3 ticks at $30-ish. So I'll do the whole thing for like a 5-cent adjustment. But leaning a little bit long, but again, kind of playing into the sideways/up thought process here.
Yeah. I'm in at these levels too. I've got the micro crude contract at like 64-ish. So just leaning long.
Any of the other, I mean, some of the things that stuck out to me because I have a lot of positions on it, some of the grains and the ags, corn, wheat, soybeans all look not great.
Yeah, not too great today. I am long soybeans and corn. For corn, I have a put spread 390, 400. So, trading 403. I'll keep it for now. Kind of not happy or not sad about it. Soybeans, I have a call spread.
Okay.
It's been doing pretty good up until today.
Yeah.
But, definitely some people taking their positions off in the grains today.
Mm-hmm.
And then we got wheat, wheat down. Yeah, all the ags moving in coordination today.
Yeah.
Live cattle, we're still going up. I'm still long live cattle with a put spread at 225, 226.
It's like a meme stock. I didn't know we could meme living animals.
Right. And we are near resistance for breaking out again in live cattle. So
and I've been seeing stuff on Twitter too of like
get your live cattle while it's hot.
There's like commentary on live cattle and just beef prices in general. Like,
yeah, you don't usually see that.
It's a new phenomenon.
Yeah,
for sure.
Yeah, we have the high at 232.75 from August 7th. We are really close to that now. We are, almost closing, like 10 cents away from closing at a record high here.
Yeah.
And this screw worm is still advancing. They are flying north. So
they are genetically modified.
Right.
Like whatever they were trying to do with those to make the non-reproducing.
The anti-screw worms?
Yeah.
No, they were the sterile ones.
The sterile. Our sterile screw worms didn't do their job.
Yeah, that's sad. They're not working, but it's good for my position.
Yes.
If this screw worm gets into the U.S., I've seen some forecasters say live cattle at 300, things like that. No. That's pretty crazy. I'm not sure about that, but if it gets into the U.S., definitely like 250, maybe above that. So I think this is a trade where the tail risk really benefits a long position because if these flies do, still a small chance, but growing chance.
And the reaction is obviously.
Yeah. And then you get panic. You get all these ranchers, doing crazy stuff. You get a demand surge because everyone wants to get their cattle out before these flies get into their cows.
That'd be great. And 30% increase in already expensive beef.
Yeah. We've been going to pork more at the house.
Wow.
So
times are changing.
It's pork chops every night.
Pork chops are great though. Underrated.
They are great.
If you can do a pork chop good, which most people can, it's a lean meat. It's easy to dry out. If you get it at a restaurant, 9 out of 10 times it's going to be dry. But
pork loin too. You get like the ones that are like pre-marinated and stuff.
Yeah, those are good. Rosemary. All
Costco probably got all that stuff for you, Mr. Costco boy.
I'm going there today.
Is like Tuesday Costco day? Do you have that like on the calendar? It's Costco day.
No, it's just whenever you need
just
to.
running out of stuff.
That's
I also think lean hogs is maybe good for iron condor here. You got decent volatility. It's in the middle of its range that it's traded from the July low to the August high, so that might be a good trade.
Beautiful. So yeah, we're all long crude oil in some way, shape or form.
Neutral long.
Neutral long.
Neutral long.
But yeah, interesting to see some of these other products moving. I need corn to move higher. I need wheat to move higher.
Yes.
And I need natty gas to move higher. I need crude to move higher.
Yeah.
Everything.
What's the deal with natty gas? I got long another one of the micros this morning. I scalped out of it last week.
Okay.
I just got another one today.
Natty gas is killing me.
This is a tough one.
It's the weather models have gotten even colder for the Northeast, and now into the Midwest for into early September. It's looking like really mild. It's just horrible.
Great for football season though.
Yeah.
Yeah.
And good for us in general.
Just our sanity.
Freezing. Yeah, it was good. But for the wallet, it's not as
for the micro natty gas contract, not good.
Yeah.
Good stuff. Well, we can pop over to the YouTube chat now. See plenty of people in there. We got some HVAC people in there.
Yeah, that's good. You got
just find out your problems, toss it into ChatGPT or Grok, and you're good.
That's true. But that's no different than like YouTube.
Right.
Like, you know, I mean, right?
That's probably what I should do first. Is just like type in my Nest Air thing on YouTube. There's probably a video out there.
I'm sure.
Get this part for 17 cents and just plug it in.
I went up on the roof in the rain and I put a garbage bag over the vent because I thought like the vent got stuck open, the flap for the wind. So I was up in the rain, lightning all around me. I put the garbage bag on, rubber bands around it, go in, still coming in. So I think it's like the where it meets the roof, the flaps.
Oh, okay. Like so got like a crack.
I gotta go up there with caulk or something.
Yeah.
But yeah, message me if you know anything about this. I'd appreciate it.
Be safe up there, Thomas. All right, we need our Thomas Tuesdays.
I have life insurance.
Okay, good.
Yeah.
All right. Perfect.
Lovely. Yeah, crazy times in Chicago. Yeah, yesterday you could feel the electricity. It was like the hairs were rising on the arms type thing.
It was loud too.
Yeah.
Some of those were loud.
The earth is mad at us.
For releasing sterile screw worms.
Yeah.
That's why they're like, don't mess with my screw worms.
The anger of God.
Yeah.
Yeah.
All right. How about a trade for reversal in AMAT?
Oh, man.
I'm already in AMAT from earnings gone wrong.
Okay.
A 190 call, 60 days out. Trading for $130. Nothing to do there, but yeah, I mean, if you want to play for a reversal now, if you weren't in that trade, it's very cheap to do so from an IV perspective.
Yeah, IV rank at 2, bottom barrel.
Yeah, like a 165, 175 diagonal spread or a short put spread. The world is your oyster.
Yeah, I was looking at a short put spread, but it's kind of I was looking at the 55-50 or the 55-45, trading at the 55-45 10 points wide is $1.80-ish. With 30 days to go, it's just like, nah.
You can make that in a 3-point up move with the diagonal spread.
Yeah.
It's hard to sell premium in 30% IV equities. That's basically it.
It wasn't like an AVGO or Adobe.
Yeah.
Where you have really high implied volatility. Yeah, I might just do like a little Johnny $5 wide call diagonal. It's almost like a calendar. I know we've had some people ask for the analysis mode here, but when you look at this, like your risk reward is pretty small. $100-$200 is like your absolute best case scenario over a couple weeks. Got about a $3-4 buffer to the downside. I am going to do that. We'll do something small here. We'll see if we get filled. 460. All right. There we go. I don't mind grabbing a little dip, you know?
And that earnings killed them.
Killed. But it didn't, SMH, there's just like, it's just a constant rotation. So you get AMAT, which I think was a top 5 holding or was prior to the move. AMAT has a huge move, and then NVIDIA is up, and so it's a big old nothing burger. I mean, you look at the chart where, $3, $4, $5 off highs, and AMAT just had a, 20% down move.
I like SMH here. I do.
As a little dip buy. I don't know. I'm on the other side. I have slight short delta in NVIDIA going into earnings. It just fit, you've had such a run.
Yes.
Don't you ring the register? I'm sure the earnings are going to be good.
Yeah.
Can't it already be baked in?
It could be. You could see
But
that.
I thought it's been baked in for 20 points.
Yeah, I know. This is just an insane world we're in.
I got a little put crab trade.
There you go.
Yeah. October, September.
What determines buying power? I just put a link in the YouTube chat to a bunch of help articles if you want to scan for some calculations, but it depends on what product you're trading.
Yes.
If it's undefined risk, though, it's usually 20% of the strike price or around there if you're selling that option. If you're trading a futures product, you have a lot more leverage because you don't have to put up as much buying power relative to the actual risk of the product itself. But yeah, if you click on that Help Center link, you can peruse those articles. There's a bunch of calculations in there if you want the actual answer.
It can change too. I mean, there's specific things that can change it from volatility, and at a certain point, if volatility is very, very high, it might even be cash secured. There can be like stuff like status, if it's a hard to borrow stock or if there's a high borrow fee, those will change the buying power. It can also be broker to broker. So, it is somewhat variable in that, some brokers might have higher requirements, some might have lower requirements. Those are all things that can kind of influence it as well.
When you have a long zebra on, when the price goes down, do you roll down the untested side? Assuming you have a call zebra on, if the price is going down, if anything, you can just buy back the short option. Rolling it down doesn't really help you. But really, that short option was sold initially to remove the extrinsic value in the 2 long options that you bought. So if that option is losing a lot of value, we just close it. And then that also frees up another 100 delta potential if you get the reversal after that.
Yeah.
Because now you have 2 long unhedged calls. Same thing with the downside of the puts.
Yeah. It's hard to, the zebra the hedge is baked in already. Where, you're offsetting your extrinsic value. So if you are wrong on direction, that option hedges you, as well as just the fact that you don't have the uncapped risk in that those long options can only go to 0, and so your position has you have the baked in long put if you're doing a call zebra. If you're doing a put zebra, you have baked in long call, and then you have that hedge of the which is a hedge in itself, but you have the hedge of the short premium that you sell, which is going to go to 0, and that hedges you in some regard. But after that, you can't cover everything. E-mini's down 37, low of the session. Bitcoin down 3,000. Gold and silver getting killed. Do you have any interest in either of those, Thomas?
I'm long silver right now, and it's killing me.
Okay.
The continuous contract is just starting to trade under the 50-day SMA, and that's the level that saw intraday support back in August 1st. And
the continuous contract, you can pull it up if you use the $ for those watching. If you're wondering, you can pull up the $ and then the futures. It strings all the futures together because they have specific expirations, so they technically are different products, but it gives you a little bit of a view there. All right, so you're long silver. You got that iron condor too in gold, right?
Gold, I don't think I'm not in gold iron condor anymore. I think I was in that a few weeks ago. I got out.
Oh.
Yeah.
Is it time to buy some silver? Do I do that?
You could. Throw a zebra on there.
Yeah. I mean, bonds moving. Rates coming down. You would think that this is, a day where gold and silver would be a flight to quality.
Yeah, it seems like this is less of like, a scary market and more of just deleveraging, getting some positions off. You got,
just throw them back on.
Waiting for Jackson Hole Friday.
Just to
Throw 'em
just
back on.
leverage long as soon as Jay Powell is done
Right.
speaking.
Yeah.
Or maybe even just the moment he opens his mouth.
Yeah.
The anticipation.
Good afternoon.
Yeah.
Smash.
What's the tie color now, or
purple?
No, but he
Purple.
debunked that.
Did he? Okay.
He was asked about the purple tie. Purple tie, time to buy. But he wore a purple tie every time.
Well, I mean,
he just likes
he wears a purple tie because it's a blend of red and blue.
Neutral.
You see?
Like that.
Color neutral when it comes to Democrats and Republican.
All right.
That's gotta be the logic. Someone told him to wear a purple tie for that reason. I can tell you that for a fact.
I
Without knowing
love
any
purple
information,
ties.
that's a fact.
Yeah. Purple tie always hits in a wedding.
Yeah.
Yeah. Purple tie was one of my secrets to grossing your Autoplex car sales.
Pink shirt, purple tie.
Pink shirt, purple tie, purple shirt, pink tie. Very floral, very loud.
Yeah.
He was the flower.
I was this beautiful flower in this room
Sales
full
environment.
of, smoke smelling old guys.
And then there was
and
you.
then there was me, this
Saying,
young
"Please,
flower.
Buy a car for me, please.
Yes, support my college fund. Yes.
Incredible.
And then I gouged them.
Yeah.
Just kidding.
Then you're like, you need that 2K salt under the bed.
I told you that. Never do the salt. Never do the undercarriage salt. It's nothing.
What is that?
It's in Chicago or like Midwestern places. They always have upsells of do you want the salt
protection
sealant
package.
undercarriage salt sealant? You say no to all those. You do not take any add-ons. No added warranties. None of that. None of it. It's all never pays out. So
good to know.
That was always one, but it was the because the salt every year. It's the snow, the salt, the rust,
salt.
Yeah, you don't want to have any problems. It's only $1,500. Don't do it.
No.
Don't do it.
Sounds like $1,500 you can spend on silver leap options.
Yeah, or something else in general. Yes.
I just got into a call zebra in silver, long the 33, short the 34, $240 in October.
All right, I like it.
Easy.
I think I might
We'll
do this is basically delta neutral, but skews a little bit long into the future, like a 1x2. So long a 31, that's basically a stock position, and then selling 2 at the money calls in September. Doing it for $1.50-ish debit. So it's almost like a long or a short straddle at the money, but you have some positive. You have some delta to the upside as time passes. We can show this on the analysis mode. So you have a little bit of extra risk to the upside. Well, it's kind of spicy.
It's pretty spicy, I would say.
Like
pretty spicy.
Maybe the 34.5. That's what I'm gonna do. 34.5. It's basically a crab trade, sort of.
Yeah.
All right.
Water from your furnace might be a clogged AC condenser drain line. Tap on the metal above the drain hose to see if it's filling up with condensation water.
Check that, actually. So my condenser line is under the furnace.
Was that the first thing ChatGPT told you?
Yeah, probably. It's coming from the vent on top itself, so it's dropping through the roof. And the drywall is starting to get a little saturated now, so I know it's outside of the flue vent, not coming in.
Okay.
Yeah, we'll see what happens.
The plot thickens.
The plot thickens.
I appreciate the advice, though.
Good start.
I'll double check that.
Let's see. Do you think They will eventually add grasshopper futures.
Yeah, someone said lean hoppers.
Lean hoppers.
Yeah, I mean, bugs are the new, protein in some parts of the world.
What would be the thing that if they're like the next future, you think? Futures contract.
I mean, water. People have been saying water for a while. I think there is a futures water product, actually. I think it's just not like a liquid.
Pun intended.
Yeah.
It
was not intended, but there you go.
If we don't trade the water futures, they're not liquid.
Yeah, it looks like there is water futures.
I'll be here all day.
I mean, Lake Powell, Lake Mead, you see it, it's like dried up. They're finding bodies that they haven't found. And like they've been there for 50, 60 years from the Vegas days where they drive people out, tie a cinder block to your feet.
Yes.
Just dumping them.
Yeah.
That's crazy. That is crazy. Goldman Sachs trade.
All right.
Long a September 19th.
Okay.
745, 740 put spread.
Long it.
Okay.
Well, that's a nice trade if you have.
And short the 720 put.
So a long put, in the money long put spread and a short put.
Yeah.
So a Jade Lizard.
Looks like it.
So this is definitely a Jade Lizard. You're doing the long put spread instead of the short call spread. I would suggest for the next time you do this to just do a short call spread. You'll have tighter markets. If you look at these markets here, on the in the money put, you have maybe 80-ish cents, and on the short put, you have a 50, 60 cent wide. Both these options are about 50, 40 cents wide. So you have a tighter spread. If you just do the call spread here, you can see the exact same risk profile on the chart as well. So I would do that next time, but.
Yeah. Considered rolling the 720 to October. Yeah, if you want to stay in it, you certainly can. It's just 30% IV. You're not getting a lot of value for the risk. But if you think it's going to go up.
This one I can sell a call spread.
That could work.
IV is not high. Do they have earnings coming up? No. You do like the 750, 760. I know it's down $11, but the stock has done nothing but go up. Let's do that. I'll see if I can get like 250. I'll let that work. Okay, interesting.
Workday and Futu puts into earnings, expecting a 10% drop on both.
Whoa.
Yeah, Workday is tomorrow. Nope, Thursday after the close.
Workday.
$220 stock, $17 expected move. Not too high there. If you want to play it to the downside, long October, short the 3-day. If you're doing a diagonal spread, something like that. They're pretty cheap, like a $6 diagonal spread for a 10-point wide.
Stocks had a $50, $60 down move. I don't know.
Futu's, I've never traded Futu.
I think it's a Chinese stock. It's an ADR, so.
I'm off that.
You're off that train.
I'm off the Chinese stocks.
That has earnings on the 20th. Like the 160. These markets stink. Some of these are 50, 60 cents wide in the weeklies. I'm going to pass on both those. I'm playing Walmart to the upside for earnings, neutral / bullish. And then CRM, I sold an out of the money put spread. So again, neutral / maybe the pain is already baked into the stock that's down, $150-ish. Looks kind of like a workday chart.
Yeah.
I just sold an out of the money put spread. I did the 230, 220 in September. And then in Walmart, I did crab trade type setup, buying the September 102. And then I sold 2 of the 105s in the weekly. I bought the wing just to cap the risk. And I did that for a little over $1, $1.20-ish. So you got very minimal risk to the downside, even if it
What's up with Palantir?
Nobody says what's up with Palantir when it's up every day. You know, Thomas, it's sometimes things go down.
Yeah, it's
sometimes.
It's a painful one, though. 14 points to the downside. Stinks. Do I do something now?
Yeah, maybe some people in Congress are selling it or something.
Oh.
Probably.
Yeah.
Am I going to ride the micro-netty gas trade? I just bought a new contract in the V because the U is going to expire soon. But yes, I'm just holding, not closing at the lows, and then watching it rip 10% the next day. Can't do that again.
Yeah. Palantir is getting interesting for some short premium. Maybe another day here, and then we can put on a strangle or put ratio. Maybe a put ratio. Let's see what we could do with put ratio. 50. Oh, you can almost do it down to the 35. 150, 140. I have the upside call butterfly. If we do bounce here, I might give it another day.
Fair enough.
See if this little sell-off continues.
How about an Adobe Iron Condor? 305, 375 shorts for September, 10 points wide.
So slightly short delta. I don't mind
It's
it.
okay.
I'm short the 325, 315. Do you have the same trade on? Or did you
I
do
just
like
have the put spread. 335, 330.
Oh, so you're closer at the money but tighter.
Yeah.
Okay. All right. This one leans a little bit short, this Iron Condor. In direction, you have basically, you have a couple deltas, but directionally, you want the stock to kind of be inside/down into earnings, which are on the 11th. So about the week of earnings or the week before. So I'm on the other side of this trade, but certainly one that's sticking out to me as one of the higher implied volatilities on the board. NASDAQ down 300.
Crazy.
Big move. Let's move in there.
Intel.
Palantir, the biggest mover. PLTR, MSTR, AMD, AppLovin. Then you got Intel, PanW, which had earnings this morning on the upside.
Pablo has a covered call on Intel, short strike at 20. 3 days left. That trade's done.
Yep.
It's locked out. You can't roll the strike up.
No.
It's just
too far in the money.
Yeah, too far in the money. If your goal is to roll the strike up, you got to do it before it goes to the money, which you might have had an opportunity to do it a couple weeks ago or a week ago, but it's just been gapping higher. So you would have gone in the money either way, even if you moved it up to like 21 or 22. But if you want to get back into it, you could certainly sell a put. If you got rid of the shares, you could sell a put below the market and then take more shares later. But if you're trying to keep the shares, you can roll from 20 to September.
Yeah.
There's nothing there. There's no premium there.
Move on and sell the put.
Yeah.
Sell a 24 strike put for $1. Get a down move, you're back in.
Yeah.
Continuous up move, you keep the dollar. I was just looking at like a call ratio spread there or something like that.
Yeah. If you're trying to move it up, you got to do it before it goes so far in the money. It's just you just can't do it now unless you're paying a pretty big debit.
Could do something like the 23.5, you sell that put, or even the 24. You could do the 24, you sell the 24 put. I'm just thinking new position here. 24 put, you do the 25-27 call ratio, which you're doing for like 30, 40 cents. So you're netting out $1 and change. It gives you a break even above 30. And then you have a break even on the downside at like 22 and change. Talk me out of this. $400 in buying power.
I like it.
All right.
Why not?
Played this game.
Yeah, Manny, the Goldman Sachs Jade Lizard, we were looking at the wrong expirations, but it doesn't matter. It's the same thing. The 10-day spread is trading for $4, so you could keep that on if you want to try and get an extra $100 out of it. But yeah, if you're rolling the short put from the 3-day to October or September, it's totally up to you. It's just a matter of whether you want to keep the risk in the trade.
Yep.
One more here. Strangling Coin, 283.70.
I got some long delta here, feeling a little bit of pain. I did an upside crab trade, so I am playing the upside here. If you don't have a position, certainly could look at Strangle, but it is a capital-intensive trade, so
yeah,
that's out of my wheelhouse, unfortunately.
I got the 350 calendar spread on last week. Long October, short September at the 350 strike. It's down $100 right now, but any kind of rally here will be good.
Yeah, huge move.
Plenty of time for that to work. Yeah. That's it. Thanks for tuning in. If you got any further inquiries, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place in the morning.
Yes, tomorrow and Thursday.
Morning show takeover.
Yes.
It's going to be great. Send us what's your assumption.
tastylive.com/assumption.
Yeah.
Get them in now. Now.
Yeah, I'll throw a link in the YouTube chat. But yeah, we'll see you tomorrow morning. Have a great rest of your trading day. Peace.
Peace.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
You get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's...
No.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned around to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we pour the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot, because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work, and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish, for sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me.
Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We're finally back. It's still Tuesday, August 19th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, good news. The chat's open.
The chat is open. Look, I was at the After 11 show this past weekend, which went really well. Greatly attended show. And somebody pleaded with me about the idea of keeping the chat open, doing Futures Power Hour. And look, we're doing everything to make that happen. So, like you said, we don't want to appear soft, right, Chris?
I did not even know that it wasn't open, for the record. Didn't realize I was being treated with kid gloves around here. We can leave it open. Jamal, that's good news, though. We want to have the ability for people to continue the conversation, so we'll make sure that stays open during the show now. So thanks for reaching out, right? That's the important thing. Something's going on different than you want it to. We'll adapt. We'll give you what you want. You want more content? Delivered.
Give the people what they want.
That is the message around here, at least
yeah, I mean,
if you're a bear today, not if you're a bull.
That is the message today. I mean, I don't. What do you think about what's going on right now? Is it even a big deal, or is it just kind of like something you just brush to the side?
Well, what's hot is cold today, Jamal. That's a good thing or a bad thing. There's certainly signs of rotation in the market. If you're trading the Russell at Dow Jones, you're not having as bad of a day as you are trading the NASDAQ on the long side here. Just snapshot, where have we been this year so far? This is as of 1:04 p.m. Eastern time, so 7 minutes ago. Some of these numbers might be slightly different. But compared to where we are today, you can see the things that were bright green on the prior slide are a little bit darker red here in today's session. So it's a day away from tech. We're seeing NVIDIA suffer. We're seeing Amazon, Meta, Netflix suffer. On the other hand, Home Depot up, consumer defensive names are up. This is a week for the consumer staples, if you will. We have Home Depot. We also have Target, TJX, BJ Company, right? So when you look at this, Jamal, and you see that the winners of 2025 are losing today and everything else is kind of pulling itself up, Does it scream to you that this is a bear market, or is this just more sector rotation as we get ready for Jackson Hole?
Well, I mean, every day that we're on here and now that the chat is open, I will not always comment on things I see in the chat, but I have to comment on this one because it was a funny one. Like Mark Aguilar said, it's markets in turmoil time. It might be. I mean, given the current market that we've been in, this is certainly a markets in turmoil. But in reality, it's just rotation. I think you're absolutely right. I mean, that's largely what I've noticed. I'll tell you, especially since we're looking at individual names, one of the things that I have looked at over the last couple of weeks, about 10 days ago, I was looking at names in the S&P 500 that were down big on the year, the Lulus of the world, the UNHs of the world, obviously before it made a move, and just looking at names that were, honestly, my criteria was if you were down 25% and maybe you were at least $100 billion company, right? Because we're not doing this with $20 to $50 billion companies. We want the really big ones that eventually somebody like a Warren Buffett will see and say, hey, this thing is down too much. And so I did that. I looked at a couple of names. I didn't execute on all of them. UNH was one of them. And I got out actually before the huge move. But I'm bringing this up because the Lilies of the world, the Lulus of the world, like almost a CRM, almost all of those names are up, are the ones that I was looking at more recently. And I think that just speaks to the type of rotation we're seeing today.
There was an interesting note I saw over the weekend. I think I brought this up with Tom, or maybe it was with Ilya yesterday, but the note was effectively UNH has been the short leg of a levered long tech pairs trade over the past several months. Long NVIDIA, short UNH. UNH's bounce is going to provoke traders to have to close out a number of their tech longs. Seemed a little wonky a few days ago. Today's action, perhaps an interesting context window with which to view it. Maybe we got some people who are getting knocked out here.
Yeah, I think so, just a little bit. But I tell you what it creates is an opportunity for me to put on my NASDAQ trade that I've been talking about for the last couple of weeks. I know we're further away, but this is not that big of a move that I don't feel that those strikes warrant being put on now.
Well, let's talk about the move here, because the S&P 500 is finally catching a little bit of wind to the downside. The key level that we've been watching the past few sessions was 6468.50. Jamal, it was the high that we have here back at the end of July. And with today's action, that gives us a more decisive break below said level. The uptrend that's carried us here from the non-farm payrolls low likewise broken. And there's the ever so slight uptick in volatility. VIX is back above 15.5 here. So some movement along the curve. But when we go back to the NASDAQ, that is the loser, 1.36% here. NVIDIA being a big loser, Meta being a big loser, as we just saw from that prior scan. You mentioned, though, that there is a trade that you've been thinking about, and even though we're further away from it, today presents an opportunity for you. What exactly are you thinking here?
So I just put it on. I just executed it in the NQ contract, in the Z contract. So, but specifically in the October 31st expiration, right? So going fairly far out. But I've teased this idea for the last couple of weeks of getting long the 25,000, 25,500. And again, if you feel like this is a blip on the map, then we eventually return to highs and even higher, even in new all-time highs, which could include 25,000. This is that trade. I know it's a low probability trade, but when you have low probability trades, you got to go further out to give your idea some time. And again, this is not necessarily tasty methodology per se, but this is sort of how you play momentum names. This is typically, and this is not a momentum name. Obviously, this is more of an index, if you will. But NASDAQ has been strong for quite some time. We know that. And if for some reason we do start to turn around once again after a little bit of a downturn, which again, this could be day one of 3 days of downturns. So I am going further out to execute this idea. But if we for some reason see 25,000, this trade helps pay off.
One question that I have thinking about this week in particular, I posted to Tom and Tony this morning. Are we thinking that the market may be, and we've already seen 42 points of movement today, but are we thinking that the market may be a little bit underpriced for Jackson Hole through the end of the week? Granted, we were looking at about plus or minus 60 points through the close on Friday earlier this morning, and with the market moving the way that it is, we still see that there's 66.8 points here. I raise that because the past 5 meetings, 2020, the market goes up 19.25 points after Powell's speech. 2021, 39 points. 2022, minus 141.5 in ES. 2023, plus 28.25. And then last year, plus 58.5. It gives you an average move of only 0.7 points, but a standard deviation of 80.82. It feels like Powell's underpriced for Friday at only 65 points still. Do you find it difficult to be directionally neutral down here, given these levels of volatility and the event risk around the corner?
I don't find it difficult to be directionally neutral, but I don't necessarily feel like we're going to move that big. I feel like while there's been movement around, the only other thing I can think to compare it to is Fed Day, right? And while there's been movement around it, I feel like the moves haven't, and I don't have the data in front of me to remember, but just off of my memory, I don't feel like the moves have been as stark as they were over the previous 2 years for Fed meetings. And so I guess I'm treating this Jackson Hole meeting with sort of that same type of feeling, right? Like I'm not expecting a huge move. Maybe it is underpriced to some degree, but I don't think it's underpriced by a standard deviation, if that makes sense.
Thinking about how the market's behaved recently, Jamal, if we're eyeing up potential areas of support right now for the dip buyers out there among us, 23,400 in the NASDAQ gave you a swing high here on August 5th, and the pullback that we had on the 7th treated that intraday, intra-week zone of resistance as support. You see something similar here in the S&P 500, where we're kind of getting into that zone right now, where if there's a place for support, this would be a good stopping point. Otherwise, maybe you have to look a little bit lower, closer to 63.80. 63.80 becomes a much more compelling zone for me if I was thinking about a long trade, only because I think about the uptrend here from the mid-May lows onwards. That would give us a retest at that support line, a support line that is held up in the most recent retest. So if you're a trend follower, you have to buy in at first blush. Below 63.80, though, this thing becomes pretty slippery pretty quickly, and then you have to start to look back to that early August low at 62.39.5. We'll call it 62.40 just to round up. Either way, though, you can't say that the uptrend's over, but we're in the second half of August now, second half of August where volumes tend to be exceedingly thin. So if the market just catches wind of anything that it really doesn't like, it's simple for a short-term setback here.
Well, that was the next thing. Sorry, you got it.
So I can't help but think, though, given the dispersion between value and, well, tech, this isn't the worst thing in the world if you want to be bullish long-term. It's not a complete red day. Sector by sector, a lot of the rate-sensitive stuff is holding up quite well.
Yeah, I mean, that's it. Like a lot of the rate-sensitive stuff is holding up well. I think, I haven't seen any specific news, but if I had to maybe put a little bit of a finger on it, when you look at the size of the move in NVIDIA and ABGO, I think, there's been some broad-based comments recently about AI, the AI bubble getting near. And look, we have that happen all the time when there is a concentrated trade that is continually going up. We see this quite often, and I think if there's anything, I think we're just kind of seeing sort of a pullback based off of that. And look, I'm here for it. I mean, I think that's fine. We can't just continue to go up every day. I don't know about you guys, but most days I've been waking up and I'm like, okay, are we going to be down today or not? Like we do need a pullback at some point if you really want a healthy move higher. So I think this is good. The fact that you're seeing the main, a lot of the mostly Mag 7 names when I look at it. And again, you see Oracle down as well. So obviously we know Oracle's out. Oracle, Palantir, NVIDIA, and AVGO are some of the biggest reds on the board. That just tells you everything you need to know. And I don't think it's a bad idea to give a little bit of love to some of the underplayed players in the market more recently, the Lilies of the world and the whether it's, some of these retail names and I've seen this recently too. The biotech and housing have been sort of making moves more recently in ways that we haven't seen. I should say they're basically the opposite plays for a lot of the tech names, right? More recently, so like you said, the rate sensitive areas, right, are making moves in the market, and I think that's a good thing when we're seeing some of the names that have been sort of overbought, if you will, pulling back. Billy
likes to point out when you think about the home builders, right? what world are you pricing in for them? You're pricing in a world that's realistically 9 to 12 months out in the future. If you think their earnings are going to be better, you're buying up their stock today. It takes time to actually build a home. And so by the time that the home is built, will they be able to sell it, recoup the cost, turn a profit on it? So you're effectively making a bet that mortgage rates are going to be lower a year out from now. And granted, the spread between the 10 and 30 year, depending upon your anchoring point for like 15-year fixed or 30-year fixed, the spreads have actually started to come in, all things considered. So what I mean by that is if you look at where 30-year yields are today relative to a year ago, mortgage rates are not as inflated because refinance risk isn't as high. Now, granted, Jamal, we do have some concerns here with how this market is behaving, and the AI build out is a whole nother story. You're seeing a lot of stories pop up in the news now. The data centers are being shot down because of the strain on electricity costs in areas. You see it in the CPI data itself. Areas where data centers are being built are seeing higher inflation for electrical costs for homes, for residential homes, than areas without. And obviously in the United States, we have not spent nearly enough time building transmission lines. So there's a lot of bottlenecks. I think about the utility companies like XLU, the utility ETF, Jamal. This thing is one of those sectors that's up on the day. Have you used ChatGPT 5, the new version yet?
I'm not sure. I mean, the only version I use is on the app on my phone. And honestly, I just really downloaded that in like January, February. I'm like that, though. I actually still don't have TikTok on my phone. I've just recently come to the realization I might have to put that on there as well. I don't know.
Oh, don't do that. Spyware.
Yeah, I know. But, you know, anyway, to answer your question, I'm not sure what version that is on the app on my phone.
Yeah, I know there's been a lot of complaints the past week or two about the ChatGPT 5 upgrade, which I don't have any issue with. But I've seen a number of people say that it's too cold for them. It's not sycophantic enough, basically, which is a whole sycophancy in these AI models is a whole nother issue. All right. So we have our setup here today. The Russell, which was holding up yesterday, is kind of at its tipping point. If there was one index that was showing some strength on a relative basis, the Russell had been proving itself a little bit stronger. But this morning, the breakdown's here too. We can't ignore it. We get to that, 10 o'clock hour, Jamal? What comes around, what comes down the pipeline that bothers everyone? How's the U.S. housing market doing? Not great. Housing starts up a little bit more. Canadian inflation down. Bowman's talking in about 45 minutes. Whether or not we're going to get anything substantial out of there is another story.
I mean, do you think we get anything substantial out of these? Well, it pretty much starts tomorrow, right? Do you think we get anything substantial? I mean, really, it's all about Powell's speech, right? Like, we've been saying that for a while. Most of them don't matter unless your last name ends in owl, as you so awesomely coined. But, I mean, do you think we get anything substantial this week?
We're getting close enough to the May turnover for Powell leaving the Fed, where we have to start to think about like what the composition of the next FOMC voting group looks like in 2026, because those seats all rotate, or a chunk of them rotate. And you start to put together what the voting coalition looks like, and you say, okay, well, Waller and Bowman are going to be for cuts. Daley and Kashkari seem to be leaning in towards cuts. We get rid of, you have Stephen Mirren, who's potentially up there. He's going to be for cuts. Trump's pick. Temporary pick, but the permanent one is probably also going to be for cuts. Powell leaving gives Trump another seat. And you can begin to put together, regardless of what the economy looks like, there may just be enough people at any given moment in time moving forward that are going to be favoring cuts. So while what Powell says this week matters, I think that the weight of Powell's words starts to matter less and less, and we begin to elevate the voices around him. I wouldn't say we're at that Rubicon just yet. We probably crossed that Rubicon after the September meeting, right? Where, okay, all these other Fed speakers actually do matter more, because Powell's not going to be the person steering the ship for much longer. Maybe after December, you get into that 6-month window. And I think we'll have a Fed pick by then. If Trump is sticking to his word, he said by the end of this year, at the latest, could be in the next few weeks. just don't see how Powell, Jamal. I mean, this is the thing. We look at all the data here. The inflation data's turned up. The PCE is going to turn higher Friday morning. I don't know how Powell gives a speech on Friday where he promises a rate cut in September. He may say that anything can happen. They're not closed off to it. But I don't see him coming out with a hammer and saying we're cutting rates next month.
Yeah, I don't see how either. Again, unless we see some serious deterioration in the, there's no way he can say it tomorrow, right? We don't know what the next jobs report looks like. And so unless we see some serious deterioration over these next couple, I don't necessarily see how either. So, yeah, that's one of the reasons why I find it interesting to be able to put my my trade, this NASDAQ, a little bit further out, because there's a whole lot that can happen between now and then. We got a couple of more a couple of more inflation reports and a couple of more jobs reports, and whatever. We'll see how it plays out. I try not to think of a scenario that makes my trade work anymore, I guess is really what I'm getting at. We'll just see what happens.
If there's a place to do it in the trend, right, where have we seen the market catch itself? If the uptrend from May is going to remain in place, we really don't dip below the 1 month moving average for that long. It kind of becomes a catching point. You saw this in mid-June where we held up against it, briefly dipped below to rally. We see this in August, briefly dipped below only to treat it as a rallying point into new highs. So at least they're characteristic here technically, right? Support, spring up into a new local high, trade back into support, move up into a new local high. If that's the case, this should be a floor. We've priced in Powell disappointing us. We're not going to be surprised by it now. The market's if you told me from the start of this week to the end, Powell's going to disappoint us, what do you think the downside move would be? 2% across stocks. NASDAQ's off what? 1.5% this week or so. Maybe we get a washout. Powell disappoints us. We all go, okay, yeah. We know you can't. The economy isn't in the tank yet, so you can't cut rates. I guess that's not a bad thing. And then we try another move to the upside. So I'll be a dip buyer with you, Jamal.
You bring up a good point. As I'm looking at it, I mean, again, I kind of have this in my head, but it bears saying out loud. When we do have those dips, it usually is about a 2 week. It's been like this year anyway. It's been, say for April, obviously, we're not talking about then, but going past April, it's been usually about a 2 week period, and then we sort of see a new high at some point or another. So I'll certainly like to take a part of that. And again, I'm not putting this trade on with the idea that I'm bottom ticking here. There could easily be another day of this, or maybe by the end of the week there could be some unforeseen volatility and move to the downside. Again, I don't expect it to be 5% or anything like that. It could be 2%. That would be on the order of magnitude, given how low volatility things have been, and the 2% move to the downside would actually be big. But my point is like when we've had these dips, it's not outside after April. It's not been these really long extended dips. It's been within the 2 week period. We're looking at new highs once again.
I just can't help but notice that the volatility term structure here, front month expiration September 19th, VIX is at 15.6. Back month in the CBOE's volatility term structure curve, June 18th, 2026 expiry, 21.79. It's still a 6-point spread. It's been a 6-point spread, it feels like, for weeks, right?
Yeah, it has.
So as long as we're in that kind of contango, and can't really call a top.
It's a good time to mention too. We have August VIX expiring tomorrow. We have seen those times where there's been a little bit of volatility, but I don't necessarily know if that happens this time. I think a lot of times, as I mentioned, I talked about this not too long ago, but a lot of the VIX expirations that we observe are typically in the same week as options expiration, and that's not the case this week. So I don't necessarily know if we see the same order of magnitude on this expiration, but nevertheless, it's a expiration. So we'll see if something happens tomorrow.
We'll see if something happens tomorrow. Bonds, though, is our point of attention here for today, which are bouncing back. Kind of a classic stocks down, bonds up kind of session, but you see that this is really just before we go to the bonds, we talk about this being a risk-off move, having some flavor to it as well, not just rotation. All the major currencies, save for the yen, are down versus the dollar. 6S, Swiss franc futures, also up. So yen is the top performer, Swiss franc is the second best, the US dollar third. And we have lower yields on the day. that's kind of classic risk on, risk off, people fleeing to safe havens, even though gold and silver are off. So likewise, not just a safety reach, but reach for liquidity. Halfway mark of ZB's trading range post-Liberation Day. Once we clear out the hijinks, you have a move up towards 117.5. You have lows that come just around 109 and 20 ticks. That gives you a midpoint of, roughly speaking, 113.15. You know what? We'll call it 113.16 just to make it 1.5 halfway points in between the two directly.
Yep.
Okay. What do you do with a 7.2 IVR? There's not a lot of great trades in the board, but riding these things into the ground, the short iron condors directionally neutral, they can still work. You have to find the right strikes to find a good risk to reward for yourself, but you're effectively making the trade that we're not going to break the high that we had here in late April or the low that we had in May. So it's not fun, exciting, if you will. It's a theta burn, risking a little bit under 3 to make one out of 60% pop or so. We got to keep feeding that machine. Coins in every day as long as it continues to work.
As long as it continues to work, for sure. That's been the best trade in here for some time. When bonds did dip yesterday, after 2 days, it was somewhat tempting, but I'm not going to do it. It would have to go towards some yearly lows for me to even get interested in taking a directional play. So for the meantime, it's non-directional. That's what's worked. Keep that going.
Do you think 38 days is enough time for traders here, or should they go out to 66 if they were looking to play something directionally neutral in the long bond right now?
Yeah, I would go further out for sure. I mean, there's just too much noise at times with bonds, although the noise has died down, like we just said. I mean, a lot of what's been going on and between Trump and Powell, and clearly Powell hasn't budged off of the idea of cutting rates. So there really hasn't been the big moves that we saw at some point early in the year. But you still want to give yourself time for these ideas to work, because there is just a lot of rhetoric that passes around from time to time. So you never know which way that's going to bring you, and I think it's better to be further out.
Looking at 1 point wide, short the guts at 109, 120, long the wings at 108, 121, 68% pop, just a little bit under 4 to 1. You could tighten it up a little bit here, Jamal, and get closer to, we'll call it a 2.3 to 1, somewhere in that neighborhood.
Mm-hmm.
TLT might be the better venue for some folks, although the buying power required here is quite small. Thinking about it like a 25, or we'll call it a $30,000 account balance on average, 1% of equity. Reasonable, very reasonable. And so this trade, if you go half profit, then you're talking about something that's around 0.5% or 0.6% of account equity. But listen, if we can do a trade where every time in the bond market, 45 in, 21 out, we're adding 0.5% equity to our account, it's a nice little thing. Can't complain about it. But it's been working for the past few weeks and months. And it's, I think, one of the points that I've had a rough stretch trading in the month of August, admittedly, perhaps from overthinking, as Dylan Radigan may say. But what the overthinking has not occurred here. And it's really just been, prove me wrong that the current trend is going to change. And until that directionally neutral trend changes, we'll stay on board with it. So the no thinking in the notes and bonds has actually been very, very good. I don't think we should think about this at all until that changes.
I agree with you. I mean, there's really not much that has changed in here, so there's no reason to try to pick a direction for the time being. Just see if there's any situation where we do move to those extremes. I think then it warrants it, but there's no reason to force a directional trade when it's just not there.
If there is something, though, there are some seeds. I wouldn't say they're here yet. They haven't blossomed, but we always want to tend to our crops. We have this potential 3 candlestick pattern. Would be a bottoming candlestick pattern, Morningstar candlestick cluster. I can't help but notice that the support we're finding the last few days is up against swing areas we had in July before the market ultimately broke out here. So this series of higher highs and higher lows, it is continuing technically. It does make me think that if we're going to be directionally neutral here, I'm looking at my 38-day position. If I were putting this back on today, I don't know if I would do these strikes. I might give this a little bit more breathing room to the upside here and be a little bit more cavalier with giving it some downside space. right now. It looks like this market has a little bit of a floor underneath it. And thinking about the action we saw at the start of the month, is 110 a floor? I feel pretty good about 110 being a floor. To get back down to where we were in May, we would have a little bit of time to digest that. So not quite a perfectly, we're not going right at the money and going exactly to equidistant lengths. You could see here the short put spread side, the 16, the 33 deltas, the short call spread side, the 8 and the 5.
Mm-hmm.
It's not ideal, but that's probably you have to structure this. You got to give a little bit more breathing room to the upside than the downside right now, at least in notes, just from how this looks technically.
I think 110 is a floor for sure. And you could almost argue that more recently the floor has been raising just a little bit. But 110 is definitely the floor. So yeah, I'm with you. You definitely wouldn't have the same strikes, right? That's the one thing about some of these trades. Sometimes these non-directional ones, it's sometimes the floor changes a little bit, and as if you go further out, you probably are not going to have the same strikes that you would.
No, and keeping that in mind here, if we're going out to 66 days, 110, 111 on the short put spread side, the 115, 116 on the short call spread side of a short iron condor position, that's still roughly 60% pop. Gives you some breathing room to the upside, and you're talking about risking 3 to make 2, a little bit worse than that. But I think that's how we have to be creative in these situations, recognizing where the market may be heading. I need a roll soon. So this is how I'll be structuring the trade. I'll be keeping an eye on this, Jamal, and quite frankly, if it keeps moving up, then we may need to adjust the upside strikes a little bit more. But going back into this well, it has not run dry yet, and we will continue to drink water from the well of directionally neutral trades and notes and bonds, as far as I'm concerned.
I mean, and again, this is the other thing that obviously has a chance to move over the next couple of days or Friday at some point or another. I mean, that's the only other thing that influences your idea of the trade. When do you roll, or how do you roll, or the strikes as well? Something to keep an eye on.
One last thing on notes and bonds here. Yesterday, they were trading a little bit weaker. We had Fed rate cut odds continuing to recede. 83% chance was the low yesterday for a September meeting. Cut odds are back up today to 87%. Why might they be up? There's concerns over the housing market. I see that we have the housing starts higher. Okay, housing starts are up. Do you know what precedes housing starts? Building permits. Building permits are down. Building permits were down 2.8% month over month. So there's more weakness in the housing market coming. If it wasn't more weakness, we'd see the permits starting to build again, because permits precede the starts. So if you're looking for, what's the argument here? Is the Fed going to cut rates because inflation is transitory and tariffs are one-off, and we need to be more concerned about the labor market and the housing market? You have your data there today to support that. If inflation is not transitory and tariffs don't cause inflation, then what the heck are we doing talking about cutting rates? Because inflation is higher than anyone is comfortable with, and then the housing market's going to suffer more. But this is the big news of the day. The housing starts for me. It doesn't really matter. It's the building permits that we should be paying attention to. And that is what Powell will probably allude to on Friday. Metals are breaking, though. Why hold metals? Russia, Ukraine, it's all going to be solved, Jamal. Gold here, breaking down. This is the lowest that we've seen, basically. If we were to close here, this would be the lowest close of the month for gold. We're still, broadly speaking, in this wide trading range between 32 and we'll call it 3,600. The vol is dissipating, though. It's an 11.4 IVR. How do you handle this market given this slow bleed out over the past few sessions?
We can't say it enough. I mean, it's not the same gold trade that it was earlier this year. It is a very different gold trade right now. I still believe that I don't think gold is going to drop $100 over the next 2 days or anything like that. But it's fairly weak, and I still think that it's just going to stay within this range. Meaning, like, if you do want to play it direction, if you do want to play it for scalps, I think that opportunity is there. I personally am not doing that, but I think the opportunity is there to catch a bounce back up to 3,400, maybe even 3,450 before it fades again and gets back down in this area. And I think that's the gold trade right now. Same with silver too, to some degree.
And you know what? Directionally neutral can work. Looking out at GCZ5, we were examining this yesterday, and I have not been able to get filled. So we're going to try this again here. But I want to push this all the way out, thinking about where the support and resistance are in the market. So 3,600, we'll call it.
I think there's a reason you haven't been able to get filled. I think the interest has gone away to some degree. I'm telling you.
Never tell me the odds. Come on.
I love that one.
67% probability of profit here on basically a 3-to-1. It's still an appealing setup. We could probably pinch them in a little bit more, right? Because we talked about 3,200 being support. Why do we need to go all the way down towards the 1 standard deviation move? That's 62%. Here's the issue. And this is the problem that I had yesterday and the problem that I had today earlier. Where is the volume? The volume is absent, largely speaking, in some of these strikes right now. So not being able to be filled, I've tried to tinker with, will I be willing to give you a few points back? Will I be willing to take a bigger max loss in order to get filled? Yes, no one's filling it. So GLD probably, I know this is a future show, but GLD might be the better bet if we're thinking about this, just given there's a lot more trading volume and open interest around some of the relevant strikes. It's the same problem we're seeing in silver. It's the same problem that we've had in copper since the tariff nonsense on July 8th, that the metals futures are actually, the volumes are quite thin. And this time of year, Jamal, right? It's a similar situation to trading around Easter or Christmas, New Year's. You want to be able to trade in and out of a product that has trading volume and liquidity, especially if we see things go sideways the next few days. So maybe, just maybe, GC and SI aren't the best places to express one's views if you're trading on a short-term basis here.
Yeah, and people should take with a grain of salt when we're talking about liquidity with gold. We know gold is liquid, right? But compared to what we were seeing early this year, it is somewhat of a different trade. And look, if you're asking me, I think from like about May on, people got a little bit more interested in Bitcoin and maybe a few other different things other than gold, and that's why you're seeing gold sort of just it's not flatline, but it's been range bound. It's been very, very range bound over the last couple of months. And that just lets you know it's a different trade. I mean, that's not to say you can't make money on it. Like you said, you can find a directionally neutral type of trade. I don't think I've ever traded gold in that way. I think I've always liked to trade the big moves in gold. And so that's why I'm saying what I'm saying. I mean, I just like trading the big moves, whether it's to the upside or to the downside, more upside than not. But right now, it is not the momentum play. It is the steady and slow play.
Silver is losing ground rapidly today, down 1.82%. That 50-day moving average comes in today at 37.26. There's a point to be made, what Ilya was saying, that we had already broken the uptrend, and while we hadn't given up 37.73 yet, the fact that we couldn't rally through here was a warning sign.
Yeah.
Astute observation. If we were to take the move off the recent swing low here in early August, which let's just pull you up here a little bit more, this is kind of where support should be coming into play. So if we lose this today, we lose the 50-day, we have a problem. This 50-day moving average has been more or less a magnet for price action since we recovered in April. And whenever we've dipped into it here at the end of May, and then again in July/August, it's been a bounce. So failure to treat that as such, 36 becomes a price target. And then below 36, we have major, major issues in silver. But it's only a 1.2 IVR. I still have some longer term silver exposure here, which is looking worse by the day. Like I said, August has not been the best trading month for me so far this year. But if we can see volatility stay in and we get a bigger setback, I'm going to have a very difficult time not looking at that as a longer term buying opportunity.
Yeah, we get below that July 10th low, it's going to be serious issues here for silver. But again, this is one of those where it's kind of proven to be range bound at times too over the last couple of months. And I'm kind of fully expecting that to take place, absent some type of news that comes out. I think we'll be all right. But yeah, if it gets below that, I mean, I think you got real issues. And again, it just demonstrates that this trade has changed as well.
The trade's changed short term. If we're going to be pumping deficits, debts, cutting rates, it's so difficult for me to envision a world in which silver and gold aren't staying afloat there from how I've seen the markets evolve in my trading experience and what I've read over the years academically, speculatively, tinfoil hat forums on 4chan and Reddit about how silver and gold behave. We've all been into those rabbit holes, haven't we? Right? Either way, though, yeah, bad session, but it feels like a liquidation session. It's a weird mix today where tech's getting smoked. Again, yields are down. Silver's smoked. Everyone's putting money into the Swiss franc, dollar, yen. Odd. Haven't seen that kind of price action in some time.
Yeah, very
But it's also the end of summer.
Very strange.
Too much natural gas, Jamal. There's far too much natural gas. Part of the issue that natural gas is having is it's pretty cool here in the large population centers of the country. We were just talking before the show. I think it's 73 degrees here now in New York. It's quite lovely. Day for a quarters. It feels more like late October, dare I say. In any event, we also see that storages have been building for natural gas, and Hurricane Erin does not look like it's going to make its way into the Gulf Coast region, which, let me just pull this up here, pull you onto the screen. This is the cone of hazard for Hurricane Erin, which if we are going into this area on the chart, I could get a Sharpie and fix this and point it over here. That would be bad for natural gas prices. You could have wells shut, or good for natural gas prices, because you'd have wells shut in, supply temporarily constrained. Same thing for crude oil. The track of the storm is shooting up the East Coast. There may be some disruption to like the Outer Banks in terms of high waves, but nothing that threatens Gulf Coast production right now. Mm-hmm. So as the storm track has changed over the past week, whatever bounce we saw late, we'll call it August 13th, 14th, 15th. Yeah, that's all gone. Instead, we're coming into this week with more weakness now, 4.46% lower, Jamal. I'm so glad I haven't tried to play hero ball here, if only because this has burned me so many times, and staying away from it has kept me from making bad decisions. As people who are drawn to volatility, however, how do we stay away or structure responsible trading in a 47.9 IBR product?
It's funny because I put somebody in timeout yesterday when I was on the show who was in the chat for mentioning the idea of selling downside and natural gas. And I was just kidding, of course. It's not a bad idea. But yeah, this is a hard trade at times. And honestly, I don't see how you do, if you do anything, I don't see how it's just not something like an iron condor. I think that's the easiest trade to do in here. It always does find a way to try and disappoint, right? If you're doing the 240, 230, and again, it would be one where I would do 37 days, right? Because again, we want to take advantage of that 45-day window that we've found a lot through research works the best when you're selling volatility. So it would be that. It would be something along those lines. You can debate whatever strikes you want. Personally, I think you got to do something, in the teens as far as deltas. So I'm looking at the 340, 350, 240, 230 iron condor. I think that's probably one of the easier ones to do, but you could widen it out even more if you're worried about getting a touch on the 240 side to the downside. Again, if this starts to bounce, I do think you see 330 in fairly quick order, but you can't play it for that. We don't know where it's going. Honestly, it could go lower before it goes higher. And if it does a little bit of both, that's actually how you win on the volatility play.
And I get the temptation right now because there's put skew in here at the moment, right? Just taking a look at the 20 delta puts, we'll call it 19 delta at 245. Trading around, we'll call it 66 cents or 6.6 cents as a midpoint. You go to the 20 delta here on the call side, and it's about 5.3 cents on the midpoint. There's a reason, though. Yeah, well, there's a lot of volume in here today, which is really interesting because it's natural gas. I mean, you got to trade something, right? So,
you know what? I'm going to try and put this trade on. Right now, it's 29 cents mid-market. I'm just going to be stubborn. I'm going to try, not 29 cents, but 2.9 cents mid-market. I'm going to try 3 cents mid-market. If I get hit, I get hit, so be it. I don't expect to get hit, but if it hits, then it's meant to be, Chris.
I like that attitude, Jamal. Crude oil here, a little bit weaker on the session. Progress being made for Russia, Ukraine. But either way, maybe some of this hurricane pricing spilling over to folks who are looking for the potential impact being squeezed out of the market as the cone of hazard has changed. 23.2 IVR, we're still wrapped around 61, 62, 63. The ongoing question is, as I'm approaching roll week, because that's next week at 29 DTE, would this be a trade I would put back on? And the answer is yes, because crude oil has been the gift that's been giving. It's still, roughly speaking, in that 3-to-1 risk to reward neighborhood, north of a 60% pop. Do I like these strikes? We could tinker with them a little bit more. Maybe go 2 points wide to get a little bit more juice out of this. Either way, though, like with notes and bonds, directionally neutral continues to work unless we're going into a geopolitical swell, which it doesn't seem like we are. Directionally neutral probably works. The economics of it all, not so hot. Although U.S. GDP is still tracking around 2.3% according to the Atlanta Fed. So maybe tariffs don't matter at all. What do I know? Who cares about all that fancy education, Jamal? Sorry, Mom and Dad, for wasting all that money.
Can you
we're
believe
gonna have
how
to
quiet oil has been, though? That's kind of strange how quiet it's been in absence of a lot. I mean, we know most of the time it is the geopolitical stuff that moves it, but it's really strange. And then just to backtrack real quick, somebody did ask a question, Andrew Cortado, even though he spelled my name wrong, but I know he knows how to spell my name because he's on my show on the regular. He's a good guy, I like him. Asked, again, this is a future show, but it's a good question. Ask if you would consider playing UNG or some natural gas ETF. I mean, I'll go first. Personally, a lot of times, just personally, I hate seeing that damn K1 show up in my house when you're talking about UNG. I've had it before. It's pretty annoying. I would only play UNG if I was strictly thinking that, it's a lower price point. It's $12 and change. If I was really thinking that there was going to be some big move in natural gas and I wanted to hold it, I would. But also you need to be aware about how this product works. And I think there is... this is definitely one of those, I think it's one of those ETFs that obviously is using futures, which, again, you would have to look and see where the... nat gas futures are right now, and I think there is some contango. So you do need to be aware of that. That's one of the drawbacks about trading UNG. I think it's better. Again, directionally, it's harder to play the actual future. A little bit expensive there, and I think that's why a lot of times you hear Chris and I talking about doing some options play, or usually some sort of directionally neutral, or maybe directional, but just using spreads, right? So that's what I would say.
I think that's well enough said. I have not successfully cracked UNG. I actually prefer trading NG futures to UNG itself. But you talk about the liquidity here. I mean, natural gas actually has great liquidity right now. If you're looking at UNG around some of the recent strikes, open interest is still very high. More manageable size product. Natural gas is a big contract, I think, is the more important takeaway, right? And this goes with the ZB. Sometimes you have an idea that you want to do in futures. If there's an ETF, there are constraints around using the ETF, tradable hours, for example. It's one of the reasons why I prefer to use futures than anything else. But you also have to consider the liquidity in the environment you're in. So UNG is not for me, personally. But NG is a big product. So UNG could be for a lot of other people, Jamal. Dollar meanders here. We're running out of time, so let's wrap this up. The dollar's meandering today. It's actually getting a little bit more ground as the session's moving forward. We're seeing that there is this risk-off flavor. Yen, dollar, Swiss franc. Those are your performers. How do we see the Swiss franc here? Success. Not success. 6S here on the platform now. There's no listed options yet, but similar to trading the Mexican peso, you could just outright trade the futures contract. Either way, though, right? There's that risk-off flavor. Yeah, and the New Zealand dollar futures now too, 6N. Fancy. But again, no listed options. You can only trade the futures outright. Kiwi dollar on TastyFX or dollar Swissy on TastyFX might be a better product for the liquidity. I digress. The yen here up slightly with lower yields, weaker oil. That's pretty classic. You can see the Canadian dollar, though, dropping. And this, to me, is the bigger one, if only because that's where the more significant trade exposure is. And it's got a 55.8 IVR now all of a sudden. So looking at this move, Jamal, although I'm in this product already, looking at 45 days, would something like the 73, 74 short call spread, could we find something in this market? 4-to-1 isn't hot. But this is a pretty nice bump in vol coupled with what would be a close at the lowest level that we've seen going back to mid-May. Canadian dollar looks really weak here. So inflation missing. We talk about Canada being a leading indicator for the US. After all, 80% of their exports go to the United States. So if their economy is weakening, what does it tell you about demand in the United States overall? This is a problem. Not for me, though. Problem for Canada. The euro here a bit softer as well. IVRs are bumping up. They're bumping up, except in the pound, which if you want to just take a directional shot short pound, good time to buy puts with its 1.2 IVR.
I still want this. I still want to be able to get long the dollar. I know it's bouncing today. Obviously, it's not an ideal day for me, but I'm still interested in it. And I just want to see if it's going to get to this point again where we see the shorts sort of in charge and feeling good about it. That's when I'm doing it. So outside of that, I still think the dollar has a chance to run back to par at the very least.
I have a short call spread on here in the British pound as well, which it's been uncomfortable because it's been losing ground. But the idea is predicated against the July 24th high holding. That's 135.95. You could see here that's a bearish engulfing bar because we do technically close below the July 23rd low. But keeping that in mind, we never breached there in this run up recently. So I've just been hanging tough. Another pullback below 134. You start to see how more of a consistent top is coming into play, which for Ilya's sake, I hope that all works out because my friend is loaded to the gills on dollar longs. DXY Jamal, we're still holding our uptrend. The uptrend off the July low is very much intact.
Yeah,
maybe last chance to leave.
I feel like I might miss my opportunity.
It could, yeah, right. And this is still the most hated trade in the world, according to the fund manager survey for institutional positioning. Everyone is still short the dollar. That's the opportunity, Jamal. Okay, what's next on the calendar? Tomorrow, inflation out of the UK, FOMC minutes in the afternoon for the US. FOMC minutes help provide the context for which we can think about this upcoming Powell speech. We have a number of Fed speakers, of course, coming up the next few days from Jackson Hole, so be sure to listen to them. Maybe their names don't need to end in owl anymore, Jamal, to actually move these markets. But Powell is the big one. We're done here, though. You'll be back in about 45 for engineering the trade. I'll be back in 2 hours for last call. Before then, though, Tasty Live programming does continue. Dr. Jim Schultz is here, but from theory to practice. So grab a cup of coffee, snack, come back. Tasty Live program up next.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. And ooh, baby, we got a little something cooking there in the old stock market. If you're watching over on the Tasty Live network, then it may look like the market is just unched. But if you hop on over to YouTube and you get into that live chat, you will see that this market is actually down more than 10 basis points. And you can communicate with your brethren who are also watching the program. And of course, you can drop whatever questions you might have for me in the chat, and I will try to get to as many as I can here in the next couple of minutes. So, John, bring us into the market, though, man. Guys, something's cooking out there, and we're not cooking with that canola oil. Nah, man, we are doing the good stuff. Coconut oil, maybe some avocado oil if you need the higher smoke point for whatever it is you might be cooking in your neck of the woods. Even the S&P is down 40 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extraordinarily high-risk product, down 314. You got the boomers down 32. You've got the Russell 2000 Futures Index down 20. Guys, this is how bad it's been for us, right? Wanting two-sided action, maybe playing the market to the short side, whatever. This is how bad it's been. This is how starved we've been for a move like this. Look at this market action. It's nothing. This is literally nothing. Even the S&Ps are down 40 points. That's not even a full percent. That's like 60 basis points. It's nothing. Now, the NASDAQ is down a little bit over 1%, maybe 1.5%. So it's like, all right, maybe we are actually using coconut oil today. But then you go to the boomers, they're down 47. You go to the Russell, it's down 21. It's like, it's nothing. It's nothing, man. And so maybe this is day number 2, because as we correctly identified yesterday, that was day number 1. So market down. You got bonds are up a little bit, little flight to quality. You got notes are up a little bit, little flight to quality. You got UB40 up 27 ticks, a big flight to quality. Everybody kind of summoning up their 1986 vibes and saying, man, let's get some UB40 on the old vinyl there. You got oil down about 98 cents. And then you've got, gold is down 17 points today. So the shifties are not celebrating. Silver down 75 cents today. So a big move in silver. Silver down about 2%. Not such a big move in gold. Gold only down 17 points. So the flight to quality is not necessarily making its way over to the metals. But man, look at this market. I can't believe it. I can't believe we actually have a little bit of a down day. Volatility is not really responding though, which is kind of interesting. If I scroll down a little bit, you can see volatility futures are only up 35 cents, which is not that big of a move. That's only about 2%. And then if I go to the spot volatility, the old VIX, it's only up 70 cents. And so, I mean, I guess that's a decent move. I mean, that's like, what, a 5% move on a $15 base? And so, but again, this is only day number 2, right? This is only day number 2. Now, it's likely day number 2 of 2, but it's still day number 2 at the end of the day. And of course, we have Powell at the end of the week. We have Fed minutes tomorrow afternoon, I should say. And yeah, it's just some crazy stuff. I can't believe it. I can't believe we actually have a little bit of downward movement in the overall market. All right, so what I want to do though, I want to get into what's going on in the portfolio. We have a couple of things that we want to take a look at. And then of course I want to see where you guys are at. I'm going to see you guys. I see Stefan's in the house. I see Lefty in the house, man. I see Ash is in the house. David Gallimore is in the house. Andrew Cortado in the house. Joel James in the house, man. And so many others. Scramble everything, of course, in the house. Mark's in the house. Sarah Joe's in the house. Man, I appreciate you guys. All right, so let's go ahead and a couple of things. Oh, number one. We may spend the whole show on this. Guys, look at Best Buy. Look at Best Buy. Up $2 today. Right? Like, forget about the NASDAQ. Forget about all this other stuff, man. Look at Best Buy. Now, there's your flight to quality. Because what do you buy when you're like, man, I don't know what's going to happen in this world? What are you going to buy? You're going to buy an electronics store that is on the brink of going out of business. Like, that's where you're going to park your cash. Forget about CDs and T-bills. Forget about all that garbage, right? I'm putting my money in a brick and mortar shop that is soon to be Chapter 11 bankruptcy in the next 6 to 9 months. That's Best Buy. That's BBY, right? And so we are up a couple $100 today. Man, we're even kind of, look at this. The P&L Open Bros, like they're running out of ammunition, right? The knickers are getting a little twisted up out there for the P&L Open Bros. Not to mention, we don't even look at this number. So there you go. Now, Best Buy, all kidding aside, I remember I said with Best Buy, when Best Buy was in the 60s or 67, 68, whatever, I was like, hey, if this thing rallies back to like mid 70s, maybe we'll look for an off ramp. And here we are basically at 74. That's essentially mid 70s. So now what are we going to do? Well, I actually was looking at the slate, and I think one of you brought this up. It was either yesterday or maybe someday last week, that Best Buy actually has earnings coming up in just a couple of weeks, I think. So if I take a look at the overview, you can see that Best Buy has earnings on 8/28. So Best Buy has earnings. That's gonna be a week and a half. That's 9 days. So that's gonna be I guess next Thursday. So next Thursday, going into Labor Day weekend, we're gonna have Best Buy earnings. It's gonna be Thursday before the bell. Wow. So if we want to do a trade specifically for that, we have to do it Tuesday, obviously, because we have today's assignment with E on Wednesdays. And so what are we going to do? I don't know. I want to hang on this position just a wee little bit longer, because now that we're like so close, like I was taking a look at this earlier and I was like, man, let's look at the expected move for Best Buy just for the cycle right after earnings. So you can see earnings are right here on August 28th. You know, if I do the 10-day cycle, which goes out to August 29th, that's basically the earnings cycle, right? Let's take a look at the expected move for that cycle. So the expected move to the upside takes us up to 81, let's say. Our entry price on this is 85. Now that's not even including all the premium we've sold and maybe the couple of bucks of basis that we've improved or whatever. And so I'm like, man, I don't know. Like if we actually get a positive response from the company, which is not likely, again, given its brick and mortar status, given its being on the verge of Chapter 11 status. Like I understand that the odds are stacked against us, but man, what a zinger we could toss up to the P&L Open Bros if we're able to bring this thing back. If this thing can rise from the ashes like a phoenix, it would be absolutely amazing. So I'm going to sit tight for now. We're just going to kind of ponder the idea, just the thought experiment that we might hang on to this position through earnings. And so that is my Best Buy commentary. A quick little Chipotle check. So once again, not assigned on Chipotle, even though there's no extrinsic value left. So again, just, we're building on this teachable moment. This has been like a 3-week-long teachable moment now at this point. This is like a leap. This is like a leap style teachable moment, right? Where it's like this thing, we just keep adding to it. There's just more DTEs. It's like, man, I thought I had a lot of DTEs. I got even more now. Like that's some crazy stuff. And so again, when you have an option that goes deep in the money, if there's a lot of days left, the likelihood that you are assigned, is it higher than it was before it went deep in the money? Yes. But is it still high in like a relative sense? Or not relative, but in an absolute sense? No, not usually. And so, if you want to continue to hold the position, you can, and you get the buying power savings from having the in-the-money short put relative to just having the stock. But this is only a $40 stock. So, the buying power, if we ever do get the shares, which is eventually going to happen if we stay in this position, it's only going to be a couple $1,000. So it won't be that big of a deal, just given the low basis on the position. But that is Chipotle. Man, the 3 positions I really want to talk about, well, actually 4. I want to talk about HIMS. I want to talk about Microsoft. Man, look at Microsoft. I don't know that we can hold this any longer, guys. It just doesn't really make any sense. Look at Palo Alto and look at QQQ. I was going to talk about Starbucks for a second too, because our short call is making us a few beans on that little trade as well. But let's do these 4 first. So let's do QQQ first, because there's not really going to be anything to do here. This is more or less just kind of an indirect victory lap. Which again, I mean, for my mental records, indirect, direct, winners, losers, doesn't make a difference. They're all the same victory laps in my books. And so QQQ, we have a 580, 570 long put spread on. And now with the big move lower in the Qs today, you can see that this guy is now fully in the money. And so we are now in a pretty significantly positive theta position with this long put spread, which is all good. It's like, man, we finally got everything moving in our direction. We finally got everything, kind of set up nicely for this long put spread. So now what do? We don't do anything, right? I mean, this is obvious. This has obviously been one of the default settings of the show for as long as I can remember. Like maybe going all the way back to like the 2016 days. Like, I don't know if I was as explicit about this back then. I'm not sure. It was a different world, man. I mean, I'm standing up. I was wearing shirts, like ties, like vests. Right? Had all the hair wax you could imagine, right? Shouting at the mic, which I'm still doing these days. But still, it was a very, very different type of deal. I'm not sure that we really harped on the do nothing factor. I think that kind of came around, I want to say 2018, maybe. like 2019, something, maybe even 2017. I don't think it happened in 2016 though. That's back when the show was 15 minutes long. Can you even imagine that? Can you even imagine a 15-minute long Dr. Jim show? I mean, I really can't, but you know the best part about this? You don't even have to imagine it. Go back into the archives. But if you are just, if you've got a hankering to binge something that's cringe, go back in the archives, man. Go to the very beginning. Oh, it's so bad. It's so bad. I mean, we're only a hair better these days, but that stuff back then, oh man, it is just, it ain't pretty, man. It ain't pretty at all. But anyway, I digress. So with the cues, we sit there, we do nothing, right? Because when a strategy is working, right, I really feel like, the default setting should be do nothing. Hey, I've got everything set. Everything is in my favor. I've got my positive data. I've got some probabilities working in my favor. The stock is cooperating. Whatever. Just sit tight, man. You don't have to do anything. You don't have to zig. You don't have to zag. You can go live your life. Like you don't have to go, you don't have to zig. You don't have to zag. Like go say hello to your wife. Go say hello to your husband. Like give a friend a call or two. Right. And so you can just let the position work. You don't have to do a bunch of stuff and try to kind of, work your way around the edges. And so for QQQ, we're going to sit tight for all those reasons. So that's QQQ. Let's go into, let's go to Palo Alto. Was that a Sam L trade? Yes, it was. So Sam L, thank you very much for this Palo Alto trade. I appreciate that. I will take it from here, my friend. So we now that it's my trade, it's probably going to reverse course, but thank you, Sam L. This was a great trade, yesterday. We sold this guy for 546. It's currently marking at 378. That's a really, really nice profit. In just a day. Like that's a really, really nice trade. I'm actually going to sit tight. I'm going to sit tight because, man, it basically couldn't be in a better spot in terms of the stock price at 181 and our strikes at 150, 200. We could use it maybe a little bit lower, but I'm like, man, let's leg this out maybe for a couple more days. Maybe we go through the most important Jerome Powell, speech of his lifetime, of our lifetimes for sure. And so maybe we carry this guy through that and just kind of see what's what. And so when it comes to earnings trades, my normal, speaking of default settings, I mean, my default setting for an earnings trade is going to be, let me use the earnings date as a catalyst into a normal trade. Like I'm not necessarily looking for an overnight play, unless it's a butterfly, of course, and then it's kind of, that's the spirit of the trade. But if I'm using essentially any strategy other than a butterfly, especially if I'm choosing something in one of the later months that's closer to 45 days, that's intended to be a regular trade. That's intended to maybe go all the way to 21 days, if that's what it takes. But if I'm doing something in the front week, that's obviously a very, very different spirit. I'm signing up for something totally different. So again, you have to understand, like, what am I signing up for? There it is again, for like the 59th consecutive day. What pathway am I on through the forest? What am I trying to accomplish? These are all questions you should have answered, or at least have them floating around in your noggin before you even put the trade on. And as you get better and better and you gain more and more experience, you'll have a more clearly defined answer to these questions before you even put the trade on. Like for those of you just starting out, hey, welcome to the show. I'm glad that you're here. Welcome to the network. I'm really, really glad that you're here. There's so much amazing programming here on the network. I mean, not just my show. I mean, forget about my show. You got Liz, you got Jenny, you got Chris and Ilya, you got Jamal, which is coming up right after me. You got Tom and Tony in the morning, obviously. And then Nick, Mike, and Katie for Options Trading Concepts Live. I mean, there's so much content for you to consume. And so find the one or two personalities that you really latch onto. And I would kind of follow them through the forest, because we all have a slightly different way of, of kind of doing things. But if you're brand new, you might be thinking, Jim, not only do I not know the answers to the questions, but I don't even know what questions to ask. Like I'm a little bit of a deer in headlights. And well, let me just assure you, and let me just encourage you, we have all been there. Every single one of us has been there, right? And Tom is still in that same moment many, many days, like even in the here and now. And so you're in good company. You are 100% in good company. And so for Palo Alto, we're going to sit tight. And we're not going to do anything. So that is some Palo Alto for you guys. Let's talk about, let's do Microsoft, because HIMS is going to maybe take me a second. But man, look at this Microsoft trade. I'll tell you something. This is really something. So Microsoft at 510, and we're up $640 on this poor man's cover put that we put on Friday. Now, my intention was for this to be a longer living, teachable moment. Like my intention was for this to be more of a leap style teachable moment, not necessarily a smash and grab, Not necessarily like a we're in and we're out, but man, I mean, it would be kind of silly for me to, not take this trade off now, given how profitable it is. I mean, you've got Microsoft at 510. Again, going all the way down to the 505 strike. That's kind of the unofficial marker where it's like, all right, until the stock runs down to the short, I'm not normally interested in taking it off because I feel like there's still more directional bias that you can squeeze out of the option. Obviously, or out of the position, I should say. Obviously, there's more that can be squeezed on the other side of that short option going in the money, but it just becomes harder. It becomes harder because the delta on that option grows and it kind of slows down your overall directional bias. But given just how perfectly we timed this trade on Friday, which was just dumb luck. I mean, I didn't know. Nobody knew that this was going to happen or that Microsoft was going to fall out of bed. Like, we just got super lucky. And it's like, hey, man, sometimes, it's better to be lucky than good. Like, sometimes you just take your good fortune, you don't ask any questions, and you just kind of move on. So with Microsoft, I think we're going to take this guy off. And we're going to move on to greener pastures, man. Like, we'll find another poor man strategy to put on here soon because I feel like this is such a good strategy to utilize in lower volatility environments, which that dynamic might be changing a little bit now. I mean, who knows? Maybe we're going to be VIX, 18 or 19 at the end of the week. I mean, that would be great as a high volatility premium seller. But still, I mean, volatility likes to live on the lower end. So even if it does spike up, I mean, it is obviously trickling up a little bit here today. But if it does spike up later this week or whatever, it's not going to stay there. Like, it's going to come back down and we're going to be left in the same situation that we're in a lot of the time, which is, hey, volatility is not really cooperating. What do I do? Where do I put my capital? What kind of strategies can I use or whatever? And that's where I think a poor man strategy can be really, really helpful and effective. So let's go ahead. Man, let's just close it down. I can't believe it works so well, this quickly, but I'll take it, man. Like, I'll take it and that'll be that. And so let's see if we can get filled on Microsoft. And then I want to do HIMS, and then I got to get to you guys, man. Man, I see. Oh, we got filled at 4407. Nice. Okay. So now let's go into HIMS. Okay. So this HIMS situation is interesting. Okay, who brought HIMS? Was it Joel James? It was one of you. I don't have my notes in front of me. Did I leave my notes? You're lucky. I threw that receipt away. So whoever, I know it was one of y'all. Whoever brought me this HIMS trade, you're lucky. I threw that receipt in the trash. But if I go to this HIMS position, you can see now that the option is in the money. It's time to start thinking about doing something. Now, again, remember, this is a short put, right? Remember, what is the advantage that we always have in our back pocket with a short put? If you're okay holding the shares, then you can just ride, you can just go ahead and hold on to and hang on to that in the money short put, just like we're doing with Chipotle. That's not necessarily the case here with HIMS because I don't really feel that way about the stock. And also, I want to show you guys a different way to handle a position like this where we're not always just kind of, going to the default setting, which is do nothing. Now, I like to think, or I would like to believe, we have good reasons for doing nothing. And we spend most of our time on the show not really doing much of anything, but talking about a lot of things. And so I would like to think that there's some value there. But just in case I'm off with my judgment, which does happen from time to time, let's utilize a different adjustment protocol here for this HIMS position. And so when you have a short put that gets tested, it goes slightly in the money, whatever, one of the more classic ways that you can adjust that position is by adding a short call. So I could go in here and I could say, all right, let me neutralize my directional bias by selling the other side of the market, which in this case, of course, would be a short call. That's going to make me not nearly as bullish. That's going to bring in more premium. That's going to improve my break-even point on the downside. Now, what am I giving up in exchange for all that? Now I have risk to the upside. So now if HIMS kind of whipsaws and rebounds and bounces back, my short call could be in the money. And so that, of course, is the biggest gotcha that comes along with adding something like a short call to an in-the-money short put. But for now, this is a very, very strategic way to handle a short put that goes in the money or is tested. And so let's go ahead and do that right here together. Even S&P is down 44. Man, NASDAQ down 325? Guys, this is not good. And by not good, I mean we're almost down a full percent in the S&P 500. We are almost down a full percent in the S&P 500. So basically 1.5% off of all-time highs. I mean, I was only 6 in 1987, but I have to imagine this is what it felt like. I have to imagine that this is what everybody experienced. So if I go into HIMS, let's see, if I click on HIMS and I go to, I'm just going to stay in September with 31 days to go. You could also consider rolling it out, but for right now, to keep things kind of simple, I'm just going to sell something in the current month that I'm in. And then maybe next week, like going into the Labor Day weekend or whatever, that's where we'll see where we're at. And that's where we'll consider maybe rolling this thing out to the next cycle. But this is where just using the expected move is a very, very good place to begin. Like my expected move here goes all the way up to the 49 strike. And so with the expected move at the 49 strike, 49 and a half, let's say, I mean, I could go in, I could sell like a 51 or like a 52. And you can see for yourself, I'm going to bring in about a what, $1.30, $1.40 for doing that. The markets are a little bit wide because HIMS is not the most liquid stock in the world, but it's not too bad. And so I can bring in $1.30 or $1.40. Let me look at, hang on a second. What did I collect on HIMS on entry? Let me bring up my chains here. I collected 255. So I'm going to basically be able to increase my total premium collected by 50%. So I'm going to be able to add another 50% into kind of the big pot of premium that I've collected all along the way. And so that's not too bad. So that's going to improve my break-even point. Like if you think about the break-even point in HIMS right now, I've got the 44 strike. So I've collected we'll call it 250 just to make the numbers a little easier. So if I take 44 minus 250, right, that's going to be what, 4150, I think, right, approximately, right? So that's 4150. If I collect another $1.30, then I can subtract another $1.30 off of that. That brings my break-even point down to what, 40.20? And so then this is really helpful to work through. If for no other reason, then it gives us an excuse to use the Final Jeopardy pen. But still, for you may not have a Final Jeopardy pen handy at home. HIMS at 42.80, man, we are well above our break-even point. Now, again, it's a little dicey, like where it is now, and it ain't necessarily as clean and pretty as we would like it to be, but this is not too bad. Like, this is not too bad at all. So I actually really like selling the call here. And this is a situation where, again, if it's a stock where you're like, man, I don't really love this stock. This was really just intended to be kind of a smash and grab. This was really just intended to be kind of a, just kind of a one-off type of deal. I don't really want to hold this forever. I don't really want to, put this into my quote unquote investment portfolio or whatever. And so this is where being a bit more active makes more sense. And so one of the things you can do is selling a call against it. So let's see here. If I go to HIMS, yeah, I'll sell the 51. Let me see if I can get $1.40 on the 51. And so I'll basically have a strangle on if I get this filled. I will have kind of, makeshifted my way into a strangle. Let's try $1.35. All right, so we got filled at $1.35. So there you go. So now my break-even point at HIMS is just over 40, I guess. 40 and a quarter or something like that. And you've got the stock at about 43, just under 43. And so we're in a pretty good spot. And so this is going to be my HIMS situation. And so, we're grouping by order chains. So our Allison chains is kind of letting us down a little bit because you can see that we have grouped by order chains, right? And if I bring up like another strategy, you see it tells me the strategy vertical, right? If I bring up another one like Caterpillar, it tells me the strategy vertical, right? Let me grab my my circle there, vertical. But what do you have here? Just option. It's so generic. Like we know that's a strangle. That is a legged into strangle, but the platform probably knows, like, all right, we're not going to let you trick us because you legged out on the way in. You're probably legging on the way out too. So we're not going to give you the benefit of calling this a strangle. And that's fair, I guess, because we very well might be legging on the way out as well. So, all right, so let me see where you guys are at though, man. Man, I see you guys. Look at you guys. Appreciate you guys. Appreciate you guys so much. So very much. Let's see. Where are we at? Let's see, where are we at? Let me try to, man, I gotta surprise and delight somebody. Oh man, I gotta surprise and delight. Ava Sosa, is that I'm assuming that's a female? Could be a male, not sure, but Ava Sosa, that's obviously a name I'm not super familiar with. I think you might be the first Ava Sosa that I've ever met. But Ava Sosa, I appreciate you so much. Ava Sosa says, I love you, Dr. Jim. I love you too, Ava Sosa. Even though we just met, I feel a very strong connection to you here. And so I appreciate you. I appreciate you very much. Thank you so much for being here. And I hope you come back. And all those kinds of things. And just to thank you so much. And if I got the sex of your name wrong, then my apologies. But again, Ava Sosa is not something that you come across every single day. And so let's see. Here we go. Joel James, here we go. Got an actual question, and so maybe I'll have an answer. Joel James says, Dr. Jim, I'm getting the beta weighted delta of the portfolio into the negatives. What do you think? Okay. Well, I mean, this is, so the beta weighted delta of your portfolio, that is showing you the directional bias of all of your positions. So that is giving you, let me just minimize all this. That is giving you kind of one number to symbolize, what direction is your portfolio headed in, generally speaking. So if you think of your portfolio as like a big ocean liner, like a big, huge, cruise ship, right? And it's is it going south? Is it going, north? Is it going east? Is it going west? It's not going to give you the specific, latitude and longitude or cardinal or whatever, or this and that. But it's going to give you, well, I guess it was the cardinal stuff. But anyway, this analogy is blown up in our faces. But we press forward. It's going to give you, on the open seas, a south, a north, or whatever. But it's not going to give you the fine tuning ability of the individual positions in the portfolio. And so I just want to make sure we're all on the same page as Joel James is bringing up his portfolio delta. That's what that number is intended to do. Because again, if you look at your portfolio, right? I mean, I've got Hims, right? I've got Best Buy. I've got Starbucks. I got Wolf with a U, right? Look at Wolf with a U down 57 cents, man. You guys got me again. Wolf with a U. It's unbelievable, man. It's really unbelievable. Anyway, whatever. All of these stocks or companies trying to be stocks like Wolf with a U, they're all different. They're all not the same, right? Which is another way of saying they're all different, I guess. And so by standardizing them into one number, it tells you kind of the general direction of where your portfolio is headed. Okay, so now Joel has slipped into the negatives. What does that mean? That means it's a little bit short. So that means, generally speaking, he needs the market to move lower, generally speaking. Now, could that mean that the market goes down, he actually loses money? Yes. Because depending on the actual positions he has on in his portfolio, they may not necessarily be following that approximation. But by and large, especially if you're holding mostly equities, by and large, it is going to be a good indicator for how your portfolio responds when the market goes up or market goes down or market goes nowhere. Okay. What you're signing up for, Joel, is you're signing up to be a little bit short in this market, which I don't know if the internet bros are going to let you do it. I'm not sure if you're allowed to be short, man. You need to check, and I would get express written consent before you hang on to that negative portfolio delta for too long, because you don't want to upset your Johnny Pools 47. You don't want to upset your Johnny Pools 48. You're going to put yourself in a really, really, really bad spot. And so, but that's what you're signing up for there, Joel James. And so I appreciate you so much, my friend. And so let's see. Let's go to I see Emmett says Dr. Jim's intern's falling asleep and the soundboard should be strong. Soundboard should be good, right? And so no, she probably is napping. Well, she's 5 now. She doesn't really nap anymore. She's probably causing all kinds of problems for Autumn inside homeschooling. That's probably what she's doing. And so but let's see, where are we at? Let's go to the beginning. All right, let's see. Oh, Ash Finn got home just in time for Dr. Jim. Let's go, man. I appreciate you, my friend. Thank you so much. I just appreciate you for being a part of what it is that we do. Brian says, hey, Dr. J, I'm excited to see what you do for target earnings. How is your open P&L doing as of today? Also, why do they call it a skinny on options? I forgot about target earnings. That's right. Yeah, we could do some target earnings. We got some stacks of cash to light on fire. Yes, I mean, the P&L is doing, we're doing okay. That's not too bad, right? It's not too shabby. I think that's decent. And again, we don't even really know what we're doing, right? And so that's not too bad. And so maybe the show should be From Theory to Expecting a Butterfly. I don't know. Maybe so. But nevertheless, we're hanging in there. We're hanging in there okay. And this is with Oracle. This is with all the other stacks of cash that we've lit on fire. And so, I didn't think you could deep fake those numbers, but apparently you can. And so, we're doing okay. No, we didn't deep fake them. Those are actual real numbers. And so, yeah, we're doing okay. But what are we going to do for target? And what was the other question? Why do they call it the skinny? I don't know why they call it the skinny on options, actually. That was Tom's, Tom named that whole kind of category of shows. I don't know. I don't know where it came from. I think it just came from give me the skinny on whatever. I think it's just that type of thing where you're like, hey, give me the skinny on, fill in the blank, some subject that you're trying to learn about. So my guess is that's where it came from. But yeah, I forgot about target earnings. Man, Target. I mean, I'm shocked they're still in business, but at 104, that's not too bad. You know, I got the stock. I got earnings tomorrow morning, August 20th. You know, I kind of think, oh, you know what's funny? You know what's really funny? So Home Depot was this morning, right? And I looked at this before the show and I'm like, yep, that's about right. So Home Depot, you guys brought up Home Depot in the chat and I didn't want to trade it because we had already done a couple other things. But I said very clearly, I was like, hey, if I was going to play Home Depot, I would play it to the upside because I mean, it's Home Depot, right? I mean, let's use this common sense, right? But I didn't actually play it. I didn't touch it. I didn't actually play it. And what did Home Depot do today? Of course, it's up huge, up $11. And so there you go. So now that we're back in the mix and about to play Target, we will resume our status as the kiss of death. So Target TGT. You know, I kind of think so. Again, Target. I don't know how you can really not be. Again, just think of Target. Just think about it as a philosophy, not even like a stock. Just think of it as like an idea, right? Like in the abstract. I don't know how you can possibly look at Target in the abstract and not be totally bullish. I mean, they've got it figured out, man. Like when you go to Target, it's a super positive shopping experience. Like they've got it figured out. Like you walk into Target, like the aisles are all wide. It's really well lit. There's plenty of people like that are there to help you and all those kinds of things. Like it's a positive experience. Man, you walk into Walmart, it's like walking into like an 8-year-old boy's bedroom. It's like, man, you can't find anything. Everything's messed up. The aisles are super narrow. Like nobody's around. Just like your 8-year-old son who's supposed to clean his room. So it's like, man, I think Target, we gotta be mega bullish here, man. I really don't think we need to overthink this. So I think, you know, I mean, maybe we could do. I mean, let's do it. You know, we got some stacks of cash to burn. I mean, you guys just saw it, so I can't even hide from it now. What if we do a $10 wide butterfly? So let's go for it, man. 105, 115, 125. This might be too expensive. Like $3, maybe $2? Wow, man, they're just giving them away. That's some good stuff. So I'm thinking we buy the 105, we sell the 115 twice, of course, and then we buy a 125. So this is going to be a $10 wide expecting move butterfly in Target to the upside, and I love it. $1.95 looks like the mid price. This is going to be nice because it is a Tuesday. So, you know, if we get the move that we want tomorrow morning, we're not necessarily going to make a ton of money, but we could make a modest amount of money tomorrow. But if we don't get the move, then, excuse me, we still have Thursday and we still have Friday for this thing to come home to roost. So I really like this trade. I like the way it's setting up. And there you go. There is your, oh, wait a second. Oh, look at that. Okay, so let me pause here. Let me show you guys why I paused really quick. Okay, so that explains why it's so cheap too. So I misclicked. So before I sent it through, it's always a good idea, obviously, to just take a quick little peek at like the buying power, and it is what you expect it to be. This buying power on this butterfly, look at it. I'm leaving it on the screen so you guys can see it. It's like $2,400. That's way too much for a $2 butterfly. So something obviously is not lining up. I must have misclicked. I must have done whatever. Now, when I look more closely at the strategy, which is right here in the middle, you can see, you know, it's a 1 by 2 by 1. But that extra 1 as we grab our glacier freeze is also short. That's not supposed to be short. That's supposed to be long. So this is going to cost us a little bit more. That did seem really, really, really cheap to me. I expected it to be more like $3, which would have been fine too. But yeah. So let me clear this away. Actually, let me clear away my drawings. Let's edit the order. Yeah. Okay. So you can see it here. You can see buy the 105, sell 2 115s, and then erroneously sell 125. But that needs to be a buy. Oh, it's only 228. Wow, that's not even a big difference. Wow, that's nice, man. Okay. But the buying power effect is what it should be. It should only be what you pay for it. And so that's what you see right there. And so, all right, so that all looks good. Yeah, that looks really good. So let's go ahead. Everything lines up now with the buying power. Let's push that guy out and we'll kind of see what happens. Excuse me. All right, so no takers at that. That was 227, I guess. 229, 227. I'll try. Let me try 231. I'll probably get Phil. I'll probably get improved. No, I didn't get improved, but I did get filled. Okay, so 231. So there you go. So we're in target for earnings tomorrow. You guys know what to do, right? We're playing target to the upside. You guys know exactly what to do. Again, forget about little boys' bedrooms and forget about positive shopping experience. None of that means anything. We are now in it to the upside. So you, my friend, can make a whole bunch of money if you get in it to the downside. And so let's see, markets in the house. Dr. J, Hurricane trades, Generac. Yeah, that's Generac. I'm not trading Generac. But yeah, a lot of like my friends in the area have a Generac. Like they've got the Generac, they've got the the generator for the house for hurricanes, whatever. We're just doing it kind of 1991 style. Like we don't have anything. Like I don't even have the Civic anymore, right? So it's like I'm not getting a Generac. But yeah, you go for it there, Mark, with Generac. Generac. What is this? What is the ticker on Generac though? Hold on, Generac. Generac. Yeah, there it is, right there. GNRC. Okay, wow, they're doing pretty well for themselves. 198 stock price. That's pretty good. And so, just without even having any context around that, I mean, maybe it was 500 last year. I have no idea. But yeah, this is Generac's time to shine. There's no question about that. At least in this area of the country where it is hurricane season. Like I think Aaron is out there in the tropics right now or whatever, but it's not projected to hit our side. I'm not even sure if it's projected to hit Florida at all. And so, but it's one of many, of course. And so we're just getting warmed up here. But Sergio's in the house. What's up, Sergio? Let's see. Scramble Everything is helping out Emmett. That's good stuff. I appreciate you there, Scramble Everything. Yeah, having you guys buddy up together, like that's amazing. I mean, the discords and all the things you guys are doing, like that's awesome, man. That's so awesome. Again, remember, if you're watching the show right now, especially with the the live chat, it's open. You guys were super active in the chat, which is amazing, by the way. It makes it so fun for me. Like it's so much fun. And I really hope that's valuable too, as we kind of work through the different questions that come through and what have you. But you are now in a room. There's 600 other people that are trying to do exactly what you're trying to do. So man, like make friends, like buddy up, like take it offline, like Zooms and Discords and whatever's. It's like, man, this is a golden opportunity for you because I know this from experience, and I also know this from just communicating with so many of you all. Trading can be a very, very lonely thing. Very lonely thing. Right? It can be isolating, especially if nobody in your like direct circle of like family, friends, whatever, is also doing it. It's like, man, it's just you. Like it's just you, whether you live in like, Iowa or you live in Florida, you live wherever. But man, with the internet and like the connectivity that we all have with each other now, it's like, man, use this opportunity to buddy up and yeah, it's good stuff, man. And so let's see. Andrew Cortado says Ash is cutting people off in traffic, running over curbs just to watch Dr. Jim. Yeah, don't need to be doing any of that because you can always watch it on the archives. But man, I appreciate you guys. Let's see. Samuel, another day, another 45-minute P&L workout session with the doc. Man, look at you, Samuel. Thank you again for the Palo Alto trade. Samuel says it's 25 minutes of Dr. Jim digressing at a minimum, and then 20 minutes of C- humor, or the other way around. Yes, the humor has taken a hit. I would agree with that. Like we were B- for a while, but I mean, we're just, it's the same old, man. So we're just, we have a little humor decay. Like y'all are trading theta decay. I'm trying to battle against the humor decay. And so I would say C- is probably right. And so Ashfin is digging it. Andrew's digging it. Out of my way, I need to get on for Dr. Jim. That's pretty funny. I appreciate you guys. Let's see. Can't post links in the YouTube chat. Yeah, I don't think you can. I think you need to be like an administrator or something like that. But Sam L says, did you really make 150 on that Palo Alto earnings trade? Since you're keeping receipts, I'll be waiting for my cash in the mail. Yeah, you're not getting any cash. No, you're definitely not getting any cash, but I appreciate you. So I thank you very much for bringing that trade to our doorstep. Now, don't take me down next time, because if you take me down next time, you are not getting cash now, but you'll get an invoice then. So you'll absolutely get a little bill in the mail. And so Scramble Everything says, Dr. Jim, cooking with palm oil. Palm oil? Oh, that's like worse than canola oil. Man, don't let RFK hear you. Like, that's not going to be good at all for you. Palm oil? Man, you think Autumn's going to let me cook with palm oil? Are you out of your mind? Like, I need to be using coconut oil, and those coconuts, they better not have been touched by human hands. Like, I need fresh coconuts off the tree or off the bush, whatever it is. But they better be still warm or cold or whatever it is. Like, they better be ready to go, man. Palm oil. Wow. Let's see. Lefty's in the house. What's going on there, Lefty? I appreciate you. Stefan, Dr. Jim in the house. Hope all is well. Our QQ trade is looking good. It is indeed, my friend. And again, right now it's a sit and do nothing situation. We have worked so hard to get to this point, Stefan. So hard. Did you bring this trade to my doorstep a couple weeks ago or whatever? If you did, thank you, my friend. And if it takes us down, then you took us down. But right now we're in the clear. Right now we're in the clear. We can breathe easy a little bit. So just sit tight. I wouldn't even take it off. I wouldn't take your profits yet. I think you wait for your profit target. That's how I would personally approach this. And so I would encourage you to consider maybe doing the same. And so let's see. Andrew Cortado, Ash. Let's see. Laid back trader says finally some action. Yes, finally some action indeed. EMEA S&P's down 45. Nasdaq down 330. Man, are they going to squash them going into the close here? Are they going to send them down like 500? That would be really, really wild stuff. And so, yeah, it's crazy. Scramble everything. It looks like you are shut down. It looks like you are shutting down the P&L Open Bros. We're trying, man. Best Buy is still a little bit of a stick in the mud, but man, it's going to be quite a hero's journey if we stay in for earnings and it comes back and we're able to get out of it for like a true scratch. Man, that's going to be really something. Let's see. Oh, David Gallimore, what happened to the volume? Oh, hopefully they figured out I assume they did figure out the volume. And so I appreciate the team back there, of course. Let's see. Oh, Joel James, I made it to the surprise and delight. That's good. Sergio, P&L Open Bros hearts are being conquered. They are. They absolutely are. Justin's in the house. What's going on there, Justin? Thank you. Oh my gosh, the show's almost over. Wow, man. You guys have no idea. No idea. Especially with like really, really bad analogies about ocean liners and like little boys' bedrooms and Walmarts and stuff like that. It's like, man, it goes by real fast. And so, but Justin says a bull put spread on McDonald's. So you're thinking about a short put spread in McDonald's. Yeah, McDonald's up today, obviously. I mean, again, it's a flight to quality, right? It's like, where do you park cash when you don't know where to park cash? A, you go to brick and mortar electronics stores, and B, you go to, fake meat. And I don't mean fake meat like Beyond Meat. I mean like meat that you think could be real, but everybody knows is actually fake. And so McDonald's at 310, I don't know there, Justin. The problem is the IV rank is too low. So I'm going to pass on this only because the IV rank is too low, right? So a bull put spread is another way of saying a short put spread. And so I would typically like to see the volatility a little bit higher before I'm going to sell some premium. With the IV rank at 8.6, that's a little bit low, Justin. I'd probably rather see it at least 15 or 17. And then 20, 25, 30, I'd be very interested in maybe selling some premium. So I'm going to pass on that for right now. But man, thank you for being here. Thank you so much. But Rancher's in the house. I see you. I appreciate you. There's Ava Sosa. Made it back to Ava Sosa. Man, look at you guys. Man, I appreciate you guys. Richard says you can't put a price tag on a teachable moment. Yeah, maybe not. Maybe not indeed. But man, I'm out of time and I got to go. I can't believe it. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Roll it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of choices, you'll get overexposure. I'm too Titanic for you Twitter and twist. You burn it.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What's going on, everybody? Just when you thought Intel was dead in the water, no, it's not. There's a lot to unpack there, so we'll talk about that investment by SoftBank. Viking Therapeutics, it was becoming a player, man. It was so close. And then things just didn't go well. It happens when you have a phase 2 trial. So they got a lot to explain. We'll talk about what's up there. And finally, Target has earnings coming up. We got a lot of retail earnings coming up more recently, but Target is one where they have been struggling a lot. So we'll talk about what we see in Target and if there's a trade to put on there. We'll talk about those three things and more. It's been a little bit, but we actually have an active market today. Not a whole lot of volume as far as on ES, but still a lot more interesting, and it has been. So we got a couple of trades to maybe put on. I've been doing a couple of things here and there. Maybe you have too. So yeah, we'll look around and see if there's anything interesting and talk about those three things that I mentioned at the top of the show. Welcome to the most dangerous show on the tastylive network. Folks, it's Engineering the Trade, and I am your host, Jamal Chandler. So I was watching this show last night. It was about, it's on Netflix. It's something about Hollywood and like how Hollywood kind of got started. And I was debating whether to keep on watching it. Me and the wife were watching it. And there's no actors of note. You know, it's one of those like depictions in a way, which sometimes, you know, those are hit or miss. But the story is so compelling that it made it really interesting. And it talks about how this one guy who actually was here was one of the first. Just the idea of being an entrepreneur in the United States of America, man, is a trip. And the roadblocks that you run into sometimes, like this guy initially, he actually just happened to walk into a movie and it changed his life. And he's like, you know what? I'm going to create a movie theater, which back then people used to create movie theaters out of nothing. Literally create like a movie theater out of a storefront, close off the windows. Nobody can see, get a projector. And I guess they used to be kind of seedy back in the day, which, I mean, I guess you could see, you know, a quiet, dark room, not a whole lot of light. You know what I mean? It's kind of weird. They said that a lot of guys used to go in there. It makes sense. I mean, I'm not going to pretend like it doesn't. But anyway, I digress. He created some movie theaters initially to have people come and watch movies and charge a nickel. I'm sure you heard of these before. Nickelodeons. That's actually where the word comes from. And after a while, he started realizing, you know what? People don't want to, again, you got to remember, we complain now about content and how many things are that we're watching or how many things that, you know, there's a lot of stuff out there, but I'm just not interested in this show or that show. Well, back then you had like two choices and that was it. And once you watched that thing and maybe twice, you were done with it and you didn't need to see it again. I mean, that's kind of how it is now, right? And so this dude, eventually people were getting tired of watching the same old movies. And so he started realizing, you know what? I'm going to buy other movies from other people and then rent them out to people. Sound familiar? Netflix, Blockbuster, if you will, even before that. So he was basically what they called an exchange, where he would rent out his movies. It was a really fascinating thing. We watched maybe 2 episodes. I'm kind of into it now, just from the history standpoint alone. It's kind of dope. I'm going to continue watching it. I forget the name of it, but it looked pretty cool. You know, I think I will continue to watch it. Let's pull up the slides real quick. Talk about a couple of things before we get to the platform, because there is some interesting stuff going on today. But I just got to talk to you about this. Look, for those who, I feel like most of you watch my show. I mean, those who are watching right now, you see it on regular, and I appreciate you, of course. I'm bringing this up for those who don't always watch the show. I try to find the most interesting no newsworthy things of the day. And look, there's a lot of different news out there. Sometimes it might be things that you already heard this morning. I'm going to give you my spin on it. Case in point, everybody has saw about the $2 billion stake in Intel. We heard about it last night. We've been hearing for the last week the U.S. government was going to take a stake, and we saw Intel actually moving around a decent amount on these discussions. The interesting thing to me is you got to remember tariffs are still at play. And Japan was one of the countries that the U.S. was going back and forth with on tariffs for a while. You can't forget about U.S. Steel and that deal with Nippon Steel, right? And how they originally were trying to buy that. They were blockaded. Eventually, that deal was allowed to go through only if they were giving XYZ amount of investment in the U.S. I think this is a part of that investment in a way. SoftBank, who, again, invests a lot of different companies across the board, they are the ones who are doing the $2 billion stake, which is about 2% of Intel. It's not a huge stake, honestly. But what they're clearly doing is setting up the next thing to happen and to make sure that tariffs don't just get wildly thrown their way. This is a country thing, if you will, for Japan, this investment. It's huge. And guess what? The government is making sure that SoftBank is they're going to be good on their investment, because more than likely, I wouldn't be surprised if you hear about the U.S. government getting an investment in here soon. SoftBank is already in. Once the government comes in and buys them up, they're going to make automatic money. This is how the rich stay rich. They keep it in the family. That's right. So this is a real interesting one. It's more than just what you're seeing on the page here. This has to do, in my opinion, with a lot with tariffs. Also, don't forget, just not that long ago, and it's also, besides Japan, this is a situation where the U.S. government is making sure that they get whatever they want out of these other countries and get investments into the chip game. If you remember, for those who were trading, in 2009, the U.S. government made sure to get their investments in the bank sector, and they made a ton of money off of that, right? They had TARP, where they basically invested in a lot of bank companies. This is kind of the similar thing, but a little bit different. This time, they're going to probably buy a stake in Intel. They're already going to get money from AMD and NVIDIA. Just remember, last week, AMD and NVIDIA were down to give up. They said that they're down to give up 15% of their revenues from sales to chips to China. There's a lot going on here, folks. Y'all ain't ready for it, man. I'm telling you, there's a lot happening. So how can we profit? I wonder if Intel has more room to go. I do. Vol is a little bit bid right now. Maybe it is time to sell some puts in here, but it's just the put market is. I can't sell something for 93 cents. I don't care, even if it is a $25 name, but maybe we'll take a look at it and see if there's something interesting we can do. Viking Therapeutics, they were on their way to becoming a player in the weight loss market. They had the weight loss pill, and I feel like, I can't remember who it was, if it was Lilly or if it was NVO that was interested in buying them not too long ago, but they were on their way, and this is a huge swing and miss on this pill recently. Things didn't go well. There's a lot of side effects with these. You know what I think about when I see this story? Oddly enough, again, it goes back to another show I saw some of recently. Did you guys watch that documentary on Netflix about The Biggest Loser? I didn't watch that show at all. I couldn't do it. I couldn't do it back in the day. But I will say it was always a fascinating show. It was a fascinating thing, right? The documentary sheds a lot of light on how people who won the show, you know, they weren't able to keep the weight off and they went back, because we all know, like, it's a hard thing to do in general, not making light of weight gain and loss, but it's a hard thing to do in general, to lose the amount of weight that people were losing from that show and then to go back to your normal life. You have to make different changes. And that's been a lot of the thing about these pills, right? These weight loss pills, is that most likely, a lot of times people, you don't ever really get off of whether it's the pill or the shot, at least from what I understand. They're trying to break ground, but you just never know what kind of side effects are going to come along with these things too. And so, you know, there's going to be lots of phases. We know Lilly has a drug. We also, obviously, we know about Wegovy from Novo Nordisk and things like that. But this is a huge area going forward. I know I was really interested in the NVO stock about 2 years, the beginning of 2024. I did have a trade on it. It didn't work out the way I wanted, but this is an interesting area overall. And now, honestly, I think with Viking Therapeutics, they could end up becoming a target at this point. Their market cap was $4 billion. Now it's down to $2 billion. And honestly, the only trade that makes sense in here for me is, I don't know, maybe long calls. But I'll tell you, the calls are expensive. But I don't necessarily feel comfortable selling puts in here to get long, and I certainly don't feel any comfortable selling upside. Be careful selling upside, is my point, is because this could end up becoming a target that gets acquired. Who knows? I don't know how. I don't know. It all depends on some of the optics or some of the the numbers around their drugs and how valuable potentially maybe they are. Who knows? Last but not least, Target. Target has earnings tomorrow morning, I think it is, right? Yeah, Target has earnings tomorrow morning. Man, wow, the stock turned around. Isn't that funny? This stock, it's turned around just a little bit, not a whole lot, but this thing has missed earnings for 10 quarters. They've had, flat sales, falling sales. It's nothing but negative news around it. And it makes me want to be contrarian on this one. It does, because look, things are pretty bad for Target. We've seen the stock price fall off big time. How much worse can it get? Well, it's never good to ask that question, but things could get worse for them. But look, they've been dealing with just theft for a while. I feel like they're changing their stores around. The last Target that I was in, when was that? I don't know, a couple weeks ago. I noticed that they are definitely catering more to women with the way that they've structured the store. The Target I went to, it had all the women's clothes. First aisle, like if you walk down the main area, like say you walk in the middle of the store and the cash registers are over here and stuff is over here. This was all like women's aisle, and then there was like makeup, and they're clearly catering to who they know mostly comes into the store, and I think that's really smart. Maybe it's the beginning of a turnaround for them. I don't know. I think some calendar calls are in store. Leftovers. Hyundais were the most stolen vehicles in 2024. Let's move to the next slide, please. Target never has enough registers open. Yeah, but I mean, doesn't everybody check out on their own nowadays? It's kind of what it is, right? I think. Oh, SLG wants to know my favorite show of all time, but just describe it and then don't tell us the name. Let's see. I would say my favorite show of all time. I mean, this goes back. It's hard to say favorite all time, but the one that comes to mind when you say that phrase is a man who uses his knowledge to get out of jams. Let's see if you can guess it. Leftovers. These are the top 10 most stolen cars in 2024. If you could kind of imagine some of the dismay from the Hyundai Kia company. 31,712 cars of the Hyundai Elantra type were stolen. Second was Hyundai Sonatas, 26,720. Now, if you remember, Hyundais and Kias produced between 2011 and 2021 lacked that electronic engine mobilizer, which are standard anti-theft feature, and that's why they were just so easy. Remember the Kia Challenge thing that went on like, what was it, like last year or so, whatever, a couple of years ago? I don't remember exactly when it was, but this showed how easy it was to break into those cars. You remember that? And so that's obviously why they were kind of picked on a lot. But again, when you look on this list, how many I got? 10? Out of the 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of the 10, Hyundai and Kia are 4 of them. 40% of them were their cars. I guess not numbers wise, maybe. I don't know. It could be higher. But just 4 out of 10 cars that were stolen were Hyundai Kias. That's not a good look in 2024. Not at all. Chevy Silverado 1500. Shout out when your car is named. 21,666 were stolen. Honda Accords, man, I used to like, when I was 17, 18, I used to obsess over the idea of having a Honda Accord. I thought they were like the best first car for me, you know what I mean? Never got one, but I thought they were great. 18,539 of those were stolen. I guess, Honda's on here twice, right? The Kia Optima, 17,493. I've never had any of these cars on this list. But my mom had a Hyundai. When we were kids, my mom had the Hyundai Excel. Remember that? Yeah, she had one of those. They were not that great, got to tell you. That's why today I can't even look at Hyundais and Kias that way. But I tell you, they don't look that bad, especially Kias. Like some of those Kia trucks, they actually look kind of cool. Kia Optima, did I say that? 17,493 stolen. Honda Civics, 15,727 stolen. Kia Soul, 13,562 stolen. Ford F1 Series. I feel like those wouldn't get stolen that often. Trucks, I don't know. 12,952. Toyota Camry, 12,296. Dodge Charger, 11,452. Those are fast. Yeah. Just kind of interesting to see the cars that people steal. But again, yeah, you remember the Kia boys? Oh, you got it. Yeah, looks like the you guys on here got it. You guys are smart. It is MacGyver. Yes, it is MacGyver. So Hothead, AH got it, and Lincoln DeShane got it, although you might have been copying Hothead. I don't know. But yeah, that was my favorite show as a kid growing up for sure. I did love Quantum Leap, not gonna lie. Look, any show that has time travel involved, you are going to get me. There's no doubt about that. I loved Quantum Leap. That was a huge show. Airwolf was a dope show. I actually didn't watch it, but that was a really, really cool show, I always thought. But MacGyver was definitely the favorite show for me as a kid. It's what ended up causing me to be an engineer, material science and engineering. And lo and behold, we're on engineering to trade. So it's interesting what your kids watch. They may grow up to do it. Let's move to the next slide. The ratio of large caps to small caps is the largest we've seen in 25 years. What does it mean? Does it mean we're going to turn around? Does it mean this is like the 2000? I don't know. It just tells you that there's a lot of tech names that are moving right now, and they are carrying the market. I don't know. I feel like this time should be different, but it does seem like some crazy outperformance. And as a result of that, that's why I am long the Russell 2000. I think I am long both now. After today, I just got long a NASDAQ call spread in October, at the end of October. And then I've been long the Russell for a while. I've talked about that. I just rolled that further out in time. So they're both at the end of October. We get 2 Fed meetings in there. We get 2 jobs reports within that, and we get at least 2 CPI reports. There's a lot of data that's going to come between now and then, but I'll show you that when we get to the platform. Let's move to the next slide. This is the state of the VIX. Even though we're getting a little bit of volatility today, it's been contango. That has been it for the last 3 weeks, maybe even longer, honestly. You can see where we are. This is based off of just yesterday's numbers, but again, low VIX. Contango is the form of the day. Basically, things don't really change much until you get about, I don't know, what's that? Probably sometime in, what is 120? December, basically. December, and then the curve gets basically somewhat flat going further out. But yeah, we're still in strong contango despite what's happening today, and we should be. This is, I know we're down 47 and we haven't seen this in a while, but this is really nothing when you think about it. Blip on the map. Let's move to the next slide. Bitcoin has kind of calmed down. Have you noticed that? Like, it's not as volatile as it used to be. Just looking from daily high to low range, these moves have not been big at all compared to what we've seen in the past. You'd see 8-10% round tripper range moves in a day, and we really haven't seen that. So Bitcoin is really maturing. It's got me even thinking about buying down here. I would, I'll tell you what, I'm not going to do it today, and I don't really want to buy any, futures like the MES or anything like that. But if we have another day 2 move like this, Bitcoin would definitely be one of those things that I would buy. I would buy the MBT contract. It's been fascinating to me that the volatility has calmed down in here. It's really, I guess it's what, 1, 2, 3, 4. It's down 4 days in a row. That's kind of somewhat interesting, I would say. It's hard to trade these options, though. I'll tell you that for sure. But Bitcoin being down 4 days in a row is kind of interesting to me. And it makes me want to try and find a trade. But I personally like, there's no volume in the options. And so I personally just like to trade the MBT contract if and when I do it. And maybe that's what it is. But I would need another day down for things to get a little scary to do it, I think. Let's move to the last slide. So what do we got here? We got Toll Brothers has earnings. I think there's been a little bit of bid to some of the home builder names more recently on days like this. We got Target earnings, which I think I'm going to put a trade on. Estee Lauder has earnings. TJX Companies has earnings. Baidu has earnings. August VIX expiration is tomorrow. Remember, if your VIX options, if you put on VIX options today with the hope that this day 2 move is going to mean something, and you did it on the August 20th contract, I'm sorry to tell you that is, unless we move the rest of the day down and that VIX goes up, it's not going to matter. These options end trading today. Well, I shouldn't say it's not going to matter. Let me just explain. if you put on a trade on the August 20 contract, on the August 20 expiration options that expire, right? The options on VIX that are the August 20, they stop trading today, and the VIX future for August expires tomorrow morning, and those options will reflect that. So case in point, VIX, I'll talk about it when we get to the platform in a second. FOMC meeting minutes are tomorrow. Could be some volatility there, but my point is like, that's not until the afternoon, and so your August VIX options wouldn't capture that move if it happens. Powell speaks on Friday at the Jackson Hole Symposium. Who knows what it's really going to mean, honestly. Number of S&P 500 stocks above the 50-day moving average is 292. Let's move to the platform, please. Here's what I'm getting at on VIX. I think a lot of you know this, but for those who don't, it's probably an interesting tidbit. Say you bought this VIX option right here for, well, you wouldn't get it for 13, but let's say 15 cents, right? You bought it. I could buy it right now. You need to pay attention to what the actual VIX contract for that August expiration is. And so that's right here. This VXQ25, that's August. This is 1565 and 1570, right? So that tells you it's not in the money as of now, right? Of course, it'd have to be over 16 to be in the money, right? So this is saying, using some volatility value to say, to break even, you need VIX August to be trading 16.15 if you bought it for 15 cents, right? That's breaking even, right? And so what happens is today, by the end of the day, trading day, you are not going to be able to trade this anymore. As a matter of fact, you won't be able to trade it tomorrow morning. And that's when this VIX future expires, you see. It expires tomorrow morning. So for some reason, say you're long this thing at 15 cents, and tomorrow morning we come in and we're down big, well then, yeah, VIX probably in the morning will price higher than 16. It could end up being, 1670. Then you could make money on this thing, right? At that point, you make 55 cents, right? If it's trading 1670, you make this call will be worth 70 cents, and you'll make 55 cents after your initial investment of 15 cents, right? So that's how that works, just so you understand. Long story to say, tomorrow morning is the expiration. August VIX will cease to be no more, and front month future for VIX will be the U contract. That's right, it will be U. Let's see. Have I ever watched the remakes of MacGyver and Quantum Leap? I did watch the remake of the Quantum Leap one. It was halfway decent. Did not watch the remake of MacGyver. Definitely not. I did watch MacGruber, though. Does that count? Target has earnings, and I tell you what, it's a little tempting for me. 200-day is 115. Really far upside is 120. Which ones do we do? Because this is so far out, I think I'm going to go a little bit further out on this. I'm going to go with this 115. Because it would have to run $10, right? Which I think is about the expected move. Close to that. Yeah, it's essentially $10. That could work. What I'm going to do, I'm going to go 115 here. I'm going to do this 115. How far out do I want to do? I'm going to go 115 here. That works. And then I'm going to go, there's so many different ways you could go with this. I'm going to go every two. I'm going to go 117 here, 60 cents. Can I get it? Oh, come on. Don't be like that. And then I'm going to go, the 120 strike. I'm going to use the AUG 29s versus SEP for the 120 strike. 45 cents. Give it to me now. I'm going to try to go with that. I think, that the 120 would be like kind of crazy, but maybe it could happen. Maybe. Gosh, I am not paying more for the 117 strike than I did for the 115 strike. You're crazy. I think the only reason that's happening is, I don't know why, but that's not going to happen. You guys understand what I'm saying? The 115 strike cost me 62 cents. I should not pay more for the 117 calendar, especially using the same strikes. It should be cheaper. And I don't care what it's doing. The markets are a little weird, but I'm not going to pay up. So that's what it is. Option theory will not, my understanding of option theory will not allow me to pay up for that. Not going to do it. Some other things I've done today that maybe you've seen, maybe you've been watching shows, maybe you've noticed. I did roll this fig. It's one of the more newer names, right? I did have a zebra in here. I had the October zebra. I rolled it further out. I went to November and rolled down some. So I was in the 75.80 before in October. Now I'm in the 65.70 in fig. It's taken a little bit of a fall, so I did that. I also did the same thing in CoreWeave. Obviously, the stock's taking it on the chin recently. I got a bunch of different things in here, some calendar call spreads, but my main position is the zebra. And so I had one. I had like the 92, 95 in October, rolled down and rolled out, and now I'm in the 85, 87 in November. So that's what I've done there. I also got, like I said, I've been looking at a NASDAQ contract because, again, if this is a blip on the map, then if NASDAQ returns to highs, remember all-time highs were 24,000. What if another 1,000 happens on top of that over the next month or so, right? So that's what I'm playing for. I'm playing for more upside, yeah. And like I said, I went out to August 31st because this captures 2 jobs reports, captures 2 inflation reports, some other stuff in there. So I know it's a pipe dream to go a little bit further out, but why not? It looks like somebody else had the similar idea. They did 20 of these on the 25,025. It looks like it to me. I mean, again, I don't know exactly what they did, but looks like they could have. It didn't cost that much. It was like $1,700, which is not huge for my account. I mean, it's not 10%, but it's like 7% or so, I would guess. Again, I'm playing for a big time upside. I'm going 73 days out. I've been in the Russell for a while, the RTY contract. I've had a call spread in there. It was in the end of September. Today, I just rolled it out to the end of October. So, yeah, I am long Russell. I am long NASDAQ. Whichever one of you wants to make new highs, let me know. I'll do it. I did post the NQ trade to the follow page. I did it earlier. I did it during Futures Power Hour. You should see it. I'm surprised you don't, unless you're just messing with me. But you should see it. It's in there. MNQ. Yeah, I did it earlier. Yeah, it's in there. You should see it. Outside of that, I am not. I actually just sold. It's the first sell vol I've had in a while. I sold a hood strangle. I sold the. I wanted to just sell downside, but honestly, I don't mind selling some upside in here too. The highest we saw this thing reach was about 117 or so. So I feel good selling to 130. I just got filled in target. There we go. I sold the 90. I sold the 90, 130 strangle. I feel pretty decent about that. Vol is pumped up a little bit in here. What's the actual implied vol? That's high, 60s. I like selling that. So I am. That's mostly what I've done more recently, and I'm holding out hope for a few more trades. If we go down further than them going after some of the bigger names that implied vols are in, my point being, right now when I look at a lot of those Mag 7 names, NVIDIA, Amazon, Google, most of them are still lower IVRs, so I'm not chasing anything yet. I'm just waiting to see if we're going to have another day of downside movement with all the stuff that's coming out over the next couple of days. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. See ya.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hey everybody, Tim Knight here on the Eastern Seaboard as opposed to my beloved Palo Alto. I'll be dark for the next couple of days, Wednesday and Thursday, traveling and getting back. But Friday, which is Jackson Hole Day, I guess, I will be back in the saddle, my normal place. It's a very red day today, which I appreciate. The market has been surging lifetime highs almost on a daily basis for the longest time now, ever since the April 7 bottom, and it seems to be sputtering at this point. You can tell because the likes of Zero Hedge just stopped talking about Goldman Sachs has to buy, Goldman Sachs has to buy, Goldman Sachs has to buy, and they talk about politics or something just to change the subject. I am as constant as the Northern Star there. I'm always looking for good setups on the short side, and I've got 25 positions, and I think to a man, they're doing well today. So it's a nice day. Of course, we're all at the mercy of whatever Mr. Powell says on Friday, whatever gutting of the U.S.'s future he chooses to do for his banker bosses. We'll see on Friday. And of course, next Wednesday is NVIDIA. That'll be fun. So a lot of cool stuff cooking, and I've got some charts set up for you. So why don't we thumb through them before I depart? Here is the spider. In this instance, our lifetime high was back here a few days ago. We have given up pretty much the entire rally since that CPI shocker came in. You can see here that we're approaching the lows that we had on Tuesday. Or I guess that'd be Wednesday, whatever this day was. That was when the mega rally took place based on the fact we all know, which is inflation is only a couple of percent, right? That's why my utility bill is over $1,000 a month. But we've given all that up, and we've broken below this level, and which I've pointed out. I've said that the first minor support, the itty bitty bit of good news for the bears would be a cracking of that level. Well, it be cracked. So that's pretty cool. So that's the spider. Over in small cap land, we're getting a bit of a diminishment there too. And what I've done, this line is merely anchored to this prior high. We've got a bit of an overshoot here on that Tuesday, Wednesday rally. And we are pushing into where we were, and forgive me, Wednesday, Thursday rally. We're pushing into that Wednesday bar right there with the small caps. As far as the cubes go, those are particularly weak today because they're particularly overpriced. And I can tell you, as a lifelong student of the Silicon Valley, and as a multi-decade resident of the Silicon Valley, and as a person who's worked in technology since I was a young lad of 15, the things I've seen lately are breathtakingly astonishing. They dwarf anything from 2000 in terms of unchecked insanity. I have had a close look. I've seen things that nobody in the public has seen. And it's just beyond toast at this point. So, having said that, it's no shocker to me that the cubes are finally starting to get a little bit crispy. And, at some point, we're going to see something that makes the internet bubble collapse look like romper room. This may not be the beginning. We may have lifetimes ahead. God knows Zero Hedge thinks it's going to be that way. As does Elliott Wave. Everyone's sort of given up. I'm like the last person crazy enough to do anything bearish. So it's just me, folks. I'm all you've got. Otherwise, just listen to ZH and Goldman Sachs. They're the mouthpiece. But we do have a slip lower, and that's cool. But it is imperative for the powers that be to keep this thing propped up, because any view that you've seen of the so-called internet bubble is conservatively valued. It was very sane and very sensible compared to where we are right now. Moving on, here's Exhibit A. And I wish I could tell you what I know about these folks, but I can't, or I don't want to. But believe me, in a couple of years, I'll tell you all about it. In any case, we're falling hard on this. And this was at a lifetime high just 2 trading sessions ago. And we're starting to slip lower pretty hard. This is one of the aforementioned 25 shorts. Yeah, a couple of years. I think I'll write a book. Here's another one, Netflix, which I don't have a position on because I don't trust it. But we had been pushing higher and higher, and we've slipped pretty hard lower on this to that midline of that long channel that we've had. As far as the diamonds go, I've got a renewed interest in the diamonds, so much so that early today, I bought a whole bunch of October puts on the diamonds, the DIA, and we've got a cute little shooting star on that so far. My kind of supposition here is that the stuffing hasn't quite been beaten out of the diamonds as it has been on, say, the cube. So I'd like to get in relatively early on this, assuming that we have topped out. And so, yeah, that's my only options position. I've got puts on the diamonds. Within that, as I mentioned yesterday, I had supposed that the United Healthcare mega rally was probably done. It's done. We have thrown away all of yesterday's gains, and we're pushing into where we were a couple of days ago. So, yeah. Just a dumb guess on my part. Didn't do anything about it, but I did mention that I think that's probably shot. And yeah, it was shot. And you know what? I went ahead and shorted this one too. I made mention of Clover yesterday. And you know, yeah, it's low priced, but that didn't stop me. It's a beautiful chart. So I went ahead and entered a short on CLOV. I also saw pretty much everything I mentioned yesterday as a short ideas down today, like JOBY. I'm not showing that today, but that was down like $6 or $7 as well. So a lot of these really high flyers have been slip sliding away. The whole breadth of quantum stocks, and we've talked about those a bunch before, are giving up the ghost. RGTI, QBTS, QUBT, IONQ. I'm like the Rain Man of ticker symbols. It's my only skill. If I've met you before, I won't remember your name, but I'll never forget a ticker symbol. And it's, you know, cool as it is, and quantum computers are really pretty. If you've seen, they look like some steampunk creation. They're really awesome looking, but they don't work yet, and they may never work. But there was this whole gestalt about getting into that scene. But people are starting to realize, well, there's this massive companies valued at countless billions of dollars with zero revenue and zero profits, and gee, maybe that's not a great idea. So they're starting to sell off across the board. I think every single quantum's down today. So yeah, quantum. What else? AMD's finally doing nice things. This semiconductor firm has been, of course, experiencing a triple-digit rally since the April 7 bottom, and it's finally starting to sputter. I reshorted this a few days ago, and it's all well and good that it slipped lower, but the cool thing is that it had a nice jump down today, and so I've dragged that stop loss down to yesterday's low, tighten up that stop, reduce risk, hopefully lock in profits. So that's a positive. Boeing, these are just a few odds and ends from my current positions I wanted to share. Boeing's down nicely today. It too had rallied for a couple of weeks, pretty much every day, and now it's starting to head lower. Oracle, another nice one. We've talked about this on a daily basis recently. We had a nice push down, couple of greens, nice push down, couple of greens, nice push down, kind of a pattern going on there. I like those red bars more, but yeah, it teases us a bit with those green bars from time to time. Here's our old friend Roblox. And as I mentioned yesterday, I had shorted it like up here, I covered a couple of days ago, and I had said that I wanted to wait until it could close this gap. I got a little impatient. It didn't quite close the gap. Maybe I'm jumping the gun, but I've gone ahead and re-entered it. Strictly speaking, the gap is up here. So if I had any patience, which I don't, I would just wait. But I went ahead and re-entered, and I've simply set a stop loss just above yesterday's high. We'll see if it works out. Salesforce CRM. I saw that the Tasty team sent out a information today about the Dow in particular. They did a nice breakdown of the Dow 30 with respect to volatility and how they've done in different time frames and so forth. And I took note that the most volatile of those components is this one right here, CRM. And so I've got short this one, and I've set a stop anchored to this gap. So it's not a huge position because it's kind of a far away stop, but that's something cooking too, based upon a pretty decent, sort of okay head and shoulders top right there. So that kind of lines up with what the Tasty team sent. And here's a new one I don't think I've mentioned. This is Wix, W-I-X. This is a particularly small position because, again, the stop is a ways away, but I just couldn't help myself. I wanted to get in at least a little bit. So I've shorted this one too for what appears to be a nice topping pattern. Gold, I made mention yesterday how it seemed to be threatening its trend line. And yeah, it is. I didn't do anything about it, as I said. Those who did, good. It's going down. And we're getting dangerously close to this trend line. But that little bearish engulfing pattern paid off. We're getting a bigger drop today. As I said, the only participation I had was by way of XME, the metals and mining ETF, which I was already in position on. I increased the position just because I saw the GLD bearish engulfing pattern, and so this is going down nicely too. So yay. And as far as the miners go, GDX, these two are reversing hard away from their own peak. So no longer precious metals as a hedge. I'm just seeing assets in general, be it Bitcoin or precious metals or equities, all kind of go down in tandem. And as far as XLB goes, this one is one of the few that's showing any kind of strength. It's up a little bit, but I've actually increased the size of this one too. I'm feeling pretty optimistic about the material select sector ETF short. Funny enough, there's a lot of newer issues that have the word bull in them. It's just sort of a good marketing tool. Not having a good day, as you might guess. Here's Webull, down pretty hard in general and even today. And a very young offering, Bullish, which came public, looks like 5 trading sessions ago, and has been down pretty much every single day. Lifetime low today. I know lifetime of 5 days isn't that big a deal, but it's off like 50 or more percent since it just debuted a few days back. So yeah, anything with a bull in it doesn't have that glow that it might have otherwise. As far as Bitcoin goes, after the lifetime high we saw a few sessions ago, we're getting slammed on this. This is down, what, $12,000 or so, well below even our little trend line there. So things not looking so good in crypto land. And our stable coin land here is CRCL, the stable coin outfit. Pretty young offering and pretty steady slosh lower on this one too. Kind of keep an eye on my time here. Oh my goodness, it's the bottom of the hour. Okay, so just to wrap things up, as I said, the 2 big events forthcoming. We've got Powell on Friday morning. There's TLT, our very slow possible reversal top on that one. And of course, the big event next week is going to be NVIDIA's earnings on Wednesday, and all eyes will be on NVDA on that day. So as I said, I'm tied up for Wednesday and Thursday. Bear Force One will be returning to the Bay Area, and then Friday I'll be with you, and we'll see what mayhem has ensued since then, including Jackson Hole. So thanks for joining me, and I look forward to seeing you at the end of the week. Bye-bye.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I went out this morning, out my front door to look to see my pumpkin.
Yeah?
It's gone.
Your pumpkin is gone?
Gone.
Seriously?
Gone.
After we just talked about it?
After I brought it back all the way from Wisconsin, carried that monster of a pumpkin, it's gone.
It was huge, you said, right?
Huge.
I mean, it was like a really, really big pumpkin. I was on Google Earth last night, and they found your pumpkin. Like, they must have taken a picture exactly when your pumpkin...
Yeah.
You must have put it out there.
Did you steal my pumpkin?
What pumpkin?
Did he take my pumpkin?
I don't know anything.
Because my neighbors have pumpkins outside and they don't, and all their stuff is there. My pumpkin's missing.
It's a nice looking pumpkin, Tom.
You drove down to the city and you stole my pumpkin. Oh my God.
What are you talking about? Seriously. Seriously, I don't know what you're talking about. This pumpkin came willingly. It was being...
Oh my God.
It's very happy.
This is a conspiracy. I hope people watch this and realize who you really are. You stole my pumpkin.
I live for this crap. Are you kidding me?
He came to the city and took my pumpkin.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. And look at this, Sadnov. Even the S&P is down 41. NASDAQ, the big leader to the downside by almost 1.5%, 330 points, as foretold by the Sosnovsky.
Who are you going to call? Who are you going to call?
You're my Ghostbuster.
Who are you going to call?
Man, nobody can be right 1 out of 15 times like you. No, sirree, Bob. Russell down 18.
And I did get those futures in down over 300.
You know what? You were in the bathroom. You got lucky. Russell down 18, Dow down 34, and volatility up by 37 cents, about 17 cents off its highs of 18.50 for the day, still relatively low. Bonds up 19 ticks. They're right on their highs. Bitcoin, that's your big one to the downside today, $3,000. Big move to 113.5. These are numbers we haven't seen since August, Sosnov. That's right.
since the beginning of the month.
Since the beginning of this month. That's right, Sosnov. August. Ethereum down 63. It's had a 4 or 5 day slide. Oil continues to go lower, down 74 cents. It too has been sliding last couple of days. Gold. Everybody thought gold was going to catch a little bit of a bid here. It did not. Down 17 dollars to 33.60. Silver down 75 cents on a percentage basis. That's a much bigger mover than gold. Net gas is an absolute pig, Sosnov, down 12 cents. But we had some movers today to the downside. No doubt about it. Netflix right out of the chute down 31, MSTR down 25, Coin was weak down 17. I think Meta was a big one to the downside too. Ivy rank is only 8 down 16. Some of the high flyers like Palantir is on about a 6-day bender here, Sosnoff. I mean, have you ever seen such price action from a stock like this?
These prices are this is just the beginning of their normalization.
Oh, I love it when you get like this. Hold on, can I show you? Can I show you one more? How about AVGO? Can I show you this one? Is this another one that's just?
I hate that stock. I don't even know. I took it off my screen. I literally took it off my screen.
I
know it's down $10, but it's up 700%. I mean, yeah, everything got killed today. I mean, it was across the board.
Well, some of the high flyers, yeah, really did.
Anything that's crypto related, like so
Even Hood down $7.
Well, that's a crypto stock now. Yeah. So Hood just trades like a crypto stock, so it's down 750, and on a percentage basis, that's kind of the same as Coinbase and MSTR. MSTR trades like a crypto stock, but it's a scam. Hood's not a scam, but it trades like a crypto stock, and Coinbase is not a scam, but it trades like a crypto stock. Everything else, they just whacked the NASDAQ all day. It was weak. That's all.
They did. NVIDIA down 5, Tesla down 5.
There was never a time to buy NASDAQ today. And we were kind of, I just want to say we were all over that this morning.
You especially, absolutely. On the upside, you do have a few movers. Home Depot up 11. I know we got Lowe's coming out for earnings today also. Palo Alto Network up around $6, Adobe up 2. But you can see here, there's only a couple of leaders up.
Yeah, I mean, those stocks were all the earnings stocks that they were up much more on the opening. But then there was a couple of buckers today. IBM was a bucker earlier. Let me see what it is now.
Well, IBM was helping the Dow. It's up.
Yeah, IBM and Intel were the buckers.
Yeah.
But yeah, it was pretty weak all day. I mean, I never nibbled today. It just the only thing we did right was come in short deltas. For once, you got paid.
Yeah, at market highs.
Yeah, right. Yeah. Hey, we survived. We survived market high. I'm going to get a T-shirt. I survived another market high.
Yes.
And bonds made a nice move today. They're up 20. I sold some at 03 this morning, and then I sold some at.
You bought them under 13, right?
Yeah, I sold some at 13. I sold some at 14.13 this afternoon. I sold some at 14.03 this morning. We bought them.
Oh, you just telling everybody you sold the high? Is that why you mentioned?
I don't know if that's the high. That's where I sold them.
That is the high, Sosnoff. Is that what you're trying to tell people? How does Daddy do it? Gifted?
I guess.
I mean, you make 10,000 freaking trades a year. I mean, you'd think at least one time you'd catch a high, for crying out loud.
You would think one time.
One time. God, I hope they trade 14.
Oh, I do too. I'm long bonds. I barely sold any. Let's see what we did today. We're the big losers. Coinbase was my biggest loser.
Mm-hmm.
And my biggest winner was Coinbase and Nike were my two biggest losers. And my biggest winner was QQQ and SPY and bonds.
Hey, what do you want, a medal?
I don't want a medal.
Okay.
I don't want a medal. Give me a medal after if we get.
You have to get 2 days in a row.
Right. But according to the research from this morning, whether or not I am a winner tomorrow or a loser tomorrow, it's a 50-50 shot. There's no such thing as
But gambler's fallacy, we would make you a 65-35 a loser category for the win 65% of the time.
My screen is very red. I will say that because I have a lot of NASDAQ stocks on there.
Your screen should be red. Yes, you are right. I mean,
yeah,
it's been the Russell with the leader of the club. I mean, listen, we have barely 100,000. There we go. We just got 1 million. Even the S&Ps have traded. It's 240.
Oh, it's a crappy down day. But the only thing I will say about this down day is it's the first time we actually had a down day without an uptick.
That is true. We sustained the down move completely. We were down around 40 something and rallied to down like 30 something, and then sold off from there. I mean, you had like a $10 rally. I don't even consider a rally yet.
I mean, but for like all these,
never backed off either.
All these crappy down moves every single day, and then finally today they got a little bit of something. Mm-hmm. So, still think I mean, personally, I still think S&Ps are expensive here. I think NASDAQ still expensive, but I want to bring up a couple things. One of the things we said on Friday, Sunday, and yet on Monday morning was that when they close them a little bit weak on expiration, they tend to have a little follow through. I'm just saying. And so they have had a little bit of follow through. The bonds, on the other hand, I think they kind of made maybe a very short term low on expiration. So hopefully they get a little bounce here. If you're looking for things in the futures world that might be interesting, I think gold and silver is still a little too early to start buying them. I think Bitcoin's still a little too early to start buying it, but natural gas is cheap.
Of the three, what would you purchase? I know you say it's a little bit too early. What would you have your finger on the pulse?
Well, natural gas for sure. I'm already long it. And if I had to pick any commodity right here, just as a buy, I'd probably reluctantly say crude oil and natural gas if I had to pick two.
Okay, well, those weren't two of the three that you mentioned. You mentioned gold, silver, and Bitcoin.
Oh,
of those, I mean, I wasn't reading your mind that you were going to go to.
Okay. Of gold, silver, or Bitcoin, I wouldn't touch Bitcoin here. So gold or silver, either one. Pick your poison.
Wow. Okay.
Yep.
I'm a little surprised. I'm a little surprised you said that. I mean, on a percentage basis, I think Bitcoin's probably had the largest move of the three.
I don't care. I think it's the most overpriced of the three.
Well, I'm just stating facts.
Oh, I care.
I don't care if you care. I said I'm allowed to be surprised. I'm surprised, I said, and I gave you the reason why I'm surprised. I didn't just say it like sometimes you just say things to say them. I said it because it had the biggest move to the downside on a percentage.
Okay, I'm telling you this right now. I have to spend the next 5 days with you. If you don't clean up your act right now, one of us is not getting on the plane tomorrow. All right, because that's like
my wife said the same thing when I called her. She goes, listen, don't take your anger out on me. You told me he was an asshole today. Don't take it out on me. So you better straighten yourself up. I'm telling you right now.
I'm just telling you right now, you better not start it tonight because we got a lot of time together. So you better try to be normal.
Early in the morning. Hey, what did you pre-order for breakfast?
I forgot to pre-order. I'm having my meal catered.
Don't eat too much on the plane. When I'm sitting in the back there, is scrolling a nut that I bought from the commissary. Don't eat too much up there because we're going out to lunch.
Taco Wednesday. I got it.
Tacos. That's right.
I had tacos for lunch today. I'm having tacos for lunch tomorrow. And tacos for lunch on Thursday.
Only you.
All right. Let's see what else do we got going on here.
Yeah, right this ship. Earnings. Target, TJX, and Lowe's. Home Depot's up big.
All right. What would you do in these earnings plays? I mean, the only one you can trade is Target.
Well, Lowe's is already up $5 too, and the only one you could trade is Target.
And Target only traded 5 million shares today. The expected move in Target. Let's take a look right here. Target.
$9 Sosnoff on a $100 stock. That's not bad over 3 days, though.
No, that's a pretty good size move. But Target's a stock that, oh man, it's had a $40 move. It's had a $25 move on earnings, but now it's only a $105 stock. It got as low as what, about 90?
Yes, you're right. High 80s, but I'll give you 90 for the win.
All right. Well, where are the 90 puts?
90 puts with 3 days to go are going to be 50 cents, not even 48.
I mean, where would you buy Target? I know it's a stupid question because you never want to buy it when you have to buy it there. But what price would you say, I'll take a shot and buy Target here?
If I knew you were going to be shopping there, this is one where I don't know why you don't try to do like a small ratio spread for one of your small credits that you do. Like you can do a 98, 94, 1x2 put spread. I mean, I'd rather give up the 50, 60 cents that you might make to try to make, $3 or $4 if the stock does go a little bit lower in the next 3 days. What about something like that?
So the expected move is $9. It's trading for what, 105? Let's say I go to 90.
You know what? If you get anywhere around 98, I'm going to stick this pen in your eye on the plane. Okay? You're going to get on first because you got some sort of concierge bougie level bullshit that you got going on. And when you go by, nobody's going to be watching. I'm going to stick it right in your eye as I jab it as I go back all the way in the back in the middle seat, aisle number 25, row 25, middle seat. They'll never suspect me.
25 middle seat. Oh,
25 middle seat.
we're not even waiting for you when we get there. I'm taking a picture of that. All right, let's see. I kind of like this trade. All right.
Oh, good.
So I buy the 96 puts. I sell the 91 puts.
Okay, you couldn't do the 98, 94 like I said. You had to go to 96, right?
96, 91.
You can't do that for a credit, probably.
Yeah, you can. 3-1 for like a 26-cent credit.
3-1.
Yeah, well,
1 to 3, you mean?
Yeah.
You know what? You just couldn't do the 1x2, right? You just couldn't do. You know what? Seriously, when are you going away? When am I going to be done with you?
Let's see. Can't get filled. Partial.
Want me to see how you get filled?
No.
I didn't think so. I mean, maybe you can make a little bit of money here. You know what I mean?
Hey, you go to the expected move. That's how you trade these things.
A guy like you, that's what you would do.
Guy like you. Can't get filled anywhere. I tried. I got partial.
I know. I can't submit partials.
Oh. Can't submit.
So give up the 2 cents on the.
I'm trying.
On the straggler. Thank you. Thank you very much. Ladies and gentlemen, you did give up the 2 cents for.
I did that for you.
You did that for the viewers at home so I could push the trade through the follow page. That's correct. 23-cent credit. You actually
No,
did.
My average is 24.
Quarter credit.
All right, I'm in.
I can feel you. Good work. Good work.
There you go. It's got a little target position. I mean, the thing is, I can't really trade tomorrow morning, so I didn't really want to do much.
I understand. Oh my God, this is going to be great. Oh, baby Jesus, please. Can I see 85? Please, baby Jesus, on the opening. And close at 90. So he adjusts. Please, please, please. Oh, sorry.
Oh my God.
Oh, are we having fun yet?
It's going to be a long, long flight. I might give my ticket to your wife just so that she can be tortured by you the whole time.
She'd appreciate that. She actually likes me.
I doubt it.
I was going to say, don't say anything silly now.
It's not possible. It is absolutely not possible. If it is true, it's a lie.
She owes somebody money.
All right, let's see what else do we got going here as we're
What are we doing into the close here? Are we stumbling? We rumbling? What are we doing?
I think they stumble into the close today. I think they close them on their lows. I thought that all day.
Well, the lows are only a couple of ticks away from the day. 19, we're trading 26 on the E-mini S&P. So you're only.
I know, but I thought that they would earlier today. I thought the Nasdaq would be down over 300. It's going to be probably down maybe 400. Who knows?
Well, it could be. I mean, you're only 25 points away from today's lows.
Yeah, right. I know. I'm saying. I think we close them down to close to 400. It's a pretty good size move. You know, a little less.
This is 5 days of red action here, Sosnoff.
Well, the last two were like 1 and 3 points.
Yes, it was.
No, Friday we were down 25, and then handles in the S&Ps. Yesterday was like 2. Today's 44.
I mean, we're all the way back to like August 7th here, Sosnoff.
And what day is it today?
The 19th. In the NASDAQ, at least in the NASDAQ, yes.
Well,
even the S&P is not quite like August 12th. Sorry.
All right, let's see what else do we have
You
here.
nibble on any of these stocks like PLTR down almost 17 now? All kidding aside.
No, you don't. I mean, listen, the world was so damn complacent. There were so many people out there that were like, every single stock was like, they're going to be, wouldn't be surprised if they, and people give me ridiculous numbers like, wouldn't be surprised if AMD traded, 190. Wouldn't be surprised if Roblox traded back to 150. This is stuff I've been dealing with all week. I mean, that's just the reason.
It's annoying, doesn't it?
Well, it doesn't get annoying. It's just like, that's why we're going down. The level, there wasn't a single person that said, I think they could drop them. I think they can drop Meta $50.
I mean, like you said, this is a pretty, there are individual stocks that have gotten hit. There's no doubt about it. But this is a pretty weak-ish close. There's probably a little bit more downside to go is what I would think.
It's a weakish close, but they did, for the first time, they've hit some NASDAQ stocks, and those are your market leaders.
Yes, absolutely.
This, you could say whatever you want, but this market, if you think your leaders are going to be IBM and Costco and whatever else,
you got another thing coming.
Yeah, Intel is not leading this market higher. That's
right.
I can promise you that.
Right.
So, and there were a lot of high flyers in there that, I'm not sure what could turn this market around in like a significant way.
Turn it around in which way? To the upside or to the downside?
To the downside. Like, I don't know what can really start a little bit of downside scariness. It has to be the tech stocks rolling over. I would think if you could get, PLTR back down towards 120, that would scare the children. Things like that. NVIDIA under 150 scared the children a little bit. But up here, this is just cyclical. This is cyclical. Nothing.
Yeah, totally agree with you. But I think we got a little bit more downside. Maybe it's all overnight. I think we need a downside overnight flush out. That's what you kind of need.
We put on some really good trades on Friday's show, on the live show, because
we held them to now. We look like geniuses.
All we did was get short.
Mm-hmm.
Yeah. So there's some good trades in there.
Yeah.
Really good trades, but. It is
I got to do this public service announcement, Sadnoff. I know you shop there. Walmart, FDA has warned the public not to eat possible radioactive shrimp sold at Walmart. What are you laughing about? Somebody else's misfortune? WMT up 37 cents on that.
So obviously it's not as bad as you think. That's why news does. If you read that news, you'd be like, okay, well, I could sell Walmart here. It's up today on a day the market's getting killed. Yeah, radioactive shrimp.
Not so bad.
Attention. I just want to see them.
Walmart shoppers.
Attention, Walmart shoppers, right. Please do not eat.
Is that a shrimp in your mouth? Please remove the shrimp. Could be radioactive.
Anybody that's frozen shrimp in your basket, please put it back. Or we'll discount it.
What's that?
We'll discount it. A little radioactive shrimp. We'll give you a discount. We don't know if it's radioactive. It's just, we said could be.
No doubt.
All right, we got the boys in the guest room.
We sure do, in the war room. Where are they? Bring them in.
Gentlemen.
Hello, boys. How do you like the radioactive shrimp at Walmart?
Stock up 40 cents.
How Aquaman got his powers, right?
I was right there with you, Vecchio. I feel like this is a great origin story for a quality superhero movie. Shrimp Man.
Shrimp Man.
Bayou Boy.
The world's least kosher superhero.
Hey, Sadnuk, before I forget, my Taiwanese sources told me Baidu has earnings tomorrow too. I just looked. You don't have a Baidu position. Baidu, I have you rank at 33.
I don't, but I would have liked to do something.
All right. Well, you still got 5 minutes. So, you don't listen to these guys anyway. So you could trade and do whatever you want here anyway.
I had somebody that would have kept me informed.
There's nothing you can't do in 5 minutes, Sadnuk, and have time left over. Unlike my man Dylan, who needs all.
Now, when I was taking notes earlier, it sounds like buying Intel we should be buying Intel. Is that right? You said Intel is the thing to buy here, Tom.
Sosnoff was
is that
early
correct?
on that. While every stock was going up $10 a day and Intel was moving about 4 cents one way or the other, Saz was saying it was the best buy on the board. Now Intel is up, and some of these other stocks are no longer up 190%. They're up 165%. He is touting his Intel call. Yes, you are correct. Sorry, Sosnoff.
Sorry,
Nothing
sorry,
is good.
Dylan.
But I think Tom asked the right question, which is, I think, not to speak out of turn here, but if the only thing that makes the market go down is for the tech stocks to roll over, what on earth could make the tech stocks roll over, Ilya?
Well, it certainly seems like we weren't happy with all things Fed related today, and it's probably because we have a little bit of event risk on this starting tomorrow. So gold was down, dollar was up, stocks didn't like it. The odds for rate cuts for this year are basically baked in and nobody's changing anything. But for next year, there's a little bit of speculative fuzz. We had fully 3 cuts baked in as of about a week, 2 weeks ago.
Who cares?
Now it's less, and markets don't like less. They want more.
But I think it's all. I don't think rate cuts will move the market one bit.
Can it just be what Sam Altman said today?
No, what did he say?
What did he say?
He said that he thinks that we're in a bubble akin to the .com bubble in AI. Ever since he said that, the market's down. All the big chip names are getting slugged since he said that.
But he said that yesterday.
Thanks, Sam.
Yeah, what is
he's been saying a lot recently, but it was the headline this morning. Some conference.
Off with his head, Sosnoff?
I mean, personally, I really don't give a rat's ass about Sam Altman one way or the other, so you can do whatever. I mean, we're short NASDAQ, so I hope he says more about that bubble.
Right.
I don't think he will.
I put my shorts back on, so by all means, Sam, go ahead.
Yeah. Listen, this is the first little blip to the downside. It's too early to read anything into it other than this is the first little blip to the downside. But
I don't think the markets have a lot going for them that's not baked in other than Fed rate cuts, where there's still a little bit of speculative will they, won't they please. And there's a disconnect between what the Fed's owned up to and a more dovish outlook that Fed funds futures are showing. So essentially the markets want the good news of having that more dovish view confirmed. And it's the one sort of little bit to hang your hat on. And if you get a disappointment there, then there's not that bit. And I think it's just a sentiment thing. It's not like the Fed is going to crash the market. It's just sentiment is out of bullets, but that one.
Well, it was still a slow day. And, but, market did what we needed it to do today. So I can't complain. Tony and I are going to be...
Neither.
Tony and I are going to be gone for the next couple of days, so until next week. So you guys are
in San Francisco.
You guys are on your own. Yeah, you'll see us in San Francisco. We'll be out there September 9th.
You guys going to Mexico?
Yes.
You're going to Mexico, Tony?
Yes, I am.
Nice.
I think you guys are going to be in San Francisco on September 5th, but I digress.
What day?
I've been immunized. I got immunized years ago.
Okay.
Remember your Crocs and jeans to your round of golf, Tom.
I got them. Just wish I had a pair of Euphoria sneakers I was wearing so I could advertise.
Tom is the billionaire next door, world-class trader, and unpaid intern at Euphoria Sneakers.
You guys,
a hell of an intern.
You guys
not in that order.
I have, just so you know, Dylan, I am one of the best unpaid interns in the world.
I'm aware. Listen, if you're good enough for the parliament, you're good enough for me.
There you go.
Safe travels.
You guys are going to talk about Jackson Hole after this, correct?
Yes.
I hope not.
Of course. I'll make sure of it.
Sound off. The evening S&P's rallied 10 handles. Forget about it. It's over. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Sam calls it a bubble. It's Tuesday, August 19th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. As we take you through the rest of this hour, futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade. If you're on the website, tastylive.com, welcome to the show. Tell us what you think of these markets. We will be watching the chat, as I recently learned, guys, been a little bit softer in Futures Power Hour. Apparently, they've been shutting down the chat. We're not trying to avoid criticism. So that's going to be live. Will be monitored. Feel free to chime in. Other than that, guys, it's a day where the NASDAQ here leads the way, lower off by about 1.3% right now here after hours. Now we find ourselves with a S&P up by about 0.5%. Chip makers are the big loser today. Sam Altman over at OpenAI says that we may be living in a bubble akin to the dot-com bubble of the late 90s. And sure enough, those stocks that have been flying high are the ones that are turning lower in today's session. What was hot is now cold. Bonds are up across the curve, though. And a curious thing in the currency space, it's your yen, your Swiss franc, and your US dollar as the top performers alongside those lower US yields. A little bit of a risk-off flavor to the whole situation, Ilya. Otherwise, natural gas breaks lower. This Hurricane Erin is turning out towards the Atlantic. Maybe some nice waves for surfing if you're in the Outer Banks. But beyond that, going to avoid critical energy infrastructure as it does not turn towards the Gulf. Natural gas is smoked. We have obviously cooler weather here in the northern tier of the country this week. So energy demand a little bit lower. Heck, windows are open all throughout my house today because the high is 74. Beautiful. Outside of that, though, gentlemen, we go into a day where Dylan, the godfather of the AI movement, if not for Jensen Huang over at NVIDIA, it has to be Sam Altman, who's led the ChatGPT revolution. He's telling everyone to curb your enthusiasm, The supernova is not so super. Do you doubt him?
I don't even think he means it.
He's a liar.
But it's not that he's a liar. It's in the interest. If you are one of the sort of if you're one of the leaders of a movement like this, which he is, it is in your interest to there's no value in, like, it's one thing for me to sit and say, oh, this is a supernova, or for people with bigger platforms at Goldman and Morgan Stanley to say this is the future. But if you're one of the CEOs of one of the big five, which he is, he has every incentive to to diminish or to calm the water, if only to sort of lower the he has every reason to lower expectations. Expectations are, beyond infinite. And so lowering expectations only helps them meet expectations. But I don't think that it's really a referendum on AI, not AI, supernova, not supernova. It's literally just a little jibber jabber from somebody who has a self-interest in calming the waters to make a value, maybe a marginal argument on value, on short-term valuation, which, if anything, I would say is an opportunity. I mean, what a great day to buy Microsoft, by the way.
Oh yeah, we saw that there was some news this week that OpenAI could be fetching a $500 billion valuation in private markets. To that end, this news of Sam Altman saying that things are getting too far too quick may be a reaction to that, obviously.
Mm-hmm.
Managing expectations is important. You don't want to get too far above your skis, but there's also been some technical damage here in these markets following the news and the sell-off today. Mm-hmm. Microsoft down below, closed below its 1 month moving average. We haven't really seen that occur here going back to April. Meta, very similar situation. Certainly losing the thrust of the move higher that carried us in August. NVIDIA, obviously the flag bearer of this entire rally, that's down below its 1 month moving average on a closing basis for the first time since late April.
Mm-hmm.
So the characteristics of this rally are evolving.
Yeah.
Can you mention the risk this week without mentioning the J whole word?
I don't think you can, because when you look when you look at what happened today, you have to look cross markets. It wasn't just Altman, though that certainly helped. You look across markets today, and you get a dollar that's higher, you get gold that's lower. No real movement in the front end of the curve, but the long end is a little is a little higher. Yields are a little bit in. So you get this kind of, maybe the Fed won't give us all the rate cuts that we want, and that's bad vibe as you look cross markets. I mean, obviously, NASDAQ underperformed, and I don't think there's any reason to think that there's anything that you need to overthink there. I mean, obviously, the godfather of the current AI age tells you it's a bubble. And I agree with Dylan, by the way. I mean, CEOs sort of famously attempt to underpromise and overdeliver. This is sort of the quarterly exercise of, you guide modestly so you can beat your quarterly number, so the stock goes up. And obviously OpenAI is a little bit of a different story in that sense, but the sort of the philosophy of managing expectations down so that you could beat them is no surprise to anybody. So I don't think you read into that. What I think you read into is how reactive the markets are, though we all know this from every quarterly earnings report ever. Why does this move markets? That's the question. Because he didn't say anything that you wouldn't expect him to say. He didn't say anything that wouldn't have been written off 2 weeks ago. I mean, Elon has been saying that this is some kind of a overshoot and raising a lot of these same concerns for a while. Now, granted, he's been somewhat put on timeout for all the other things he's said, but nevertheless, in this space, he knows what he's talking about. Likewise, nothing Sam Altman said here is unusual, to Dylan's point, for a CEO to say. What's interesting is that the markets didn't like it to this extent.
I would agree with that. I mean, I think that that's sort of like, it goes to the point of the fragility of the valuations right now.
Yes.
That there is even any a cautionary words from anybody that they're taken seriously enough to sell these names.
That's right. That's right. Because who amongst us thinks realistically that, okay, these valuations are perfectly fair and not at all frothy, even in the near term? I don't think anybody seriously thinks that. If, on the other hand, you say, oh, well, this whole thing is all hype and there's no substance there, ridiculous. Obviously, this is a transformational technology with lots and lots and lots and lots and lots of runway. You should be able to hold both of those ideas in your head at the same time. So that the market was this reactive is the interesting thing. And I agree completely with what Dylan is saying here. This speaks to the fragility of sentiment. And that fragility this week hinges on the Fed. So that the market is reactive to this news the day before the FOMC minutes come out and tell us whether the Fed is likely to be any more dovish relative to what they said in July as stage setting, yes, for Jackson Hole, where they're going to set everybody's lens up for the next year. That's not a coincidence in my mind. That's an excuse.
What's an excuse?
The Altman comments. The markets wanted to sell.
Yeah. That whole thing's sort of squirrely anyway. And
the markets wanted to be selling.
I can agree with that.
And they got a headline and they said, "Ooh,
it's a reason to sell.
Here's something."
Mm-hmm. I can hear that. I can get with that.
Yeah, well, you mentioned this is from Yardeni.com. Ed Yardeni is a market strategist, but he publishes these free charts on his website for anyone who wants to go check them out.
Fantastic charts, by the way. I use them all the time.
And they're updated daily. So some of them are weekly, depending upon the data series.
He's still doing money flow?
He's doing everything, man.
I mean, he was the king of the old money flow.
Big shout out to Ed Yardeni. This site is awesome.
And Hungarians around the world, I might add.
Quite.
Are you on the Hungarian Airlines payroll like Eric Adams?
No, but I'm a Hungarian.
Oh, I didn't know that. Good for
also,
you.
I think he's on the Turkish Airlines payrolls, Eric Adams.
I mean, how do you think I come by my
so
if not for some Hungarianism?
Your mother? I don't know.
Don't let
Budapest, by the way, some of the greatest eating anywhere in the world. Absolutely fantastic.
Fantastic. And Hungarians, very smart people.
Was that in question?
I mean, let's just be
okay. Thanks for clarifying.
Yeah.
The point here.
Back to Ed Yardeni, who is a smart Hungarian. Anyway,
sure.
You were saying.
We can see that, Dylan, you mentioned the valuations in question, perhaps the fragility of the market. Underlying all this for your average investor is right now, if you're allocating incremental dollars, what are you putting this into? The S&P 500 forward PE ratio is sitting at the levels that we saw post-COVID highs, which then are only preceded by levels that we have around the dot-com era. Really, no matter how you slice it, if it's information and tech, mid caps, you're in a place where it's just uncomfortable. The first chart up here, I think, is the most interesting one because it's the everything else versus the Mag 7. So Mag 7 isn't even at its post-COVID highs yet, but if you're a large cap stock, you basically are going back to 2021. Fragility. What solves this? Correction in price or correction in time? Earnings need to catch up to substantiate the view, or markets need to cool off. That's not to say that things can't keep inflating. They can, but if you're at a moment where people decide to take their chips and go home for a little while, contextually, the market's a little bit more fragile as along when valuations are inflated than when they're on the floor. So I hear you, Elia.
There was a tidbit that came out, and obviously you can pick whatever your valuation thing, and everybody's going to quibble about which thing, but this is just a factoid in your quiver. B of A came out with a chart yesterday showing that S&P 500 price to book value ratio is now 5.3 as compared to the peak in 2000, the dot-com bubble, of 5.1. So we are a little bit past the peak for where dot-com popped. We're way out of sort of standard deviation territory. Average is 2. That's going back to 1946.
It's warm. It's hot.
It's warm.
Can't deny that. Can't deny that. The big names, though, that pull back. The high flyers, Oracle off 5.89% today. Palantir, which has been a high flyer, this is down 9.35% in today's session. Net, yeah, you're off another 3.84% yourself. Netflix, that's down 2.48%. So some of the things that have been carrying this market to the upside, obviously coming down for today's session. But Dylan, you're not seeing this as a bigger problem. And you know what? You're right. I mean, expectations management. Haven't we been saying this for the past 2 weeks in the summer? If you have a time with your equity prices up at all-time highs, what a good time to try to lower the bar, get bad news out there, clear the deck for the second half of the year. The worst thing that happens is you get a runaway into sky high of an expectation, you fail to meet it. And though, even though you're a success, you as an executive are wrung out to dry because, well, you didn't manage the public perception correctly. There's got to be some.
That's the whole
go ahead,
thing.
Dylan.
I mean, I think that's the, and it's like, again, I mean, if you were inside of something that's sort of in this wild and crazy movement, like the more you can back it off, the better.
Mm-hmm.
If you're long the stocks, if you're me and you own something, you're like, this is going to be, the future is now, but if you're inside the boardroom, much better to sort of back the crowd down, because God help you if it's because you're talking about, the cliche is price for perfection, and you don't, no one wants to have to operate an organization that's priced for perfection, because obviously there's execution risk and timing risk and unknown risk and all the rest of that. So I just think that I'm more interested in the stock behavior than the rhetoric, which
especially if you're the big incumbent, and you want some of the optimism that others might use to raise money to come for your piece of the pie. You probably want some of that optimism to be contained. Now that you have first mover advantage secured, you want as big of a moat around your position as you can. And the more optimistic things are, the easier it is to raise money, the easier it is to come for your crown. So doesn't hurt to tamp things down a little bit if you're Sam Altman.
A lot of these things are still priced very well. I mean, you looking at iDrive today, which is the self-driving EV and tech ETF, it did hit a new all-time high in today's session. Names that typically have not done well, even like an ARC, that was pushing up towards yearly highs, and today it takes a 3.98% drop. So everything risky is coming in. I can't help but notice that you have Ethereum, a high flyer. That's off. Bitcoin price is down another 2.92%, losing their breakout. Look at this double top potentially in play here now. So there's a few things going on in the market that just risk in end of summer. That's your story.
Yeah. This is sort of why I can't blame Sam Altman's comments in isolation. I mean, obviously there's a larger risk off thing that's unfurled here, and that's not one comment from one CEO. That's a market that wanted a catalyst, found one, and went.
That said, Dylan, the uptrend remains. We're still in a market
I think you buy them. I think today's an opportunity.
That is ultimately, if we're thinking about this, right, Ilya, we failed to break out here. We're losing ground. S&P in this 21 50-day envelope, you find yourself cutting into 63.60 to 63.80 the next few sessions, first blush. Have to think they're going to be dip buyers there. Similar to the NASDAQ up near 23,000. We'll call it 240, 250. Volatility has not expanded all that much. And that, to me, That to me is the really important telltale sign in this market that yes, selling picked up over the course of the day today, but I'm just going to bring up the SIBO term structure here on the screen. The front month, September 19th expiration, 1561. The back month, June 2026 expiration, 2179. It's still north of a 6-point spread. When the term structure's been in a 5, 6, 7-point contango and hanging in that area, dips have been bought. And the sell-offs haven't been that that sustainable. Even in early August, when you had that pullback around non-farm payrolls, what occurred? Yeah, vol went up minorly, but you remained in that steep contango. And by Monday's session, the market was rallying again because volatility didn't really dislodge itself. Dylan, if vol is our North Star around here, and I really think it is, and you look at the volume in this market, barely getting past 1 million contracts traded today, this is not a material setback.
I don't know about that. It's not the setback that makes for a trend reversal confirmation, sure. But also note that you had a very clear high established in the latter part of July. You then broke out above that high, and you've now shown that breakout failing. Those are the makings of a top, if you can confirm it. When you have a breakout very clearly over a clear peak, and instead of finding follow through, it turns out that there's no ground under Wile E. Coyote's feet, and you fall back in and undo that breakout, that's a significant amount of technical damage. So
can you square the circle with me? If this is as bad of a sell-off as we think it is, or you're suggesting it may be, why are all the rate sensitive things like home builders, which would ostensibly be very sensitive to the broader state of the economy, why are the home builders doing so much better?
Look at ZT. We're getting the rate cuts. The things that are actually up for speculative interest are not rate cuts this year. In fact, if you look at where the market has been on rate cuts this year, we've been hugging 50 basis points plus or minus for 3 months. The market is convinced that they're going to get the same thing the Fed told them going as far back as December. That's not where the speculative fervor is. The speculative fervor is next year and beyond. And what we've seen now is over the course of the past several weeks, you've gone from 75 basis points fully baked in to today down to 66. That's not nothing. Moreover, you go out now to 2027, which is starting to get some liquidity in those contracts, and you've gone from a rate hike being baked in to that going away. So you're pushing on the timeline. You're saying less next year, so maybe more the year after. And obviously the markets don't want the year after, and they don't want next year. They want now. So when it comes to speculative fervor, it's further downwind, and it's not about refi costs in the immediate. It's about sentiment. Because just like we were saying on last call here, this market is out of positive things to say, but for eventually the Fed will have some rate cuts. What else isn't in the price here? The tariffs and the whole will he, won't he, is it a negotiation or are we in fact going to cut off our nose to spite our face? That was the first half of the year. That story's over. We know what that is now. So the wars in Russia and Ukraine have been going on for years. The Gaza-Israel theater has been now going on for years. That hasn't moved the needle at all on crude oil, so it tells you how much the markets care about that.
Well, Dylan, can we actually switch to that topic here? I couldn't help but notice that we're getting reactions and more importantly, we're getting further follow-ups to this major European leader summit yesterday at the Oval Office. You have your ear closer to the ground for European news sources. What's the perception about how this shapes the outcome of this Russia-Ukraine conflict?
I mean, I don't want to sound like a broken record, but I really believe that the perception is that they have no leverage. That all of this is ritualistic, and that Putin will do what Putin will do. And that basically this is posturing to maintain the appearance of engagement in order to sort of keep everybody hopeful. But I actually think that the only point of leverage is actually with Zelensky, right?
Why do you say that?
The leverage with Zelensky is give up the eastern portion of Ukraine in exchange for security guarantees. And I don't know whether he's going to do that. But if there's any leverage in this, it's actually the Europeans and the Americans as a counterparty to Ukraine, as an inadvertent advocate of the Russian agenda in exchange for peace. And remember, Ukraine is not the star student of European life. You know, it is a historically corrupt and unreliable country in the scope of European economic activity and culture. Important because of the massive resources on the agricultural side and on the mineral side. It's a critical warehouse of commodities. But this is not, you know, you think the French and the Italians don't like each other, or the French and the British don't like each other. You know, there's a natural need to close ranks and ally around the defense of Ukraine relative to Russian aggression. But there's also a point where there's only so far everybody's willing to go to do whatever the Ukrainian president wants. And there is a point where people say, listen, you lost. This is a war. You lost. And we need to make a deal and we're going to draw some new lines. I'm not even saying that that's going to happen. I'm not making a prediction. I'm not suggesting that that's what's going to happen. But I'm just suggesting that in the scope of influence, that European leadership and American leadership has some influence in Ukraine, much more than they have in Moscow.
Certainly. Ukraine is very, very important. And the reason that Ukraine is very, very important and has been very, very important going back to sort of competition between Russia and the Austro-Hungarian Empire and the Ottomans and you name it. It has been an absolutely critical geographic location because it is one of the poorest points through which Russia, historically, going back to Ivan the Terrible and the formation of Russia as a polity coming out of Mongol occupation, it's one of the key choke points for Russia to want to close because Russia is a flat terrain and it is constantly attempting to move the goalpost, to move the sphere of influence to defensible geographic barriers, be it the Ural Mountains, be it the Caucasus, be it the forests of Ukraine, because Ukraine is the gateway to Poland, which is the gateway to Europe. So this is a critical geopolitical and geostrategic spot on the map and has been since the beginning of time. Because
do you disagree with me, Ilya, in my perception that the European and American leadership's leverage with Moscow is effectively nothing?
They have next to no leverage at all because Putin has gotten himself into a place where
he's now the incumbent.
He will fight this thing to the last dead Russian, in which case he's screwed anyway, or he backs off, in which case he's the only one that's screwed, because then the wolves inside the Kremlin will recognize the alpha is weak and eat him.
So when you would, so because the argument a few years ago was, well, if you give Putin an inch, he'll take a mile, right? The Baltics,
yes,
Poland, all the things.
Well, it's
do you buy that?
Czechoslovakia and Hitler again,
right? But I thought personally that was bullshit. I thought that the Russian reaction was a reaction to sort of NATO perceived Western encroachment.
I disagree, but
you do?
Sure.
I mean, so
you're like a John Mearsheimer point of view, Dylan?
I mean, yeah, I don't want to get it, but it's not an argument worth having in this.
It's not a market relevant.
And I don't even know that I'm right. So I'm not willing to go to the mat on it. I just have an opinion like any other fool on the street. So I'm not going to worry about that. But I do wonder, do you have an opinion, Ilya, on my assertion that the Americans and the Europeans have a limit as to how far they'll go for Ukraine, and that they're willing to sort of use their leverage to ease Ukraine into some.
I think the Europeans, because of how critical Ukraine is to European security, and because it is such a critical point territory-wise for what you have to hold and where you have to keep the East and West of Europe separated. Both sides want dominance over this spot because that's the choke point. I think the Europeans will go much farther, and I think their commitment to Ukraine, it's not about Ukraine. It's about Poland and where the EU begins. It's about the Estonias and the Latvias and the Lithuanias of the world. It's about Finland. The question is about that and not about Ukraine as such. And I think for the Europeans, this is a hill they will die on. And the reason,
because you think Russia poses an actual risk to continue military activity. Beyond
absolutely,
that you think that Lithuania or Finland has legitimate risk.
Absolutely, because I think if we learn from what Georgia was in 2008, and we see that as a playbook that is completely being repeated in Ukraine, I think, fool me once, shame on you. Fool me twice, to quote George W. Bush. The point is, you can't fool me again. So I think the idea that Russia is trying, as ever, to close avenues for invasion of the mainland, it isn't new. It's an idea as long as Russia has existed as a polity. That has been the strategy all along. Do anything you can to prevent a Mongol/Napoleon/Nazi type of situation where the heartland has been invaded, because there's no defending it. It's vast and flat, which is why in both the Napoleon case and the Nazi case, what ultimately ends up winning the war for Russia is death of ridiculous amounts of Russians in a war of attrition, and the weather. The winter is just very, very cold. And occupying Russia in that kind of a climate is very, very difficult. So I think in the minds of anyone, I'm from Russia. I was born in Moscow. In the mind of anyone from that part of the world, you ask them, name a Russian war. They're not going to tell you about the Russo-Japanese War. They're going to tell you about Napoleon and World War II. Because those are the things that speak most directly to the quintessential geopolitical strategy that Russia has employed across czars and commissars, and now whatever this kleptocracy thing is.
President.
Since the beginning of time. They want to control geographic barriers to invasion. One of them is Ukraine. It's not the only one. And so, of course, they will try to reestablish the same perimeter that the Russian Empire had, the same one that the Soviet Union had. Of course, that this has been the strategy now and forever.
I don't think they should be worried about Europe invading them.
No, they shouldn't,
soon.
but they are.
Yeah, well, something about air conditioning and not being able to survive the weather would make a lot of sense here, but that's a different story. Dylan,
that's the thing. Nobody is trying to.
This guy and his air conditioning. It always comes back to the air conditioning with this guy. This guy can't be bragging about his windows open, bragging about the air temperature at his house.
I have the fan on and the windows open. It's actually a very American flex right
his
now.
Bakery, his cinnamon buns. He's always trying to show off his baked goods. This guy.
It's true. I am.
American exceptionalist right there is what he is.
My milkshake brings all the boys to the yard, Dylan.
We blame him. No.
I can blame gold for a lot of things. Gold's been just a terrible long trade, but at least, directionally neutral, not awful. Ilya, it's down by 0.54% today. I can't help but see gold down, oil down, part of the same story here as it pertains to geopolitics, because the volatility is coming in on both. I mean, is that my next question though, assuming we're getting an end to this war in some form or fashion.
Eventually.
Right. There's a lot of money was pumped into gold after the onset, although gold doesn't really have its big run up until Israel, Gaza go down.
Yeah.
Gold hits $1,900 an ounce when Russia initially invades Ukraine. And then it spends the next year and a half gently sliding back in.
Mm-hmm.
So with the news of the hostage deal today with Israel and Hamas, with a potential
maybe.
Well, it directionally, the impulse is towards de-escalation right now, even if there were flare-ups.
Last I checked, there was reporting that Hamas has accepted a Egypt and Qatar created idea, but we haven't had confirmation. Last I saw from Jerusalem, did Netanyahu say yes?
No, I doubt he will, because it means the war ends and he can't let it end.
This is not his, he's not attempting to end this thing, clearly. But the amount of protesting in Israel demanding that this end has been historic. I mean, hundreds of thousands of Israelis have taken to the streets to end this thing.
Yes, I've seen that.
So maybe the critical mass is there finally.
No, I don't see anything on the Israel side. I don't see anything on the Israel side here that would suggest that there has been actually a ceasefire. So yes, you're right. My mistake. So Hamas has agreed to a ceasefire deal, which means nothing without Israel. And likewise, if Israel agrees to a ceasefire without Hamas, it means nothing.
That was the last version of this back and forth. Was Israel agreed to one, and then Hamas torpedoed that one. So
it's just increasingly feeling like the path of least resistance for the metals. 36 in silver, 3,300, maybe even 3,200 in gold. Right now, the dollar's bouncing back, and I think that's perhaps the most important part of all this. Gold is down on a day where the dollar is up alongside lower U.S. yields. This is still a period of higher highs and higher lows. And we know from the recent fund manager survey that this is still one of the most hated trades in the world, where the dollar is actually the most shorted currency right now. It's an extreme. It's still an extreme in sentiment. So, Ilya, what's the play here? Canadian dollar was one of the big losers after their inflation report.
I like that.
The loonie in the coal mine. The Canadian dollar, their low inflation, 80% of their exports come to the U.S. Yeah. Surely this means that our economy's slowing down in some form or function.
Well, we know that that's going on. In fact, as we kind of get ready for the FOMC minutes tomorrow, let's remember Powell himself in the press conference after July's FOMC acknowledged that there were mounting risks to the labor market. Even as he said, look, it's not that bad yet. The economy doesn't look like these rates are too restrictive. We need more time, blah, 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 blah. But even he said, look, obviously, we can see that threats to the labor market are building. So nobody's surprised, or should be, that the economy is slowing. One of the more interesting things is Canada, of course, has been the loony in the coal mine for a long, long time. But last year, it sort of decoupled, where the economy in Canada was very, very weak. The economy in the US was very, very strong and not spilling over. And the reason it wasn't spilling over is because most US imports, including from Canada, are goods. And all the boom was in services. And most services demand is handled by domestic US firms. So it didn't really spill over into Canada. Canada's been in trouble for longer than there's been a US slowdown, as it were. But you do have to look at it, and you do very often get early signals for what's going to happen in the US business cycle, because the situation in Canada does seem to be going from soggy to soggier. And certainly the trade war escalating now, by the way, despite the president's own trade agreement, the USMCA. Apparently now there's we still have 35% tariffs on Canada. We're going back and forth. We'll see how all of that goes. But I think very, very clearly here, the Canadian dollar is especially hampered relative to the others, but it's not just it. Look at the Australian dollar, which isn't attached to the US at the hip. It's down big today. And it's just commodity currencies and a risk-off market. The Kiwi, the New Zealand dollar is down a lot. On and on and on. Sort of, these are the currencies taking it on the chin here. The stock adjacent ones.
Dylan, that is one thing that's different now. I mean, I think about 2022 and 2023, we could have pointed to something like DJP or DBC, which are the commodity tracking ETNs or ETPs out there in the world. And you would have seen that while we had these big worries, let me just actually go back here. We'll go to a weekly chart. More than 3 years to make this point. So we'll go back. Okay. So you could see that when we were going into the, inflation concerns of 2022, there was a run-up happening in commodity prices. There's no concurrent run-up in commodity prices right now, as we have all these concerns filtering through to the broader market about inflation generally. Is that something that we should be ignoring? I say that if only so vaguely to suggest that, isn't this a problem? Aren't commodities the whole economic story distilled down with all the BS? There's no hype cycle here. This is just true supply and demand. And if commodity prices are pointed to the downside, it's a clear indication that economic demand is stagnating.
Maybe. I don't tend to, I think the commodity price behaves as much as a currency inflation measure. I mean, obviously over short periods of time, I believe commodities behave more as as an alternative currency, basically, / an alternative inflation measure. Over longer cycles, obviously that's not the case. And this doesn't look like that big of a move. So, I mean, I could also make an argument that the American tariffs and the sort of deglobalization drive more regional, demand, less global demand. I don't know. I'm not willing to look at that move and say that is a yellow flag on economic activity. I'd be interested to see what's going on at Burlington Northern on the railroads. I'm more interested in FedEx, and I know that those aren't necessarily great numbers either. But if I'm going to go into your sort of like super macro upstream indicators, I think the railroads are probably your best maybe the ship. I don't know if there's a shipping like but even the ships are a bad indication right now because it's not necessarily a demand indication. It's sort of an adjustment and a marginal global trade adjustment because of the tariffs, which is why I prefer the railroads. Because if the railroads are not running paper or running product, I should say, that's a lousy indication. FedEx also worthwhile. But there's a good one. PKG. It's flat.
Yeah, for corrugated boxes.
That's a good one.
Yeah,
I love those better than DBC. Listen, the commodities are fabulous over a longer cycle, in my opinion, but for short cycle stuff, I don't. I think it's more ties to whatever's going on with the dollar, or rates, or inflation expectations, as it does economic activity.
Well, and you don't have to go far. I mean, we already know from the most kind of catch-all data you can imagine, the second quarter GDP data. I mean, GDP is slow and cumbersome and is usually too late. Even from data that's that heavy duty, we already know that in the second quarter, consumption was weak again after weak consumption in the first quarter. We know that taken together, that was the weakest 6 months of consumption in 5 years. 5 years before was the COVID recession, so not a good historical analog. We also know that inventories fell in the second quarter after running up in the first. So it's not like they're being restocked. So the front running of the tariffs is not continuing, despite, by the way, the 90-day pause that was still very much effective in the second quarter. So demand isn't there. We also know that imports fell. Sort of reiterating the idea that whereas in the first quarter everybody was front running the tariffs, in the second they started to spend down those inventories and didn't replace them. That tells you demand isn't there. Businesses are not making provisions for selling more stuff. You also know from the PPI report that businesses are starting to pass on these tariff costs. Margins are expanding back out. So they're not afraid of killing demand. That tells you something too. They want to get their money while they can. So it's not like we don't have very clear indication that the economy is slowing and that this is somehow news to anyone. When the Fed is talking about it directly, and two Fed governors dissent and want a rate cut, and Powell says, yeah, I think they're right, if not for these tariffs, I think we don't need to search very far. We don't need to go and look for esoteric indicators.
Oh, well, I'm going to give you an esoteric indicator. PKG plus SLVM, Suez, CLW, Merck, and FDX. These are all paper product, paper pulp, wood pulp, yada, yada, yada type of companies. If you wanted to think about this from the shipping perspective, Dylan. So I tossed the FedEx in there too.
Sure.
Using 100 as our index reference point for where these share prices closed cumulatively on April 2nd, prior to Trump's after hours Liberation Day announcement.
I'm assuming that big downdraft is Liberation Day.
That's April 3rd. That's the following day, right? We still have not recovered back to our Liberation Day level. We're at 91.6. So this basket, in theory, is still 8.4% below where it was relative to Trump's Liberation Day. I think is sorry, complete your thought. I'm sorry. Well, I think that's actually an important indicator for how the global economy feels in general, how investors feel about the state of global commerce here.
I would say that's more global goods, right? That's not services, that's not tech, that's global objects.
Services, though, if we're going to be spending less stuff on atoms and more on bits, right?
Yes.
Digital ones and zeros, and less of the tangible
services, travel, transit, hotel rooms, whatever.
Well, travel goes up too, right? Because now the replacement part for airplanes and everything are going to go through the roof.
Anyway, you're making an important point here. It's good. Carry on, sir.
But Ilya, like you could see it in the CPI data, core services inflation was actually higher than core goods inflation. And so consumers
but the thrust is going the other way. Core services inflation was down from the prior month. Core goods inflation was up.
Right. The point I'm getting at, though, is if there's a bottleneck here, people are seeing that there's going to be real global economic slowdown, but dollars still have to flow somewhere into the economy.
Yeah.
And it's created this bottleneck in digital services again, almost akin to how the market reacted post-COVID, Dylan, where once the stocks market starts rebounding, it's all tech on the way up, and the real economy goods are the ones that are suffering. I don't know if there's anything there to it, but if we were really thinking that there was robust global growth coming around the corner and we weren't really so concerned with a tariff bite, I would argue that this basket of companies would be trading higher than where they were pre-Liberation Day. And obviously the index is still below 100, so they're not. People ship things.
Trading higher? What's your why would they be high? Why would they be higher?
Cardboard boxes.
No, but why would the index be higher?
In a world in which economic activity isn't at a lower baseline today than it was on April 2nd, there'd be more demand for paper products.
But just because, let's say, economic activity is not necessarily at a lower baseline, does that necessarily mean that international trade in goods is not at a lower baseline? That on the margin, the sale and purchase and sale of imported goods, exclusive of domestic goods, exclusive of global services, exclusive of global tech, that there's a unique penalty right now that's being assigned to imported goods specifically, and that is limited in scope, or that the perception is that that's limited in scope. I don't disagree with you. I don't see how it's possible. Like I said, we had this conversation when I was on the phone with you guys last week. Mm-hmm. How is it possible to raise the price of everything and not have it reduce demand? It's sort of, freshman economics 101.
Well, I've been having this argument with people when it comes to housing and tariffs. I keep hearing people say like tariffs have no impact on housing. Well, if you raise the cost on lumber, and the lumber that we use to build our homes, really the best quality lumber comes from the north. Growing trees in colder climates leads to denser wood. That's why, you can get southern lumber in, South Carolina, North Carolina, but it's not the same quality as lumber you get from Canada. So we're going to have lower quality homes, sure, but if we want to have higher quality stuff, you're going to have to pay more money for it. So what do you mean pushing up the cost of lumber or increasing tariffs on steel or copper or aluminum, things that go into building a home? What do you mean that that's not going to push up the cost of a home?
Of course it will.
It's crazy. It's just think about that.
Again, right? Econ 101.
Right. Like I hear the same people make the arguments. Oh, well, how much is a hamburger going to cost at a fast food joint if you raise minimum wage to $30? Forget the fact that it's labor. It's an input cost. You're making the same argument that I am. Raising an input cost is going to lead to a higher end product cost for the consumer because the company naturally doesn't want to give up its margin. It wants to make as much money as possible. So if it can pass it on to a consumer, it's going to. It's going to be a higher house cost. It's going to be a higher hamburger cost, unless it's done in a reasonable, measured way that, of course, doesn't disrupt economic activity, which we won't do because that would make too much sense. Dylan, we have 5 minutes left here. We haven't touched on a few things this week, but we have the second half of the week to go. So I do want to avoid Fed-related conversations, Ilya, until tomorrow after we get the minutes and then getting ready for Jackson Hole on Thursday. Mm-hmm. Broadly speaking, though, I saw that there was a big shift between the housing numbers and the building permits today. Housing starts are up, but building permits are down. Permits, of course, feeding to housing starts. You have to get them permitted before they can start being built at the end of the session. But what does it tell you about the state of these rate sensitive sectors right now that we're seeing biotech, housing, utilities, even staples start to move to the upside. Typical defensive type
This
of
is a question for me.
It's for Ilya. Question for Ilya. Thinking about the seasonal timeline where we are right now, because this is the time of the year when vol goes up, when bonds tend to do a bit better. You see consumer staples, healthcare, utilities. Like, this is the time of the year. Biotechs, household goods, real estate. I don't know. I'm looking at XLP. I'm looking at ITB. I'm seeing the industries that typically do well in the more defensive cycle of the year, part of the year, start to stick their neck out a little bit more.
I mean, I think there's something to be said for that, obviously. I mean, these seasonal dynamics are not seasonal dynamics for no reason. And they come back time and again in some version or some kind of broad sense. I think it's very important to both be mindful of seasonal dynamics without assuming that they're going to be exactly the same every year or that they have to hold, because that's obviously not the case. They don't have to hold. Oftentimes, in sort of extraordinary years when markets break away from extremes, those are the years where seasonals go out the window. So, and we're worried about that kind of a thing here. So
yes,
I wouldn't get necessarily ginned up about, oh, well, none of it matters because seasonals. That's just nonsense. So it is important to look at seasonals, and there is something to be said for what's going on here. I also think that there is a kind of, it's easy to misinterpret what's going on here and say this is just seasonals instead of this is a growth scare beyond the typical seasonal stuff. Because we know there is a growth scare. Again, I come back to what we saw last week and again today. Last week, we could not get anything from these stock markets but for one day. CPI day, when it was flimsy rosy. The core inflation number surged. Oh, goody. The headline was 0.1% better than expected. That was it. Markets loved it. Could not move an inch in the S&P for the rest of the week and ended up actually down for the subsequent 3 days on Nasdaq. We get flimsy headlines today with Sam Altman, and the markets bug out. This is a sentiment extreme. Markets don't jump like this on nothing when everything is normal and seasonal factors are holding and it's sailing per the usual. This is not that.
Doug, can I give you something here for the way out the door?
Hell yeah.
XLU, utilities, we've had our eye on all for a good chunk of this year as a corollary to the AI play. Going back to when we had DeepSeek come out back in January, we really started thinking more about the utilities, generally speaking. Let me tell you how real this is. My area doesn't have any AI data centers being built in it right now. I've done the mapping. I've checked this out. There's some stuff in Wappinger Falls. There's some stuff in Yorktown Heights, but there's nothing being built related to AI data centers specifically. And yet, because of demand for energy that's been increasing in my area, there's a new proposal from Con Ed that's making its way around that would bring us a 27% total bill growth across the 2026 to 2028 windows, because it's getting more difficult for us to pay for the infrastructure and grid upgrades, given the demand that we have and what we have to give elsewhere. So utilities probably still are pretty well positioned. People are going to need the energy from somewhere. I'm going to be doing my part tonight and speaking out against the rate increase, which the board has to approve. And I will be doing my best to make sure that my electricity bills will go up.
You're really concerned about the electricity situation, because I know you're a good citizen. I could make one recommendation, which is that you just stop your air conditioning is killing us. Shut it down.
Nope.
Shut it
Turn
down,
back.
buddy.
Turn back on Indian Point. That's the solution. More nuclear. More
Shut
abundance.
it down, pal.
Nope.
Just put on your underwear and walk.
With that, Dylan Radigan is out of time on overtime with his AC rhetoric.
Baby.
Please mute him. We'll be back tomorrow, same time, same place. As always, 4 p.m. Eastern,
the
3
American
Central.
way.
Right after last call for Ilya Spivak in San Francisco, Dylan Radigan in a sweltering Milan. I'm Chris Vecchio in a beautifully centrally aired New York. Good luck trading. More macro money after this with Ilya Spivak here on Tasty Live.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower.
What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That'd feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever?
Ever.
Oh, no. I mean, Tom has a hard job. He's got to wake up really early, but he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy. And I live here in Chicago, so yeah.
If you have any questions, feel free to toss them in the chat.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
On today's Trader Taste Test, we are going to the first Chicago location of Voodoo Donuts. Let's go. Okay, you guys.
Voodoo.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The markets finally sustain some real damage. Not surprisingly, we have the first bit of Fed-related news immediately on the horizon. I'm going to unpack what happened today, why it seems that happened, and where we go from here as this event risk looms. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we're going to begin with a look at the market performance today and what all of it seems to be telling us, and then get into episode 1 of this week's Fed back-to-back event risk, the minutes from July's FOMC meeting. Of course, episode 2 will be the speech from Fed Chair Powell at the Jackson Hole Symposium on Friday, but more on that later this week. So let's focus on first things first here. The S&P down just about 0.5% today. NASDAQ down almost 1.4%, and a very clear kind of risk aversion flavor to markets here. Dollar up for the most part, with the exception of the yen, another usual risk-off beneficiary. So down against the yen, but up against the euro, up against the pound, and really scoring its biggest gains on currencies not on the screen here, the Australian dollar, the Canadian dollar, those things that are tied to cyclical considerations. those things that are the most sensitive to what stocks are doing and the most sensitive to risks to the business cycle, namely recession risk. Moreover, interest rates are down, and especially so at the long end. Interest rates down for the 10-year, down for the 2-year, crude oil down, gold down against a backdrop of a stronger dollar, despite weaker yields. Bitcoin, of course, the sort of risk sentiment on steroids asset of the mix on the screen here, down almost 3%. So what happened here? Well, the sea of red does seem to be at least somewhat related to comments from OpenAI CEO Sam Altman that said that AI is in a bubble. But how unusual is that really? We don't have CEOs historically in the business of talking things up. No, usually they're in the business of talking things down. And that's, of course, because they would like to under promise and over deliver. So when we look at those comments and consider sort of how much credence we need to be giving them, the real question isn't so much whether those comments are to be taken at face value or whether they're the thing that actually drove markets today. The question is, why did the markets choose to respond? And it's the fragility of the environment absent those comments that really sticks out in that sense. It certainly wouldn't be the first time that the CEO of a company tried to tamp things down so that expectations could be bested later. Rather, it seems like, not surprisingly, we are back to Fed watch mode, and that was the real catalyst here because we have critical event risk on the horizon in less than 24 hours. So consider the positioning here. This is the S&P 500, and there's two things to really take away from this. The first is that right here was last week's only meaningful move, and that was the US CPI report. In the 3 days after that data, the S&P went absolutely nowhere, and its net change, but for this, it's basically nothing. In these 3 days, the S&P moves a grand total of 0.05%. And then when you look at what happened in this move today, what you see is that you had this high here. There was a breakout through that high here. And on today's move, that breakout has been clearly overturned. It's not very much different in the NASDAQ. You again had a high right here. You broke that high on CPI. In the days after CPI, NASDAQ actually fell down about 0.5, 0.6%. And then you get this sell-off today and undo the breakout. So if there was a sequencing here, let's say similar to this, where there was a pullback, here was a high, you broke that high, and then you found momentum to the upside, here, a similar attempt fizzles. Here, again, there's a clear resistance line here where there was an attempt at a breakout. That attempt is successful right here, and there's follow through. Similar here, range, breakout, follow through. Here, you have that breakout. It holds briefly and has now failed. It's the same thing here. This has now failed. So what is it about this that was so specific that it hurt market sentiment to this extent? Because it seems like a stretch to say that this was just Sam Altman. As far as Fed rate cut odds ahead of this event risk, we have generally an unchanged picture. Yesterday we were at 83-16, 83% chance that we'll get a rate cut in September, 16% chance that we hold. Now it's closer to 85-15. So the actual probability structure for September's meeting hasn't changed all that much. But that's hardly the object of speculation. As we can see here, the markets have been hovering at about 50 basis points, give or take, going all the way back to May. So, and that, of course, lines up exactly with what the Fed wrote down for their summary of economic projections in June, which is the last time they updated this thing. The current median rate for Fed funds, we can see that the range here is 4.5 to 4.25. The median there is 4.4. 4.4 down to 3.9 is a 50 basis point cut. Well, that's there, and the market agrees that that's where we need to be and has generally held there for the past 3 months. The controversy, the speculation, is occurring here in the outlook for next year. And here, over the past several days, we can see we've actually unclenched a little, where the market is less so convinced that it is going to get as much easing as it did, let's say, a week or 2 weeks ago. At that point, we were looking at 125 basis points because for this reading here for next year, we were at fully 75 basis points priced in. We've been coming in, and we came in a little bit more today, down to 66 basis points. So we've said that a rate cut cycle for next year now is 2 cuts at least, but the third is only about a 60%, 65% chance of occurring, whereas very recently here, that third cut was fully priced in. Moreover, we can see the Fed's own outlook is for a single 25 basis point cut. So the market is clearly saying they want more cuts than the Fed has said. So the markets want more easing. So if there is a shift where that more easing is diluted in its probability, well, the markets aren't going to be happy. And it's not surprising then that before we see the release of minutes from July's Fed meeting, the first inflection point in this Fed story this week, the markets are going to feel like maybe if they're one-sided, they need to even out the deck a bit. Now, we know why the markets are so jumpy in the face of all of this. Again, we can see it in the price action. When the Fed news flow is relevant, then we get some kind of action, and outside of that, nothing. So clearly the markets are paying attention to one kind of thing here, but it is important to consider why. Now, we know, again, why the markets cheered that CPI report. It was refreshingly normal looking. Most inflation still in services, goods inflation higher in its contribution, but not running away seemingly. And the headline number was expected at 2.8 and came in at 2.7. And even though the core was expected at 3 and came in at 3.1, the market seemed to really latch on to this bit to say, well, that's not so bad. Maybe we really will get our rate cuts. Incidentally, that's despite goods inflation going up, services inflation cooling. but that we didn't find follow through later seems to be linked to what we saw in producer prices, which jumped and did so because producers' margins expanded by the most, incidentally, in almost 3 years. And that suggests that tariff costs are now being passed down to consumers. And that's the kind of thing that might keep the Fed from going as hard on rate cuts as the markets want. That, of course, still leaves the question, why do the markets want those rate cuts so badly? Well, we know that there is an emerging threat to growth. In fact, even Chair Powell himself acknowledged as much after the July meeting at the press conference. We likewise know that the tenor of this conversation seemed to deteriorate a bit. This is the statement from that July meeting, and we can see that policymakers pointedly took out the bit that says economic uncertainty has diminished. Moreover, we know that there was a break from consensus. For the first time since 1993, 2 Fed governors preferred the more dovish outcome and voted for a cut. And so, not surprisingly, the question for markets here is, does this suggest that there is a dovish consensus from July that's taking hold here? If the Fed was already getting closer to cutting rates, and if we already have dissents on the committee saying the economy has deteriorated enough that we need to make this move, what has the evidence shown us since? Well, the evidence has continued to go in this direction, even as we get these signs of inflationary pass through and consumers starting to take on these concerns. We just saw last week that consumer sentiment weakened as inflation expectations rose. And this really speaks to what the markets want and why they want it. As we've said many times before, global growth is primarily powered by 3 economies: the US, the Eurozone, and China, that account for 58% of global GDP. The remaining 42% are mainly vendors to these 3 and depend on them for demand. So it's really on these 3 economies to make or break global growth. And so if the markets were to consider that there is some sort of growth concern, well, then, not surprisingly, they'd want rate cuts, and sure enough, that's exactly what we have. Of the 3 major engines, looking at the latest PMI data, we see the Eurozone and China are at standstill. As ever, these are centered around 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. That the Eurozone and China numbers here are hugging 50 tells you that those economies are barely moving. The US economy seems to be carrying all the weight. We saw that last year. There was a bit of a spook here, obviously, at the start of the year with the tariffs, but it seems like we're back to relatively strong U.S. growth, looking at least the S&P global version of this data, which is what we're looking at here. But if we consider where sort of timelier data has moved since then we can look at the ISM version of the very same data, as we've done here before, also a PMI report, and we can see that on this measure, we're at standstill on U.S. growth, suggesting that already there is the risk that if this is the only leg of the stool that's keeping things standing, it is already fading. Moreover, of course, we saw in the second quarter GDP numbers that consumption, which is 68% of overall GDP, was the weakest for the first 6 months of this year in 5 years, going back to the 6 months that were the COVID recession in 2020. We also see the apparent absence of demand, because whereas in the first quarter imports surged, which would mean that they're a larger negative pull on GDP. Imports are typically subtracted from GDP. And inventories surged as those imports went into stock piles to try to get as many goods at the pre-tariff rates as possible and keep consumers as insulated from those tariff costs for as long as possible. In the second quarter, imports collapse. That's them being a positive contribution now. And inventories go down. So those inventories are being spent and they're not being refilled. In other words, demand is expected to be weak by the people that expect to sell into that demand. And that's despite the fact that in the second quarter, you still have pauses on tariffs in place. So you could still be front-running tariffs at that point and filling up inventories with relatively cheaper goods. But that isn't happening. So we already see that the view on demand is soggy, and we already see that it's soggy in the most important part, consumption. We likewise see that as this pass-through of inflation starts to happen, as we just saw, consumer sentiment is souring, suggesting that going into the third quarter, the consumption picture isn't going to be that much better. And that, of course, brings us back right here. If this is stuck, and this is stuck, and this is the only thing that's working, except it seems to be starting to misfire, well, then it isn't just the US that needs these rate cuts. It's the world economy as a whole. So it isn't surprising whatsoever that the markets rabidly want them. So even the slightest bit here that would suggest that those rate cuts aren't coming ends up being an action-packed headline, which of course isn't helped whatsoever by the fact that, this is a chart from Bank of America, by at least a range of valuation measures, the market is very, very frothy. This particular valuation metric, and you can pick your poison, there's a sea of these, but this particular one is especially eye-catching, coming at you from Bank of America research here just over the past 24 hours, showing that on a price-to-book value ratio, we're basically in dot-com bubble territory. And so you start going down the list and start to say, okay, well, if the story was AI exceptionalism, we've done that. If the story was wars in the Middle East and the Russian-Ukraine theater, listless crude oil has told you that the markets aren't really paying attention to those things as macro relevant. And so you start to ask, well, what is holding up sentiment then? It isn't the breakout of peace in either one of those theaters, and it isn't seemingly endless room to run on tech evaluations. So what is it that the markets have to hang their hat on? And the prospect of rate cuts in the face of an economic threat starts to be one of the few things, if not the only thing, left in the quiver. If you start to take that away, if the minutes from this July FOMC meeting suggest that this descent is not the makings of a Fed that is going to jettison its caution and that is going to follow through on this much more dovish view for next year than it has so far owned up to, well, then sentiment doesn't have very much of a leg to stand on. And that's how you end up with days like this and days like that. And that is macro money for today. As ever, we are here right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise on with Chris for Futures Power Hour, Mondays and Fridays, on with Chris and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's your sleeper pick for the second half of 2025? Is there anything that you're particularly high on nobody's talking about?
My sleeper pick. I think Ethereum is an interesting play. It's still a lot. It's near the lower end of where it's been trading at 2,500-ish. If you are bullish on the crypto space, which I am, and I think the blockchain technology is a huge part of that, I think that Ethereum has a little bit of a catch-up trade, and you can now trade it via the ETFs. ETH-A is the Ethereum ETF, which is now accessible for option traders. So I think that's an interesting play. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
What's a macro risk right now that people aren't talking about enough?
Complacency is one. There's a lot of bullishness around. The street is very complacent. There's very little cash on the sidelines. And I think there's just, in general, the regulatory environment is too good. So people become overconfident.
I still think the geopolitical thing is very, very interesting. Frankly, I've had a tough time kind of parsing out the headlines in the news lately. I guess I would say like this ongoing discussion of just different conflicts that are going on and how it's pushing and pulling different asset classes. That's a super diplomatic answer. I'm not unaware of that. I think it's really important to kind of be mindful of your positions when there is so much talk and uncertainty going on and making sure that you're always controlling your size.
I mean, the dollar's depreciated over 10% against the euro and some other major currencies. I don't see how that doesn't start to play into some companies' earnings and their fiscal reports.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday, another risk of the week. We got a couple positions that we put on here, which we're going to share here in a little bit. But before we get into that, I hope everybody's had a great start to the week. Gus, how we doing? How's everybody doing?
Doing well, feeling good. First live show since we got to meet so many wonderful people here in person at our event in Chicago. It was great to meet all of you. Emmett, I was just congratulating you off air on your #1 ranking in our chat here. You to GOAT. But which led us into a conversation about Emmitt Smith. Errol was telling me that he taught Emmitt Smith, the football player, how to trade options.
Yeah, very, very random fun fact. Emmitt Smith had messaged on social media before, and he was just like, "Hey, bro, your link's not working." So we got him the link, reconnected, hopped on a Zoom, Just showed him the ropes of options, and which is actually pretty cool to think about. Guess what options platform I was using at the time? Tasty Trade. So, that was the first time
Emmett Smith confirmed Tasty Trade.
Confirmed Tasty Trade. I know, on the headlines. No, but I remember just thinking like, hey, Emmett Smith, trying to play it cool, trying to not be like, no, this is.
Oh, what's up, playa?
What's up, bro? I was waiting for you to reach out. No, but I was just like, hey, do you mind real quick if I run downstairs so my dad could say hi? So I remember we ran down there real quick so he could say hi. Used to watch him on Dancing with the Stars, and that was like more of the, Emmett Smith, he was the Hall of Famer running back. But I'm not a Cowboys fan, so I don't really care anymore. No, I'm just kidding. I'm not a Cowboys fan, but a little bit of a sidebar we had.
Yeah, so. Yeah, it's a great little anecdote. Emmett, I'd love to show you the guns, but I like this shirt. You know what I mean? So I can't be breaking those out.
I think it's concealed carry out here. So concealed carry.
He does spell his name differently. That's true. I think Emmett Smith has double T's going on.
Is it?
Yeah.
It is.
Yeah. Pretty sure.
Anything else over the weekend? It was a great time last Friday, seeing a lot of familiar faces on social media, doing those kind of things. Anything else before we get into the segment for today?
Yeah, no, nothing else. Excited to jump into this risk of the week, and then I got one other topic I'd like to talk about. I guess one other stock I'd like to talk about. I'm thinking about taking a position on tomorrow. I wasn't feeling crazy enough to go double risk of the week.
Is this underlying moving after hours right now? Or is it something you just want to circle back around to?
No, it shouldn't be moving after hours.
You already got me. I'm curious what it is.
Yeah. So, and honestly, I'm kind of blanking right now. I'm gonna trust that this will come back to me throughout the course of this thing. I'll figure it out.
Cool.
Anyway, risk of the week, as you all know, or if you're new here, Errol and I put on a short-term, high-risk trade every week and recap them here, or I guess talk about them here, and then recap them after they are closed. So let's dive straight in. You're leading us off.
So, I know, a little controversial, but this risk of the week, I wanted to go with UNH. We went with UNH one of the other weeks. We also spoke about UNH last Friday after Warren Buffett decided to take a position, or Berkshire Hathaway decided to take a position in UNH. But because of the short-term hype, because of the short-term momentum and rally, I kind of want to fade that sentiment a little bit, at least in the short term. So today I chose UNH. I ended up selling a September 19th out of the money call spread, shorting the 310 calls, buying the 315. So it's only been a few days since after the announcement. And I mean, just looking at UNH stock, if we have a little bit of time here, we can look at it. But just looking at the underlying, it hasn't done too much post initial hype run. So maybe we digest a little bit from here. But price action, recently strong price action that we've seen, big catalyst, trade rationale is really just fading the hype. So we'll see how UNH plays out. Got a lot of time on it, and it's a little bit more speculative. I received about $1.80 in credit, so we have a little bit over $3 wide of risk on that iron condor, but we'll let it play out. Got a little bit of time on it. Your thoughts initially off the bat for UNH?
Yeah, I think it's an interesting one. It's certainly contrarian, which is what we try to do here.
No doubt.
And yeah, I mean, I don't know. I think that there may be some merit to it because, on one hand, I've been saying this whole time, and the reason that I am long UNH is because the company fundamentals are still largely fine outside of some outlying regulatory uncertainty here. But at the same time, like, this whole run-up has just come because of the Buffett buy,
right.
And it also is not really substantiated by anything that has to do with the fundamentals of the company.
Mm-hmm.
And ultimately, the efficient market decides what the company is worth. And so I could foresee a situation where this does take a little bit of a what's the opposite of a dead cat bounce? An alive cat dive.
Continuation.
A live cat dump.
Live cat dive.
Tumble.
We can call those the dolphin dives. We don't use that. We don't use that term in trading.
I don't think we do.
The dolphin dive.
I don't think we do.
Diving.
Sure. Yeah. Okay. Animal move strategy here. But yeah, I think it's certainly possible that this breathes for a little bit before we're taking some more momentum on. So we'll see. Yeah. I also I just looked into it earlier today. I was a little bit misled, or I don't know. I had convinced myself that reality was not the situation, but their entry point is actually very close to 300 on UNH. Mm-hmm. So it's not like they grabbed it way down at the bottom in like the 240s or 250s and are just now disclosing it.
Right.
So Warren Buffett and Berkshire Hathaway, really just Berkshire Hathaway, Warren Buffett is hardly there anymore, need this thing to move up a considerable amount further, which makes me feel good as far as my long leaps go. But yeah, I mean, I think there's some merit to this.
Yeah, I like it.
We'll see. It's risky, but that's the whole
risk of the week, baby. Let's get it.
Point.
Yes, sir.
So yeah, good one.
Cool. What do we got for risk of the week, Gus?
I am on Vistra Corp. VST is the ticker. I do not know what this company is. I do not know what this company does, but Nancy Pelosi bought it in January, and I raced to follow her, and holy cow, it has 2x this year. I wish my calls were naked and not defined risk, but it is what it is. But I'm getting even further bullish here again. This is a really rare technical analysis play out of me. We'll hop over and look at the charts here in just a second. But I've been long, like I said, since February. I've been watching it closely. It's something I check in on multiple times a week. And I've come to notice this trend that VST likes to operate under, where it will explode upward for a month, it'll breathe for like 10 to 14 days, and then it will make higher highs again. And that's been the pattern throughout this entire year. It happened in May, June, and July. April kind of non-withstanding because of the Liberation Day stuff. But I mean, if you want to count the Liberation Day sell-off and then recovery as the April dip, you could do that as well. And August is showing us the same trend. It made all-time highs on August 4th. It has bled downward ever since then to slightly below $200 now. It closed 193 today. And there's some consolidation happening at the bottom of this range. I've seen this pattern play out a bunch of times before with this specific company, which I think technical analysis has a bit more merit when you're talking about a pattern within a specific company and not just, oh, this chart is a cup and handle right now. And so, yeah, I'm just hoping that trend will continue. We'll get a nice little bounce. I think 200 before the end of the week is very reasonable. This thing moves quick when it does move, and potentially, 220, which would be another all-time high sometime in the next 45 days. But I, in particular, am on a bullish put spread for August 29th cycle, which is 10 DTE, I guess 9 DTE now that the market is closed today. I'm long the 192.50 and short the 197.50. I collected about $200 in that one, so we'll see what happens.
I like it. We'll have to take a look at this chart here in a little bit, but I mean, you're feeling bullish. So we got a bullish put spread, 192, 195. Do you remember how much you paid for that one?
Yeah, I think low twos.
Oh, low twos, right. That's what you're just saying. Yeah. That's nice.
So, yeah, not too bad at all. It's at 193 and some change right now, so just need to move back up to over 197.50. I don't even need the 200, but I think that this will be mighty profitable by the end of this week, dare I say.
No, I like VST. I don't think VST is one I traded too much. I know right now there's a lower IV rank, probably why you wanted to get long those spreads rather than maybe sell them. Lower IB rank.
Yeah, and there's some put side premium as well is part of the factor on that. So yeah, it's just that's what I got.
No, I like it. We can dive into the platform here. We can check out some of these underlyings. Check out UNH, VST. Do you remember that other underlying you had in your head? Yes. I'm curious. I want to.
Yes, it has come back to me. It's Wynn is what I want to talk about. Okay. Yeah, Wynn casinos, resorts, all that good stuff. Wonderful production team. Thank you very much. And there we go. Okay, let me hop over here real quick.
I do look like I got an professional.
I'm signing into my platform right now.
It's okay. In the meantime, we have some FOMC Fed minutes this week. I think we got Jackson Hole on Friday too. So we've already got a lot of volatility before that. So maybe we get even more. But Monday and Tuesday didn't disappoint in terms of volatility.
Yeah, I'm interested to hear. I'm interested to see what happens with the Fed at large coming up. I know that there's conjecture about there may be justification for a 50 BPS cut in September. Poly market, which is kind of what I look to, is the efficient market, is not giving that very much of a puncher's chance. And I'll tell you what, it's like the closest I've ever been to creating a poly market account is right now, because I want that 20 to 1 on 50 BPS decrease.
Right. No, 100%. I mean, if anything, it's like poly market is a pretty efficient market. If anything, I feel like it would reflect sentiment pretty well.
Oh yeah,
it's
really cool. It gives us it gives us the ability to have efficient markets on things that you otherwise couldn't, like the presidential election or whatever it may be.
Because we always have that hunch for sentiment, but one thing that's going to forever change, I think, elections is being able to look at poly market during live elections.
Yeah, well, and it not undermines, but it works in place of polling.
Right, absolutely.
Because you're letting the efficient market decide it instead of trying to create a statistically significant sample size and figure out how you're going to remove biases from political polling, which is always the most challenging part. And so, yeah, it just gives you a good top-down look at what's going on.
Yeah.
VST here, let me expand out a little bit. So you can see here, these are one-day candles, but this is the Liberation Day sell-off into April, and then coming out of April, we have small dip at the end of April, recovery. In May, we get small dip, recovery. In June, we get small dip, recovery. And then here is July's small dip, recovery to all-time highs. And then here's where we are now in August. We've come back down off that dip. This thing, and this also, this is not some revolutionary concept. companies that are having good years, good seasons, whatever it may be, do this. This is how stocks move. I understand I'm not really blowing the roof off anything here. But yeah, just trying to capitalize on these recurring breathing periods. Anytime you can find one stock that likes to operate within its own channel, that can be a profitable angle. That's where I'm at on that.
IVR was in the 90s at the lows, early May. IVR was in the 90s and has just been decreasing since. I mean, volatility's been getting blown out of the water.
Yeah. Oh, I just opened Berkshire Hathaway. Like, that's what you have. That's not what you have. UNH. Yeah. And then obviously the situation with UNH, we've recapped it a number of times before. Things went poorly for that company and over the last 365 days. But yeah, then we get the Buffett bump here, and then perhaps we will get the dolphin dive.
Yeah, we might. That caught me off guard. We might end up getting the dolphin
dive. We got to coin this, man. Everybody's got things. Liz and Jenny have the Jade Lizard, and Nick's got the crab trade.
All right, if we like the dolphin dive, we'll test it for the next week or two. If it sticks, it sticks. If it doesn't, then we'll find a placeholder.
We'll feel it out.
But I mean, no, I like it. I know we have a really big gap. And there's always a lot of opinions on gaps, and if gaps should be filled, it's not really the reasons why I really want to.
It must be this gap is getting filled. Damn it!
Sitting down there at the bottom, like I'm waiting for this gap to get filled. No, but just a little fade on Warren Buffett in the short term, at least, right? We're not trading same time windows.
Yeah, it's true. All right, this leads me into Wynn Resorts.
Right
now, Wynn, they just had a solid earnings call, I believe, last week. Or maybe earnings coming up this week. Anyway, point is, I'm thinking about getting short on Wynn here. And my logic for this is that I'm a big fan of gambling stocks.
Right.
Gambling is on the up and up. And so your DraftKings, your Flutters, your Caesars, those I'm fine with because it's widely accessible. Those people are in all markets where sports betting is legal. It's a nationwide thing, and it's growing. My issue with Wynn is that they have no online gambling presence at all whatsoever. And to my knowledge, they only have resorts in Vegas. I guess they have resorts around the country, but this is not a nationwide thing. Nobody has Wynn in their pocket. Nobody is pulling out their Wynn app to get some action down on the game tonight. And it's at all-time highs, and it's tested these levels a number of times before. Let me expand even a little further here. It's tested these levels a number of times before and has ripped back down off of them. The stock is just incredibly volatile in general. And I think that unless something gives, and you guys can let me know your opinions on this in chat, but I think Las Vegas is like dying.
So, I mean, right off the bat though, Wynn hasn't transitioned towards, you said online gambling yet, or like an application to be able to speculate?
Just an app where you could gamble. Yeah, I mean, everybody's got their sports betting app. Caesars has an app. I have Caesars on my phone.
Yeah.
DraftKings and FanDuel at Flutter are obviously like just app based. But this one, Wynn, to my knowledge, does not have any way you can gamble just from your phone in any state. And I think this is just pure resort hotels is kind of what we're buying into here, and the gambling revenue that they generate from those. But I have kind of a broader thesis, and this isn't a uncommon take or a hot take at all. But yeah, Vegas is just it's getting too crazy. Their gambling revenues are falling. They see slot revenue falling. It's because everything has gotten so ridiculously expensive. Vegas used to be a nice, a fun place that college kids could go and stay for pretty cheap, and the comps were very competitive everywhere. Everybody was giving you constant free stuff. And Wynn, they're upscale, which is the new tourism in Vegas, is upscale people with money to spend. But I think that it's just, the opposite, I suppose. Lowering tide lowers all boats.
Yeah.
And I think that as Vegas travel continues to be hurt more and more until they figure out that they have to actually lean into what the player wants to increase travel again, that the prospects could be bad for Wynn. So I feel like testing all-time highs here, actually at all-time, well, no, not quite at all-time highs, but testing all-time highs here, this feels like a good 180-day short sort of situation. I feel like we could see a dip back. I mean, it's at 112 right now, and at the bottom bottom of this, well, I guess this is Liberation Day. Let me pick a better dip. At the bottom of this dip in January, it's at $80. So like you're telling me we're up almost 50% from January of this year. I mean,
Make it make sense.
Yeah, I'm not seeing.
No, I hear you 100%, especially because it's related to casinos or resorts, those type of things. Like if people's disposable income goes down too, and inflation's
That's true
high,
as well. As inflation increases,
Right.
people have less disposable income. They're going to spend on travel and do those things.
Absolutely. And it's like if you're going to pay for food, gas, whatever it might be, you might cut out Las Vegas first.
Yeah.
So if things are taking a turn, not that they ever do in this country, if they are, would places like those get hit first? And would that even, piggyback a little bit off of kind of what you were saying there a minute ago?
Well, yeah, I mean, gambling is like as far as you can get into consumer discretionary spending. Like
Right. And the polls, the strip club.
Yeah.
Right.
Yeah, exactly. And it's all just, and in Vegas, slowly things have become more and more expensive. I just recently saw, actually about the Wynn itself, an article that they're selling bottles of Dasani water for $13 a bottle.
Yeah.
What the hell are we talking
Yeah,
about here?
right.
No, that should be ridiculous to anybody.
Right. That's absolutely price gouging.
Yeah. Oh, yeah. And it's happening across Vegas. I remember seeing a story last year from last football season about a guy in Allegiant Stadium ordered 2 pizzas in his suite, and it was $600.
Yeah.
And it's like, what are we talking about?
No, I
And
believe
he
it.
was a very wealthy guy that was
Yeah.
tweeting to complain about it because it's still just obscene. It doesn't matter how much money you have. And that sentiment is perpetuating all across Las Vegas. And then in addition to everything growing more expensive, the rules keep getting worse and worse for the player. I was just in Vegas last summer, and there is, outside of Treasure Island is the only one, there is not one casino on the Strip that is offering 3-2 blackjack. It's all 6-5 blackjack, which means that if you get a blackjack, your payout is 6-5 instead of 3-2. And over the course of a long session, if you sit at the table for an hour even and play 50 hands, that really kills the player. I mean, that takes your house edge. That takes the house edge up a lot. And people go to Vegas to gamble. And if Vegas is trying to make this pivot and make itself just a vacation destination with the Sphere and with these sports teams that they're getting and all the concerts and all the shows, I understand all that's lovely, then they can try to go for that. But I just don't see who's going to choose to, especially incredibly wealthy people. I don't see who's choosing to go to Vegas
To see those other...
Yeah, versus, L.A. or the freaking Maldives.
Right. So Vegas wasn't something that I found a huge interest to, just because I never had people around me that wanted to go or this or that. But the first time I was in Vegas, I was 15, 16 years old. I was over there for a basketball tournament. So I kind of got to go down the strip, kind of get the vibe, the excitement, the energy. I haven't been there since, but I could imagine, and from what I've seen and heard on social media, Vegas isn't like the Vegas, and just the brand of Vegas and Las Vegas isn't the same brand as it was, 10, 15, 20 years ago, too.
Yeah.
Is the behaviors of speculators also just changing? Like maybe they're going to draft this, that, maybe they're going to DraftKings, FanDuel, that on top of the discussion we just had about disposable income going down, the extra speculating dollars might be going elsewhere too.
Yeah, and that's the thing too. I mean, especially in the case of sports betting, like Vegas IRL sports betting revenues are
Really?
the lowest that they've ever been. Yes. And
Give us a quick synopsis of IRL sports betting, just so we get an idea of what that looks like.
Sure, yeah, like walking into a sports book in a casino, which is the area where you place bets on sports, and walking up to a counter and handing someone physical cash and saying, I want the Bengals today. And they give you a paper ticket and you sit in the sports book. Yeah. And I mean, in the good old days, you'd have 2-3 free drinks while you watch the game if you're a big player. Not even that big of a player. You throw down $500. They're going to treat you like a king in the 80s and 90s and stuff. And then you go collect. If you win, you go collect. They pay you out in cash. And that's how sports betting worked. I mean, really, like until very recently, until the wide scale legalization, was you had to go to Vegas and do that. And now that sports betting apps are so widely legal domestically, there is a great decrease in people feeling the need to travel to Vegas and bet on sports if that's their market. And then beyond that, just on the day to day, even people who live there, they've switched now to where in Nevada, because they're still trying to protect themselves, you can't. You have to actually go to casinos in person and deposit money, like cash money, into a account, and then you can bet from an app.
Right.
So there is still money coming into the sports books, but people actually going in there is different. And I want to say too, I love Vegas. I don't need to condemn Vegas at all. I love it. I try to get out there once a year. I find it to be very enjoyable. As Laid Back Trader said, casinos, it's not the same as online gambling. It's not the same at all. There's vibes, there's ambiance. You get to make friends with the dealer. You get free drinks coming around. It's still a fun time. But I just think that the things that I love the most are starting to fade. Vegas is fun the first weekend of the NCAA tournament. I'll give you one there, Mike. Vegas, it used to be fun the first weekend of the NCAA tournament. Last year, in Circa Sportsbook, if you wanted to go to the opening weekend of March Madness, it was $300 just to sit in the sportsbook. $300 for a ticket to sit in the sportsbook for the AM session, $500 for the PM session, or you could save $50 and pay $750 and have your seat reserved for the whole day. And that's just to be able to bet. That is just to be able to give them your money at 11 to 10, which is the craziest thing. Yeah, so Vegas, I think that things need to shift. I think that people need to figure out that people come to Vegas to gamble. That is what you're known for, and you shouldn't try to abandon that brand. And you should be the best place in the entire world for the player, and travel would resume. But it's just not that way at all. So that all leads me back to my thesis about Wynn. I think this thing has to be overvalued right now. I wouldn't be surprised if one of their next 2 earnings calls just goes poorly and knocks them down a peg. But we've seen this thing take giant swings. I mean, I was just talking about that dip in January, but we touched 107. We go all the way back down, sub 80, 76, 76, and then now we're back up to 112. So if I manage to catch a move like that again, it wouldn't be any problem at all.
I mean, just by the looks of it, this is a trader's stock. I mean, if you just look, what are we on, the 1 year? We're on the 1 year. This is the last 365 days, and we traded at the top end of this range and at the bottom end of this range within the last 12 months. It's a lot of ground to make up in such a short period of time. So it's a volatile one, Gus. I like it.
Yeah. So we'll see. But yeah, it's a mover. It likes to go. And then let's see what other positions we got open. Anything expiring soon? This is the VST position I just alluded to today, as well as my year-long long position, which again, wish this was a naked call instead of being a defined risk long call spread. And then this Starbucks is also giving me some strife. Needed over 95 by September 19th. And it just keeps trying. I swear, once a week, this thing is at 94, and I'm like, I'm good. And then it goes right back down. It frustrates me to no end. I guess that sentiment is backed up in the chart. Oh, we're over 95. No, we're not. Oh, we're over 95. No, we're not. Oh, no. And it keeps doing this again and again. And then, this was the most recent one. This is last Wednesday. We barely touched 95, dip back under. It's annoying me. But that's kind of it. Everything else is right where I want it. I know that these P&L days may not look like things are right where I want them, but I got all these positions right where I want them.
Look how much time is on these contracts. You went out in time. What's going on, Big Deal? Just a wee bit late, brother. I hope you're doing well. Good to see you.
That was like 5 minutes ago. He's catching the show.
Yeah, catching the show. Anybody that did tune in a little later, the risk of the week, I'm going to go with UNH this week and fade a little bit of the hype. Gus went with VST. You can see that position at the top of the portfolio. Working out pretty well so far already. And then we're going to be checking out Wynn tomorrow. Gus had brought up Wynn, so we'll check out how that plays out. It has a lot to do with Vegas and the money that they're rolling in over there.
Maybe we'll do the full.
We'll catch you in Vegas on Thursday.
We'll do the full.
Live.
Oh, just live in Vegas?
Live in Vegas. We'll catch
Coming to you live from Circa Sportsbook. It's the boys.
I'm mad. That'd be hilarious. It's a Wynn sponsorship like that.
It's going to be streamed on TikTok from one of us holding a phone in our hand.
Literally. Wynn's trying to change our opinion right now.
No, but maybe Thursday we could do a little Vegas dissertation, throw together some slides on that. I'm sure that there's all kinds of interesting 100%. Trends we could look into there. But
100%. Anything else to add before we start to wrap up today?
Anything you want me to look at here before we pull this down?
No, nothing too much. I mean, we'll see what we get for the rest of the week. It's been a really volatile, at least today, at least.
Hey, Rancher in chat said, join the gang, UNH shorter. Let's go.
Join the gang, UNH shorter. What's going on, Rancher? We'll definitely put that out there whenever we close the position then. Let me know how you end up managing it.
And no worries, Big Deal. We're just hacking on you. We love you, man.
Oh, yeah. All love over here, Big Deal. All love. But no, that'll wrap it up for today's segment. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next week. We'll be back on Thursday, 4:30 o'clock Central Time. We'll see you guys next time. Peace.
Good morning, everybody. Welcome to Trade Live with IG on the 19th of August. How are we doing out there?
It is wonderful, isn't it? The weather still holding up there, not as hot, trader friends.